Ladies and gentlemen, the show is about to begin. Kindly be seated. حضورنا الكريم، برنامجنا سيبدأ خلال دقائق. الرجاء التفضل بالجلوس. السلام الملكي. Ladies and gentlemen, please rise for the national anthem.
It started in 2011, the birth of a new idea in Las Vegas that ignited the global conversation on money, spreading rapidly to Europe as Amsterdam became the hub for fintech innovation, and onwards to an Asian market that embraced movement. A global stage where visionaries, founders, regulators, and leaders began shaping the future of finance, all leading to this moment in Riyadh, the epicenter of transformation and finance's future hub. New opportunities are being unlocked in Saudi Arabia, building tomorrow's economy today. The next big market is at Money 2020 Middle East, where capital meets innovation and deals are done as the world watches. Here, AI-driven decisions meet razor-sharp risk management. Smarter contracts, swifter deals, and tighter security raise the bar, while global power players move to where the smart money is. Beyond the demos and deal flow, fintech is sparking change. This is where it starts. Money 2020 Middle East, where money does business.
أصحاب السمو، أصحاب المعالي، أصحاب السعادة وحضورنا الكريم من سيدات وسادة. Your Highnesses, Your Excellencies, ladies and gentlemen, a very good afternoon and a very, very warm welcome to everyone. My name is Taghreed Al-Houesh and it's an honor for me to be your MC to host the opening of Money 2020 Middle East here in Riyadh, where bold ideas meet big business. Money 2020 Middle East is the getaway to one of the world's fastest moving financial markets. It's where global players meet regional decision makers to build what's next. Before we start today's exciting agenda, ladies and gentlemen, I would like to take a moment to express our deepest gratitude to all who have made this event possible. A special thank you goes to our partners, the Financial Sector Development Program, the Saudi Central Bank, the Capital Market Authority, the Insurance Authority, and the co-organizers, Fintech Saudi and Tahaluf. Please, let's give them a very big round of applause. Let's also acknowledge our sponsors and supporters whose support and commitment have ensured the success of this event. And of course, a heartfelt thank you to all of you, our esteemed guests, for your presence and of course, your active participation. Ladies and gentlemen, it's now my great pleasure to officially start Money 2020 Middle East. And we're honored to begin with a welcome address from His Excellency Mohammed Al-Jad'an, the Minister of Finance and Chairman of the Financial Sector Development Program Committee of the Kingdom of Saudi Arabia. Please join me in giving him a very, very warm welcome.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I will speak in Arabic, so those who need to put their headsets, please put your headsets. Bismillah ar-Rahman ar-Rahim. والصلاة والسلام على أشرف الأنبياء والمرسلين نبينا محمد عليه الصلاة والسلام. أصحاب المعالي والسعادة، السيدات والسادة، السلام عليكم ورحمة الله وبركاته. يسعدني أن أرحب بكم في المملكة العربية السعودية وفي مؤتمر ماني 2020 الشرق الأوسط الذي يجمع قادة القطاع المالي وصناع السياسات والمستثمرين الذين يديرون ما يزيد عن 7 تريليون دولار، وذلك لبحث سبل صياغة مستقبل مالي أكثر ازدهاراً وأمناً وشمولية. إن استضافة هذا المؤتمر في الرياض تعد انعكاساً لاهتمام المملكة العربية السعودية الكبير والتزامها العميق بدعم الابتكار وريادة الأعمال، وحرصها على المساهمة في صياغة مستقبل القطاع المالي كونها أحد المراكز المالية العالمية. نلتقي اليوم في لحظة فارقة للاقتصاد العالمي، فالنمو العالمي لا يزال أقل من معدلاته التاريخية، ومستويات أسعار الفائدة أعادت بالفعل تعريف تكلفة رأس المال، والتوترات الجيوسياسية والتجارية تخلق حالة من عدم اليقين حادة جدا. إن المملكة العربية السعودية لا تتأثر بهذه التغيرات فحسب، بل تساهم بشكل رئيسي في صياغة وتقديم الحلول، إذ نرى فرصا متسارعة وغير مسبوقة. فالثورة الرقمية تعيد تشكيل التمويل والتجارة، كما يتيح الذكاء الصناعي مستويات جديدة من الكفاءة وإدارة المخاطر، والقطاعات الواعدة تفتح مجالاً لاستثمارات عملاقة. وكما تعلمون، اختارت المملكة من خلال رؤية السعودية 2030 مساراً طموحاً لتنويع الاقتصاد وتعزيز مرونته وبناء شراكات استراتيجية مع القطاع الخاص. ونعلم أن مستقبل التمويل لن يبنى إلا على الابتكار والتقنية والشراكة بين القطاعين العام والخاص. الإخوة والأخوات، لقد استثمرنا بشكل كبير في تطوير قطاع مالي ديناميكي ومستدام يقوده برنامج تطوير القطاع المالي ويعززه التعاون الوثيق بين البنك المركزي السعودي وهيئة السوق المالية وهيئة التأمين، ونتيجة لذلك أصبح سوق المال السعودي من بين الأسرع نمواً عالمياً، متجاوزاً قيمة 2.4 تريليون ريال بنهاية الربع الثاني من هذا العام. وقفزت حصة المدفوعات الإلكترونية من 18% في عام 2016 إلى 79% في نهاية العام الماضي، مما جعل المملكة إحدى الدول الرائدة عالمياً في التحول نحو اقتصاد غير نقدي. كما تضاعف عدد شركات التقنية المالية الفاعلة ليصل إلى 280 شركة بحلول منتصف العام الحالي. وسجل قطاع التأمين نمواً بنسبة 16.3% في العام 24 مع إطلاق منصات تجريبية لاختبار حلول مبتكرة تدفع بالتطور المستقبلي. كما شهدت الفترة الماضية خطوات استراتيجية لتعميق السوق المالية، كان آخرها إطلاق أول إصدارات برنامج الأوراق المالية المدعومة بالتمويلات السكنية التوريق محلياً، إضافة إلى إعلان جي بي مورغان عن وضع الصكوك السيادية المقومة بالريال السعودي تحت المراقبة مع نظرة إيجابية، والذي يعد الخطوة التمهيدية إلى إدراجها مستقبلاً في مؤشر جي بي مورغان للسندات الحكومية للأسواق الناشئة، وهو أحد أهم المؤشرات المرجعية العالمية في سوق الدين، حيث سيساهم في تعميق السوق وتوسيع قنوات التمويل. هذه ليست مجرد مؤشرات، بل هي شواهد على تحول هيكلي يرسخ مكانة المملكة كوجهة جاذبة للاستثمارات ومختبراً للابتكارات المالية. الإخوة والأخوات، ندرك الأثر الكبير للذكاء الاصطناعي والبيانات الضخمة، لذلك نعمل على دمج هذه الأدوات في قلب النظام المالي لضمان الكفاءة وتعزيز الشمولية وتوسيع آفاق التمويل المبتكر. كما نؤمن أن تطوير الشباب هو الاستثمار الأهم، إذ أن أكثر من 70% من السعوديين تحت سن 35، وهم الطاقة المحركة لرؤية السعودية 2030. نؤمن بها وندعمها، ومصدر الإبداع الذي يغير مشهد المال والأعمال. ختاماً، إن مؤتمرنا هذا ليس مجرد نقاش عن أدوات وتقنيات جديدة، بل هو دعوة لصياغة رؤية مشتركة لمستقبل المال، وأدعوكم جميعاً لأن تكونوا شركاء في هذه المرحلة. شكراً جزيلاً.
شكراً لكم معاليكم على هذه الكلمة الملهمة والتي حملت الكثير من الأرقام والمؤشرات المهمة والتي تعكس ازدهار وتطور القطاع المالي في المملكة العربية السعودية. Thank you, Your Excellency. Now, ladies and gentlemen, we're honored to invite His Excellency Ayman al-Sayari, the Governor of the Saudi Central Bank. Please join me in welcoming him to the stage.
بسم الله الرحمن الرحيم، والصلاة والسلام على أشرف الأنبياء والمرسلين نبينا محمد وعلى آله وصحبه أجمعين. أصحاب السمو والمعالي، الحضور الكرام، السلام عليكم ورحمة الله وبركاته. اسمحوا لي أن أقوم بالحديث في نقاطي باللغة الإنجليزية، فسأبدأ بهذه اللغة. First of all, I extend my warm greetings to distinguished guests, industry leaders, and global delegates. That an event as internationally renowned as Money 2020 is being held here in Riyadh is a testament to Saudi Arabia's rising prominence as a global hub for financial innovation. Under the auspice of Vision 2030 and guided by the fintech strategy, Saudi Arabia's transformation into a leading fintech hub is well underway. In my remarks today, I would like to share with you highlights of this ongoing transformation and offer my perspectives on notable drivers of this encouraging momentum. The extraordinary growth of the sector has been in keeping with our national ambitions and commitment to global excellence. The sector has experienced a remarkable threefold expansion, growing from 82 fintech companies by the end of 2022 to around 281 companies by the end of last month. This reflects the Kingdom's success in enabling robust growth. It has also attracted market-leading cumulative investments of around 9 billion riyals, cementing its status as one of the most attractive sectors for investors. A highlight of this progress has been the payments ecosystem in Saudi Arabia, now firmly established as one of the most digitally advanced in the world. Electronic payments, for example, has accounted for 79% of total retail payments in 2024, while the total number of electronic payments has grew to 12.6 billion in 2024, up from 10.8 billion in 2023. This growth is not just a reflection of our ambition, but also of the ability to innovate and deliver solutions that solve industry challenges. The successes that the financial sector has achieved to date have leveraged Saudi Arabia's diverse and distinctive competitive advantages. The Kingdom's geographical location positions us as a gateway to a diverse regional market connecting the Middle East, Africa, and Asia. Our nation is home to a large tech-savvy population with high smartphone penetration, creating a receptive target market for fintech innovations supported by advanced financial infrastructure. The regulatory environment is supportive, allowing new solutions to be nurtured, tested, and scaled for global impact. Crucially, at the Saudi Central Bank, we are committed to encouraging the entrance of international innovators through its ongoing efforts to support and invest in the Kingdom's financial ecosystem, while embracing and sustainably scaling up innovative business models. In particular, partnerships with international payment companies who have successfully established a presence in the Kingdom are enhancing the domestic ecosystem by enabling technology and knowledge transfer and providing improved choice and flexibility for consumers, while also stimulating economic growth. Global investor confidence in Saudi Arabia as a safe, attractive, and growth-ready destination continues to be further strengthened, reinforcing the Kingdom's leadership in payment infrastructure. At the Saudi Central Bank, our responsibility extends beyond oversight. We place great emphasis on shaping an environment that fosters prudent innovation while ensuring stability and accessibility, and proactively supporting the development of fintech ecosystem. Our objective is to ensure equitable market opportunities, accessible common infrastructure, and the creation of a clear and accommodative regulatory environment. Through a robust and agile regulatory framework, we strive to protect consumers and the financial system while encouraging the development and application of novel technologies. Key regulatory initiatives to foster fintech growth include Regulatory Sandbox, which has been one of the most successful initiatives, as well as Fintech Saudi and the Meccan program, which is created in collaboration with our colleagues at the Capital Market Authority. More recently, the Saudi Central Bank has launched a new e-services portal, a unified digital gateway that offers seamless access to SAMA's digital services. The portal aims to improve user experience and streamline regulatory interactions, ensuring that licenses, approvals, and supervisory oversight decisions are processed with greater efficiency. SAMA is also investing in advancing critical national infrastructure that underpins the financial services industry. A flagship initiative launched this year is a blueprint for the modernization of the real-time gross settlement system, also known as RTGS. This effort will support continued financial sector expansion, enhancing interoperability and efficiency while enabling sophisticated vulnerability detection to ensure financial stability. Check clearing infrastructure is also being upgraded through adoption of industry-leading standards within the Central Electronic Clearing Center at SAMA, and will soon enable same-day clearing for checks, thus increasing the velocity of circulation of money in the economy and enabling development of new payments use cases. The regulatory decisions such as SAMA's recently announced clearing for securitization and residential mortgage-backed securities will accelerate the debt capital market development. Finally, as market participants globally explore institutional use cases for stablecoins, SAMA and other global regulators are enhancing cross-jurisdictional cooperation to assess risks and enhance financial stability safeguards. In a world where opportunities and risks transcend borders, we recognize that true progress cannot be achieved in isolation. Fintech thrives when knowledge, standards, and infrastructure are harmonized, and partnerships ensure that innovation is not fragmented. Fintech innovations, from instant payments to open banking, are creating opportunities that are inherently cross-border in nature. Simultaneously, the interconnected nature of the global financial system means that risks can also travel cross borders in real time. Collaboration is therefore the foundation of a safe, inclusive, and innovative global financial system and will be critical in taking the sector forward. At SAMA, we are firmly committed to collaboration with our international peers and see these partnerships as fundamental for prudent innovation. The fintech industry will continue to set the direction of travel for the whole financial services. There are many exciting developments on the horizon, from artificial intelligence through to tokenization and beyond. Collaboration will be key to ensuring these new technologies receive the support they need to scale effectively, balanced against the prudence required to maintain financial stability. I must therefore conclude my remarks by thanking the organizers, partners, and attendees for coming together to organize Money 2020. This event will serve as an important platform for such collaboration to share ideas, insights, and experiences that are shaping the future of finance. As we move forward, we at the Central Bank remain committed to serving as an open, forward-looking, and trusted partner in the fintech innovation. Thank you.
We thank you, Your Excellency, for your time and your attendance. Kindly remain on stage because we do have some exciting announcements to make. We're honored to welcome His Excellency, Mr. Abdelilah bin Abdelaziz Al-Dahaim, the Assistant Governor for Executive Affairs, and His Excellency, Mr. Abdelaziz bin Sulaiman Abanmi, the Deputy Governor for Payments at the Saudi Central Bank, along with Mr. Anthony Nakachi, the Managing Director of Google MENA, Mr. Dimitri Stiran, the Head of Payments Partnerships at Google MENA, and Mr. Badr Al-Madi, General Manager of Google Cloud Saudi Arabia, to join us on stage. Please give them a big round of applause. We're delighted to announce to our esteemed audience the official launch of the Google Play or the Google Pay service in the Kingdom of Saudi Arabia, now fully enabled through the National Payment System, MEDA, and officially part of the national payments ecosystem, underscoring MEDA's pivotal role in advancing digital payments across the kingdom. Alf Mabruk, congratulations. Our sincere thanks to Google team, and also a heartfelt appreciation to Your Excellencies for joining us. Thank you. Thank you, Google team. Your Excellencies, we kindly ask you to remain on stage because we have another exciting announcement. We're pleased to welcome Mr. Douglas Fegan, the President and Head of Alipay Plus, Mr. Li Ming Chen, the Chief Sustainability Officer and Senior Vice President, and Mr. Abdullah Olbaks, International Regional Manager, to the stage. We're delighted to share with our esteemed audience that an agreement has just been signed to enable Alipay Plus payments across the kingdom during 2026. Congratulations. Thank you all. What an exciting milestone for the kingdom. Thank you very much. Ladies and gentlemen, Money 2020 Middle East is where bold ideas meet big business, as we said. We're talking about 451 brands, 445 speakers, almost 1,000 investors, 157 startups, and we have one agenda: shape what's next for money, finance, and tech in the region. Our next session is a fireside chat on capital market evolution and the digital age. This discussion will highlight the transformative impact of the digital innovation in which Saudi Arabia's capital markets, including new regulatory initiatives, the growth of the market, and improved accessibility for investors. Please join me in welcoming His Excellency Mohammed Al-Guez, the Chairman of the Capital Market Authority, and Dr. Chris Brummer, the Professor of Law at Georgetown University and CEO of Blueprint.
Well, thank you again so much. It is a pleasure to be here at the heart of finance, both in the region and increasingly in the world. I guess we're going to start off with a question of access. And when you think about regulators around the world, they're trying to grapple with this question of the relationship between investors and markets. As a securities law professor, we both have seen this. And the CMA's recent reforms, particularly with regard to investment funds, they're very interesting because they're allowing investment funds to be distributed through fintech firms, e-money platforms, and the like. But beyond this question of access, do you see this as part of the larger trend in terms of how citizens access markets? Markets are traditionally viewed as institution-based, institution-dominated. Is this hailing sort of a shift towards something different and broader?
So thank you very much, Chris, and welcome back to Riyadh and welcome back to Money 2020. It's a pleasure to see all of the lovely faces back again to what is now a normal annual occurrence. Actually, you touch on a very important point, which is this notion of democratization.
Yes.
And a lot has been said about democratization in financial services. It is often described as disintermediation of financial services, of the financial intermediators. And as with everything, my belief is that virtue is the midpoint between two vices. And if I can give an example, the US represents one extreme, and the examples that you've cited represent one extreme, which is a very institutionalized market, institution-dominated, and with the advent of technology, it is actually moving closer to the middle in terms of retail investor participation. Saudi Arabia's experience is actually moving from the opposite spectrum. Saudi Arabia started as a very, very retail-oriented market. Before Vision 2030, about 80 to 90% of traded volumes were retail-dominated. And this has advantages, high liquidity, high traded volumes, et cetera, but it also has disadvantages, which is susceptibility to rumors, herd mentality, et cetera. So Saudi Arabia has actually moved in the opposite direction. And today, Saudi Arabia's traded volumes in our capital markets are about 50-50. So the magic is actually to achieve a balance of diversity. Because if we believe that the market is a trading not just of positions, but trading of views, having the diversity of those views between retail investors, institutional investors, local investors, international investors, fundamental investors, and technical investors is actually what creates stability in the market. And we've actually seen it. And in spite of the fact that the Saudi capital market has actually declined about 10 or 11% since the start of the year, volatility of the Saudi capital market has actually declined significantly in the last 7 or 8 years. And the reason is this increasing diversity of investor views. And if I can give a very specific example that relates to financial technology, and that is crowdfunding platforms. Crowdfunding platforms had a promise, again, to disintermediate the financial services sector. In other words, why go to a bank or an asset manager when I can have a crowdfunding platform that connects people who want financing with the retail investors that actually offer financing? And if we now fast forward in most of the world, and also in crowdfunding platforms in Saudi Arabia, the bulk of investment that happens via these crowdfunding platforms are actually institutional investors, the very same private equity funds, hedge funds, venture capital funds that are looking at crowdfunding platforms as an origination tool. So again, the magic always happens in the middle, where there's the diversity of views, the diversity of viewpoints, and hopefully more stability.
That was outstanding. That was a very interesting answer. I loved the diversity of views between the retail and the institutional investors, and I'm going to have to borrow this idea of virtue between vices. I'm going to use that for my classes later. But when you think about that midway, when you shift to questions like generative AI, it sort of raises another set of sort of very different kinds of outcomes. On the one hand, from a securities law perspective, AI promises radical new ways to generate information, to process information, but also to obscure information, right? Do you see AI as a result as something that's going to fundamentally reshape the philosophy of market regulation? Will it impact how we think about disclosure-based systems towards something new? And what do you see from your perspective as the trade-offs and risks of generative AI?
Well, Chris, I think there is no doubt in my mind how transformative AI as a technology can have in our world, in multiple industries, and most specifically in our industry, which is the financial services industry. And the reason for this is if you think of AI or any technology as a layer that is built on top of other technologies, the layer that AI is built on is data. And no AI can exist in an environment that is not abundant in terms of data and data capture. And the financial services industry just so happens to be a very, very data-rich business because of the ethereal nature of the industry itself and because of the nature in which we store and operate and execute that data. So it is a very natural progression for AI to start to see its first applications in the area of financial services and in other areas that are generally very data intensive. And I have certainly seen these applications in the area in which we operate, which is the area of security business and the security business regulations. And if I can give you an example, in most regulation and supervisory activities, there is this notion of risk-based approach or risk-based supervision.
Yes.
And what is risk-based supervision? Risk-based supervision is a model where you try to identify where risks are likely to come from the most, and you move closer to those areas. And you also try to identify the areas in which there are less likely to be risks, which can afford for you to stay away or move away, further away from these areas. Now, with the abundance of data and AI, this is calling into question the entirety of our risk-based approach. Because if you can have a system that sifts through all data and all information, what is relevant, what is not relevant, and generate rules and flags, and actually process these flags to a supervisor who actually processes and identifies these flags and analyzes, the entire role of supervision changes from a risk-based approach to a flag processing or a case management approach and linking between different identities. And we've certainly seen this in some of our practical applications like market supervision. Saudi Arabia probably has one of the most advanced and sophisticated market supervision systems anywhere in the world. And one of the reasons for this is our beneficial owner market. So we literally see every buyer and every seller and who they bought to and who they sold to. Now, naturally, humans cannot analyze all of this data, so we tend to have to be risk-based approach. Beginning of this year, we adopted our very first AI application, and unsurprisingly, it is in market supervision, where we now have an algorithm that actually processes all data rather than risk-based data and flags cases for our case officers to identify. And what this flagging system has done is it has basically reduced false positives by about 80%. So the impact in terms of efficiency and effectiveness is extraordinary. Now, all I'm saying is the implication of AI in terms of transforming how businesses perform, how regulations are done. With respect to the valuation of this and the economic value of this, I think the global markets are now in a tussle in terms of the value of that, and this actually explains the volatility of global capital market valuation. And it is also not surprising that while not every bubble is correlated with a technology, almost every new technology is correlated with an investment bubble.
Another terrific and really interesting answer, one in which you're identifying flags, the ability to harvest data, the ability to also generate data for the market supervisor. And that's really interesting to see those advances. I mean, you'd mentioned the market, but overall, it's been very impressive. Saudi Arabia's seen the assets under management surpass SAR $1 trillion, or sorry, 1 trillion. What structural changes are you prioritizing? I mean, obviously we've heard about AI, but what structural changes are you prioritizing to sustain that momentum and align it with the goals of Vision 2030?
So Chris, you are indeed correct. The asset management industry in Saudi has grown quite a bit in the last 5 or 6 years. And you are right in that we just crossed about 1.1 trillion riyals in terms of assets under management. That's equivalent to roughly $280 billion. Now, just to put that into perspective, that was about half 5 or 6 years ago. So you're looking at a growth rate of around 20% per annum. And if we project forward from now till Vision 2030, our belief is that the assets under management or the asset management industry is likely to double probably one more time from now till Vision 2030. Again, that is not going to be the end of the growth, but we see visual drivers of that rapid growth. And the reason is the following. One is need. Saudi Arabia is transforming from a net exporter of capital to a net importer of capital. And that importation of capital requires a lot of effort and a lot of capabilities in terms of capital deployments. Our colleagues in the Ministry of Investment have estimates that the total investment required in Saudi Arabia to achieve Vision 2030 is about $3 trillion, which is in excess of 10 trillion riyals. And now that amount and that quantum of capital needs capital allocation. And what the asset management industry is essentially a capital allocator. And if you believe that that industry allocates capital efficiently, and we actually measure the returns of active management versus passive management, which still gives us an indication that there is continuous alpha to the asset management industry, that explains why the industry is growing at the pace that it is. We also believe that there are actually some external factors that are driving this growth. The first factor is the changes and the developments that we're doing in terms of the efficiency of the asset management industry itself. I mentioned before, we have a beneficial owner market. This is absolutely wonderful in terms of market supervision, but a huge constraint if you're an asset manager that wants to manage a significant amount of portfolios. So we've introduced the country's first omnibus asset management system, where we allow asset managers to manage and pool assets of clients collectively. And what this allows is that this allows them to manage assets for much, much more smaller clients. The other area that is actually being worked on at a national scale is last year we Saudi Arabia launched the most significant pension reform in the country's history. And the corollary of this is an increasing need for corporate savings plans and optional savings plans. And our expectation is that these optional savings plans starts to take traction. This in and of itself is likely to explain another 50% of assets under management, and that's about 500 billion of assets under management. And last, but certainly not least, is the increasing amount of local and international asset managers that would like to work and do business in Saudi to manage assets outside of Saudi. We started to see this with the regional headquarters program, where we started to see our colleagues in the Ministry of Investment attract foreign investment firms to set up their regional headquarters, including some financial firms as well. We're now creating a complete regulatory regime that allows firms to use Saudi Arabia as a base and to serve the broader region and internationally. And this starts with our very first offshore licensing regime, which is already in public consultation. We are likely to follow this with our flexible funds regime, and we believe this combination is likely to be the key to moving the Saudi Arabian financial services industry from our local focus to a regional and international focus as well.
So we've talked about investment funds, pension funds, asset management. The CMA has also overhauled regulations to deepen the sukuk and debt markets as well, including streamlining prospectus requirements. In that list of priorities that you've already identified, I mean, how important is developing this market for financing Saudi Arabia's broader economic transformation?
Chris, if I give you the one-word answer, very. If I can give you a slightly longer answer, I can actually start with sharing 3 data points. So the first data point is the size of our banking system today. Total banking assets in Saudi Arabia today are about 5 trillion Saudi riyals. They are slightly in excess of the size of the economy, which is normal for most economies. But more importantly, it took us about 75 years to reach this level of banking assets. Basically, we started when we licensed our first bank in the mid-50s. Second data point, market capitalization of our equity capital market. Saudi Arabia's equity capital market, in spite of the decline in the year to date, is about 10 trillion Saudi riyals. So it is double the size of our banking assets. That growth actually has been achieved, or that size has been achieved in about 40 years, since the mid-80s. So you can already see the shortening trajectory. And the bulk of this growth was actually achieved with the launch and the IPO of Saudi Aramco in 2019, which at the time used to represent about 75% of the Saudi equity capital market. Today, actually, it represents less than 65% of the Saudi equity capital market, which is a reflection of the diversification story of Saudi Arabia. Now, the last point I will describe is our debt capital market. And the number there is actually 2 trillion Saudi riyals. And when I say 2 trillion Saudi riyals, this is the debt capital market for the public sector, the private sector, onshore local currency issuances, and offshore local currency issuance. Most importantly, that 2 trillion started at 0 about 7 or 8 years ago. So when we see the trajectory of growth in these respective markets, you very readily see the different rates of growth reflecting both the different needs of the economy and the different value proposition that these offers. And our expectation with a lot of the developments that have happened recently, most recently, the addition of Saudi Arabia to the watch list of JP Morgan in terms of their sovereign emerging market local currency ratings, that this is, as we have seen in the equity capital market, the starting gun of foreign participation in our local debt capital market.
So maybe we have just a little bit of time, but maybe we can extend that conversation a bit. When you look ahead over the next 5 years, and we've already talked a little bit, certainly about the international interest coming here to both set up businesses, to invest in Saudi Arabia, but also to set up their headquarters and operations, even for their foreign operations here. What role do you see Saudi Arabia's capital markets playing here in the kingdom, but also globally?
Chris, if we reflect on Saudi Arabia's experience and some of the learnings to capital markets around the world, I think the key word is financialization. If we describe or define financialization as the movement of elements for the real economy to create instruments in the financial economy, Saudi Arabia has possibly gone through one of the most rapid rates of financialization anywhere in the world, and probably anywhere in history. Just to put it into perspective, one metric of financialization, not the only metric, is market cap to GDP. How big is your market capitalization in proportion to your GDP? Saudi Arabia moved from roughly 70-80% market cap to GDP to in excess of 200% market cap to GDP in 1 year. Again, that was the year of the listing of Saudi Aramco. And as we develop our debt capital market, as we develop more listings, as we have more international investors, that financialization is likely to increase. Now, I know that in most countries in the world, financialization has been viewed as a negative. But in Saudi Arabia, we've actually viewed the positive implications of financialization, as you would see in most of the literature, because most of the literature says there is a strong correlation between financialization and between effective and efficient deployment of capital, and as a result, with economic growth. And we've certainly seen it. As the country's capital markets have grown, wealth has grown, and economic growth, and particularly non-oil economic growth, has grown with it. Now, this doesn't mean that financialization is all good. There are some dark points to financialization, and as we are moving very rapidly in this journey to financialization, we need to be very, very cognizant of these two dark points. First dark point, leverage. As you move assets from the real economy to the financial economy, the debt absorption capacity of those assets increases because of mark-to-market, because of your ability to sell, because of liquidity, etc. And that is generally a good thing, because as you add debt absorption capacity to the economy, you can grow the economy faster. But like we said earlier, virtue is the midpoint between two vices. There is always too much of a good thing. And when you have excess leverage, that becomes the formula where you start to see the negative sides of financialization as opposed to the positive sides of the financialization. Now, the good news, if we look at Saudi Arabia, is in spite of our very rapid rates of financialization, leverage continues to be very low. So if we look at the public sector leverage, the public sector has debt to GDP of roughly 30% to GDP. If we compare this to other emerging and developing countries, at around 60 to 70% of GDP. So that gives us a lot of comfort with respect to the levels of leverage in the public sector. The same is true if you look at the private sector. The leverage ratios, debt to capital in the private sector, at least in terms of publicly listed firms in Saudi Arabia, today is about 20%. Actually, even with this financialization, leverage ratios have actually come down, not up, in the last 4 to 5 years. They have actually gone from roughly 25% to 20% in 2024, possibly because of the higher interest rates. And with higher interest rates, people are now paying down debt. And also, we have to admit, even though we are firmly on our path to diversification, we are still an oil-dependent economy. So we need to be cognizant about the volatility of higher and lower oil prices on both fiscal capabilities, even though we have the capability to pursue counter-cyclical spending, and on companies' balance sheets and income statements. So the story of our capital markets and our financial sector is the story of Vision 2030, and that is the story of financial diversification.
I must say, I talk to financial regulators almost every day, and that was one of the most eloquent and interesting assessments of both domestic and international capital markets that I've heard in a long time. Thank you so much for your time and for the opportunity to have this conversation. And I look forward to seeing you in my neck of the woods soon. Thank you so much, sir.
Thank you very much, Chris. Pleasure.
Thank you very much, Your Excellency, and thank you, Dr. Chris. Ladies and gentlemen, our next session is a fireside chat on the role of the regulator towards a fintech-driven economy. This conversation will explore how regulators are shaping the future of finance, fostering innovation, ensuring stability, and at the same time, supporting the growth of a fintech-driven economy. To discuss this important topic, please welcome to the stage His Excellency Dr. Khalid Al-Dhahir, the Vice Governor of Supervision and Technology at the Saudi Central Bank, and Dr. Lida Glyptis, FinTech Advisor and author of Beyond Resilience and Bankers Like Us. Welcome.
So good to see you in the flesh. Thank you so much, Dr. Khalid, for being with us. And what a start it has been. I have been sitting in the sidelines thinking, I am absolutely fascinated, almost forgot I had to get on stage. We don't have very long, and I have a lot of things I would like to ask you. So I'm going to jump right in. As we already heard today, a regulator's role is really changing and evolving. Of course, it's supervisory, you get to oversee and protect. But in the context of what we're seeing here today, you have the opportunity to set the tone of economic growth. I would love it if you could talk to us about how SAMA sees the fintech space and your role within it.
Absolutely. Thank you so much. Assalamu alaikum, everyone. I'd like to start by...
Can we...
Can you hear me well?
Perfect.
Okay,
yes,
now
we
it's
can
better.
now.
So, assalamu alaikum, everyone. I'd like to start by saying thank you so much for the hosts and the organizers for this great event, and for everybody that is attending today. sure you're all looking forward to have a great experience by connecting and talking to all of the people that are here with the ideas, with innovation, and also making sure that they get things done. So you're right by saying that the role of the regulator is to make sure that there is proper stability, right? And that's what we do at SAMA. Priority number one is to ensure that there is that monetary stability, supporting financial stability and supporting the growth. Now, having said that, and as His Excellency the Governor said in the morning, we need to really look at how do we enable, in a prudent way, innovation in the financial sector. It's an extremely important point to make sure that we are enabling that. And the word enable is a big word. So what does enabling technology and innovation mean? You need to really look at different dimensions. So in SAMA, we've established platforms. So one platform is the sandbox, which is creating a platform for a regulatory dialogue, conversation between SAMA as the regulator and entrepreneurs and innovators and tech enthusiasts. And that is a discussion around three main points, right? One is, what are these models? And what do they add? What value do they create? What impact do they have, right? So that's the first point. The second is, what are the regulations that would cover that? So if the regulation needs to be enhanced, and that's again another opportunity to make sure that we identify what the regulatory new regulatory requirements are, and then what is the journey to bridge that gap, right, for enabling regulating these new models. The third objective, of course, in the sandbox would be, how do we make sure that the companies are ready? Because readiness is not just saying, well, I have a technology or I have funding. Readiness is a combination of ensuring that you will be able to provide secure, sustainable, reliable financial services, right? So that readiness is important. In addition, of course, we need to have sustainability and continuity. That means, the need for funding. It's not only when you start, it's a journey. You need to make sure that that funding would be made available and consistently, in your journey. The other point is capabilities, human capabilities, technology capabilities. What are the drivers that will enable you to be successful? So this is a combination that happens in the sandbox, right? The second example I would give is fintech Saudi. So fintech Saudi is also another example of enablement. So again, SAMA, as again His Excellency mentioned in the morning, established this program, this initiative in collaboration with the Capital Market Authority under the umbrella, of course, of the Financial Sector Development Program, to ensure that there is that opportunity for dialogue, right? To ensure that there is that platform for innovators, fintechs, entrepreneurs to have this discussion, right? And it enables them to identify what the opportunities are, right? Because it's not only about an idea, right? And that's again part of the regulator, is to say, make sure that that idea, is discussed with others. Maybe you can learn from others across the world, right, to bring in that value here. And the third example is actually this platform, where we bring in all investors, entrepreneurs, people that are interested in the financial world and technology in the financial world, so that they can have the right dialogue.
You have used the word dialogue a number of times in a really inspiring way, so I want to stay with it. You said, and I'm paraphrasing slightly, the sandbox is an invitation to a conversation. You talk about the conversation between the various aspects of the market, the various aspects of the ecosystem. Now, here at Money 2020 Middle East, we have a whole host of folks who are looking to expand their business into the region, particularly inspired by what Vision 2030 represents. Can you bring to life for all of us what this conversation looks like, how the conditions for this dialogue are being forged in a, as you say, prudent and sustainable way?
Again, I mean, the dialogue's objective is to make sure that we bring value to this financial ecosystem, right? What we want to make sure is, when people, bring in these new models, that they are building on all of the great value that has been established. We've heard, it's decades where the financial sector and system built a solid reputation of reliability and sustainability. So you want to make sure that that continues. So that dialogue needs to, make everybody aware what their responsibility is, right? It's not just about introducing an application or introducing a service. It's about ensuring that that value is created and that value is sustainable and that value does not touch anything around stability in the overall system. So, and that's everybody's responsibility. Yes, as the regulator, we want to make sure that that happens, but it's not only our responsibility. Everybody needs to understand their role, in enabling that. So that's a big part of the conversation. The second part is, how do we ensure that we educate the consumers, people that will consume all of these services, right? Because, we don't want to also, create, products and solutions that takes advantage of people's needs, right? Many times you talk with people that provide new financial services and they say we want to go to the segments that are underserved. We want to make sure that these underserved are also aware of what these products are providing, what value they bring, but also what risks they bring. So these are elements and examples of the dialogue.
You bring to life a very complicated journey to protect the consumer, to educate the consumer, to look at the long-term financial viability, create a space that forges innovation, but also protects. This is a set of challenges regulators face every day. It's not new to any of you. But it is fair to say that the country has had an incredible trajectory over the last few years. And there are some people in the audience who've been a part of it and some who are new to it. I would love if you could look back for us and tell me what are the highlights of this trajectory and equally what we can expect to see next in terms of the opportunities and the changes ahead.
Well, I mean, if we look back again at the financial services that have been offered over the past many, many years, and the services that were offered lately, examples of payments, right? The transformation of the payment capability and infrastructure, again, as part of our journey, has been, astounding. I mean, it's amazing the type and the value of payments that have been created. And the examples today, we've just seen the announcements with Google and Alipay. That actually is building on that momentum, but also on the capability, right? The capability is not just technical. The capability is regulatory, it is process, it's enablement to make sure that when people make a financial transaction, that they are, number one, sure that it will go through, number two, that it is secure, and that you minimize the risks. At the end, risks are everywhere, and we need to make sure that these risks are manageable. We heard also this morning about risks around cyber. There are many other risks that would be introduced. There are opportunities with new technology, as we heard about AI, but then also there could be risks that we need, again, as a regulator, as an enabler for such financial services solutions growth, to ensure that that technology works in the positive way and minimize the impact for the negative. Now, in addition to this infrastructure, there are models. So we've talked about the model of payment, but there are many other needs that are in the market. So we've again heard examples of buy now, pay later, for example. And again, this is one model that starts to serve in a particular way, but then it grows. We've seen, again, over the past period, where people want to implement that buy now, pay later, not only to buy a small device, but to pay rent, for example, to pay tuition fees for schools, for children, right? So why not apply that same model? And now, as a regulator, we need to ensure also that that is done in a safe, secure, and reliable environment. And then there are a lot of other new models that come. And that's why I would like to invite everybody to make sure that they go around and visit the hundreds of fintechs that are participating today, bringing in new ideas, and then having that dialogue and that conversation. And we as SAMA would like to encourage people to come in with new models. We've seen that interest and the excitement. One example is supply chain finance, for example. How can you unlock finance that exists in the system through enabling that movement of supply chain finance? But there are many, many other examples, and I'm sure that we will see a lot in the event today.
We absolutely will, but as we're getting started, I want to stay with what you just said. There are some people here who might be coming to Saudi Arabia for the very first time. What advice would you give them on how to navigate the days ahead, how to understand this thriving ecosystem, how to understand Vision 2030 and how they can play in the future?
Well, I would say, the first advice is connection and having the dialogue, right? Look at what the opportunities are in the market. So to provide services in the market, you need to understand the market. You need to understand the needs. You need to understand the value that what you bring into the market, and understand, the depth of that need. So I think that's the first point. Second is making sure that as you introduce these types of solutions, you understand the connection with the rest of the system, right? Because again, nobody works in isolation. No fintech, for example, would be successful if they provide their offerings in isolation of others, right? So you need to understand what that looks like, right? And also understand the different segments in any market that you operate in, whether you're talking about corporate market or the retail and the consumer market. Understand how they would accept to use products, right? And how they want to implement and introduce your particular solutions in this market.
I have been taking notes as you speak, because that balance between the market needs, human and technical capabilities, and protection is the perennial question. And as we're coming to the end of this session, I would like to go back to that notion of enablement that you talked about at the beginning, because it's such a key driver in everything you do and everything we're talking about today. And I want to bring it back to governance. How do you think about enablement and governance, and how should the participants in this session and in the sessions to come think about that balance?
Well, if you look at the objective of governance, number one, it is to have clarity, right? So you need to really make sure that everybody who is either an investor or a provider or a fintech organization, they need to understand what it takes for them to offer a particular product, right? You don't want imbalance where sometimes you do it this way, sometimes you do it that way. You need to understand what that would mean. So that's the first point. Second, it's important also from a governance point of view to understand the roles. As you said, it's a system. So you need to understand your role as a provider and what you expect from others, right? What their role would be to support what it is that you would offer. And then third is need to understand your responsibilities and accountabilities, right? So to have clarity on the governance, and again, if it's a new model, you need to make sure that you have that discussion and dialogue within the sandbox. You have a discussion, within FinTech Saudi, for example, right? And if it is a model that already is regulated, you have the discussion with the team that are going to do the supervisory activities with you. You need to understand what you're responsible for. Because it's not only about having the process. Governance is not only having the process, it's how do you implement them? How do you live through these processes? Whose responsibility within the organization is it to ensure that that is happening? From the board to the CEO, right, to the executive management. So it's not enough to say that organization needs to do 1, 2, 3. It is, do they actually adopt it? Do they implement it? And what happens if situations come? Because life is like that. Situations will come, right? Dealing with that is extremely important.
And it is fair that we have been on the journey towards Vision 2030 for a while, and the world has given us a lot of challenges, given us a lot of opportunities, but the focus has been unwavering. And sadly, we're coming towards the end of our time together. I think it's undeniable to look back and say there's been immense progress and some incredible achievements. This is the first one of these sessions. What can we in our audience expect to see in the year to come when we're back here next year? What do you believe the opportunity of the next 12 months is?
I think, no doubt, there is opportunities in different areas, and again, in the financial world, in the technology supporting and enabling the financial world. I would say, please make sure that you visit today with all of the participants in this event. I am sure you are here today because you either have an idea, you have a need, you're excited about what the financial sector can provide. And again, if you are providing solutions and technologies, make sure that you have that discussion with the financial services providers, with the technology providers. And what I would love to see is, once you have that dialogue and you identify an area, I'd like to welcome you to come next year and share that with us and say, out of this event, we've identified this, we've worked on it, and now we actually have thousands of clients who are benefiting from it. We've seen models, as we said earlier, models around payments, and a lot of success that we see here today. But the new models that we just talked about, for example, the supply chain finance, and again, crowdfunding, peer-to-peer models, and so on, how impactful are they, right? Because it's not only about the idea, it's about the impact, the value that they create, the solutions and the problems they solve, right? I think this is critical for us to keep an eye on.
Dr. Khaled, I'm absolutely inspired by the conversation we've had. If I may, I'm taking two key things away. One is the balance between creativity, growth, innovation, prudence, and accountability. And the second is dialogue, an ongoing conversation, starting here and carrying on. We are absolutely honored to have you with us today. Thank you so much for being with us, and thank you for your insights and wisdom.
Thank you. Thank you all.
Thank you.
Thank you, Your Excellency, and thank you, Dr. Lida. Ladies and gentlemen, our next fireside chat takes us into the world of insurance under the theme, The Future Insured, Strategic Insurance Evolution in a Dynamic Financial Landscape. And at a time when financial systems, as we know, are rapidly transforming, Saudi Arabia is pushing forward a progressive vision for the insurance sector. One that is innovative, resilient, and designed to meet the needs of a changing world. Please join me in welcoming to the stage Engineer Abdullah Taha, the Deputy CEO of Strategy and Sector Development of Insurance Authority. And moderating this conversation is Dr. Lida Ecliptis. Please let's give them a big round of applause.
Thank you so much. As you can probably see, I didn't make it very far because I had an opportunity to have another fascinating conversation. So thank you so much for being with us today. Now, for our audiences, today will be a day of a lot of announcements, a lot of new information, and this session is no exception. The Insurance Authority is a fairly new authority. Can you talk to us a little bit about the mission and its role in promoting the agenda of the Vision 2030?
Yes, thank you, Lida, very much, and thanks for the audience. Well, yes, the Insurance Authority is quite new, established a little bit less than 2 years ago. For the first time in Saudi Arabia, we have a unified regulator versus the previous model where we had a regulator for the health insurance and a regulator for a lot of other things. But now we have, according to the Royal Decree number 85, about 2 years ago, established the Insurance Authority. The Insurance Authority is not only mandated to regulate and supervise the market, but also to develop the market. And in the development agenda, in the heart of our development agenda, is setting up the strategy for the national insurance sector. And I want to talk about maybe themes in this strategy that will be announced soon. There are 5 main themes that enabled us or set us our agenda. The first is growth. We're going to witness and we're going to support and push a lot of growth for the coming 5 years. We expect the market to double in the coming 5 years, fueled by, yes, the core insurance sectors like health and motor, but we also put a lot of pressure and support for the other line of businesses like life and property and casualty. We expect retention to grow from 21% to almost 40% in the coming 5 years. And we expect also to push the agenda of reinsurance big time to fuel that growth. The second main theme is a real push on the capability agenda. The insurance market until now hasn't been doing its, let's say, fair role in job creation, in developing the technical and non-technical abilities of our young generation. And we expect, and we want to push this. We expect to add probably around 20,000 jobs in the coming 5 years and push the technical and the non-technical capabilities. The third theme, which is relative to this conference right now, is to push the innovation, technology, and insurtech agenda big time. We have seen the investments growing in the insurtech and fintech in general in Saudi Arabia. We want to leverage and capture the huge investment in infrastructure that Saudi Arabia has achieved so far. And we expect this to be a big enabler for the coming 5 years for the private sector. The fourth theme will be an overhaul of all our law and regulation. We are already doing this. We released the law for public opinion, and it is in the final stages of approval. And again, for the first time, this is not going to be a supervisory role only, law only, but it's an enabling law. It's a comprehensive law that, first of all, and most importantly, enable the private sector for growth. The last theme will be around enabling the private sector to participate and offer risks that hasn't been active before, like specialized risks and uninsured risks. So the coming 5 years is going to be a real, let's say, kickstart for the whole insurance sector to continue the growth that we have seen.
That is absolutely fascinating. And again, that word enablement that we hear again and again today is so inspiring. Digital transformation is a long and complicated journey, but I would love to stay with this topic of transformation, innovation, and enablement. Could you talk to us about some of the initiatives that you expect to see in this space?
Yes, sure. I can talk about a couple of initiatives. The first one was actually announced a few months ago, which is setting up the InsurTech Sandbox. We have finished the framework of the Sandbox, the rules and regulations, and we expect to announce it soon for companies to join this sandbox. Of course, we know how sandboxes have played a major role in advancement of fintech overall in Saudi, thanks to SAMA since 2018 when they launched their first sandbox. And we want to build on this. We have already seen, and we are in discussion with many entrepreneurs and innovators who are really excited about this. They have excellent ideas that they want to test in the market. The second maybe initiative is around scaling up the technological infrastructure and data infrastructure that is already there for insurance. There has been a good investment for the past 10, 15 years, particularly in healthcare infrastructure, technological insurance infrastructure. But we will scale this up for all insurance. We will also put a lot of investment in data, availing data for decision makers and for the private sector to drive the right decisions in their investments. So the agenda of digital and AI and technology investment is one key shaper of our strategy for the coming 5 years.
That is fascinating to see, and insurtech has been a growing sector globally. At times, it has seen more innovation than fintech, which is what a lot of us are working on. And at times, it has seen more challenges. Have there been developments that inspired you or act as cautionary notes? How are you thinking about the growth of this sector here at this critical time?
Yes, you are rightly so. Insurtech have reached around 220 billion Saudi riyals globally and expected to continue that growth in the coming few years, probably to reach 350 billion. In Saudi Arabia, yes, we have around 16 insurtech companies out of around 230 fintech companies in Saudi. But we are seeing also tremendous growth and focus from investors. Insurtech GWP or GWP written by Insurtech grew 36% last year, which is ahead of the policy issuance growth. Policy issuance growth was about 25%. So this signals the big shift.
Sorry, we've lost the mic. Can someone help us out? Try again. Do you want to try? Apologies. Could we have a handheld? Thank you so much. No, it's not. Somebody's bringing a handheld because you're making some fascinating points and only I get to benefit from them, which doesn't feel fair. Thank you for bearing with us.
Thank you. So I was talking about the Insurtech gross written premium growth ahead of the policy issuance growth. And this has signals a great shift from insurance companies and investors toward Insurtech. In a recent study that we have done and we will publish very soon, we have seen a huge appetite from investors. Around 76% of investors agree or will invest in Insurtech in the coming year. So Insurtech also represents right now 10% of the total GWP written in the insurance sector in Saudi. That's a good amount. To compare percentage-wise, in the US, it's double that amount versus Saudi. So yes, we are growing and we are coming from a low base, but there's great growth and great opportunities ahead of us. And with the support, as I said, of our new law and regulation, initiatives like the Sandbox, we will fuel this together with the private sector. Gatherings here today, like Money 2020 and the coming conferences, particularly insurance conference coming, will help us to partner more effectively with the private sector, with the local and global investors.
I must admit that listening to these numbers, and particularly that 76% of investors intending to turn their funds and their attention towards Insurtech, makes me think maybe I should change my own career orientation. But I want to stay with that theme of partnership, because we've heard it a lot, that constant dialogue between the regulator, the ecosystem, and the private sector. And particularly, I want to go back to the mention of infrastructure that you made earlier. You talked about the role to regulate, supervise, and help grow. We know that a lot of thought and a lot of of effort and funding has gone into that infrastructure. Can you bring it to life for us?
Yes, so in insurance particularly, around 15 or 20 years ago, with the support of the current, of the ecosystem at the time, there has been a setup for, let's say, the technology infrastructure for healthcare insurance. Right now, we will take this and scale it up to cover all subsectors. We will also create the proper marketplace, avail data, avail the right information for not only investors, but customers, insurance companies, and us and other regulators to take the right decisions. And we are investing in this as Insurance Authority together with also our private sector partners. I want to also highlight that we have in InsurTech, we have seen tremendous focus on certain models of InsurTech, like the aggregators. Right now, they represent most of the InsurTech investments, particularly in motor. Motor aggregators represent almost 80% of the InsurTech gross written premiums. But we want, and we are pushing this agenda with our partners, to diversify these investments in other services and in other ecosystems and innovative ideas. And we already seen, as I said, amazing entrepreneurs and ideas. For example, insurance as services, or in the other hand, in services like in underwriting and in claim management. Companies right now do invest in this internally, but we want to see good products and companies specialized in this in InsurTech.
You paint a picture that is, again, premised around enablement, the unified regulator, creating greater clarity, Vision 2030 that is very much setting the tone of direction for the country and has been for years. And you and your colleagues are talking a lot about that public service infrastructure. All the components of an ecosystem that will allow for a thriving growth of companies are here. And so are quite a few representatives of companies from all over the world who are very much eyeing the Kingdom of Saudi Arabia as a fantastic opportunity. What advice would you have for entrepreneurs and investors who are maybe new to the region, new to the country, and are thinking this could be a fantastic opportunity for my company's next journey?
Yeah, I think the entrepreneurs and investors should be honestly bold and play the real entrepreneurial part, go to the cutting edge of technologies, test their ideas. We are, as I said, we are very open. Even right now, we are entertaining a lot of the excellent ideas in licensing some companies, and we want to push. We always want to push the envelope in enabling these companies. The second advice is I would like to see some diversification of investments. As I said, we need to move to more specialized insurance, and when you look at particularly properties and casualty specialized insurance, the big enabler, the big key success factor would be technology. You cannot push effective distribution without proper technology. It's already out there in the world, and we expect companies here or investors to move and take good care of this and pay attention to technology in pushing specialized insurance. And probably the last advice is come closer. Our doors are open, and we always want to listen and be very agile, pivot with necessarily what we plan to do with them.
It's always inspiring and reassuring to hear regulators say, come forward, our doors are open. This is time and again the message we're getting here. It is all about the dialogue. And as I'm listening to you, I'm thinking, we used to say that fintech will eat the world, but it sounds like it might be InsurTech doing it. What role does the sandbox construct play in this acceleration?
Yes, so although, as I said, we are doing a big overhaul of our law and regulation, we expect still to be some, let's say, opportunities for more innovative ideas. We don't know them yet. Probably we have some eyes on it yet, but we expect the partners, the innovators, the entrepreneurs to come forward with these ideas. And as I said, we want to test them with those partners. We have already got some interesting ideas from current companies that they want to explore in the sandbox. We'll announce it very soon, hopefully, and we expect great participation from local and global partners in this. We'll also announce, probably one of the big initiatives that we'll announce is a major innovation initiative that takes care of the whole innovation journey from idea to acceleration to sandbox, and we'll fund it all by IA.
That governance of the innovation process is a topic very, very close to my heart. But as we're coming to the end of our session, I want to go back to where we started this dialogue. We talked about digital transformation as part of the wider vision. How do you see the insurance sector playing in this space?
So I think classically insurance sector have leveraged digital transformation and big data before, and AI recently before, as we said, in customer service, in underwriting, in claim management, to aid better decision making and more effective operation at their end. But the investments now, the new shift should be on actually investing in original ideas in insurtech, not only supporting the operations and the structure of the companies in insurance, but also adopting innovative ideas to reach, let's say, more customers, to distinguish the insurance companies' offerings versus competitors. And this is what we also see globally. If you look at globally shifts and trends, global companies, let's say if you take the top 10 companies globally, for the past 10 years, there hasn't been a lot of shift in their positions as top 10 to top 15 or something. The shift has happened always in the way they offer their insurance, not what they offer, but the how they offer now the insurance, catering for the new young generation, catering for the new trends, social media, and so on. So, and that shift is, as I said, is fueled largely by technology. So the companies are also going not only from infrastructure investment internally and operation investment internally, but also in innovative ideas to capture more markets, more customers, and expand their offerings.
I have written this down because you're absolutely right that historically we have seen a shift in how services have been delivered, not what was offered.
Exactly.
And as we go through the change, new ideas will be coming across both. You mentioned enabling better decision making. And I would like that to be something that everyone in the audience walks away with. And with only a couple of minutes on the clock, and I probably will have to find you later and ask you a million more questions that I have. Do you feel that the changes we're discussing here are actually different cross-vertical? Obviously, there is a separate regulatory framework for insurance, for financial services, but from a capabilities perspective, from a data governance perspective, are we seeing a lot of nuance, or is there reusability and alignment?
So, from governance perspective, Saudi Arabia has established the proper governance for data usage, for cybersecurity, well advanced versus many other nations, and we can see the rankings. Always Saudi is top ranked in the 1 or 2 or 3rd place globally. So we are adhering to these regulations, governance, policies in our technology investments, in data particularly, in enabling information and data. We are moving on with our all insurance companies, partners, to create, let's say, a data hub. We would call it a data hub or a data, sometimes data lake, that will avail information not only, as I said, to them, to us, but also to the market. We have bold ideas with them to move on into a marketplace that cater for insurance companies and reinsurance companies, new innovative offerings. This is going to be one of the, actually, a major initiative that we are taking forward. As I said, our strategy is, we are drawing the final lines in our strategy, and probably a lot of the details will come later. And that's why I can talk so much about some of these initiatives.
Well, you have given us many reasons to watch this space. Unified regulator driving better decision-making, growth, and with 76% of investors looking at this space hungrily, you have told us that we have a lot to look forward to. We will definitely be watching this space for announcements as they come. It has been an absolute honor meeting you. Thank you so much for being with us.
Thank you, Lida, and thank you for your audience. Enjoy the rest of the show.
Thank you.
What a rich conversation. Thank you very much, Engineer Abdullah and Dr. Alida. Ladies and gentlemen, we know that this event is a testament to the incredible transformation happening across the kingdom, fueled by ambition or the ambition of Vision 2030. Now we have an announcement to make, but let me first, ladies and gentlemen, set the stage. We're living in a digital-first economy where almost 80% of all the transactions happening in Saudi Arabia are cashless. We're talking about 8 out of every 10 transactions. This is happening because of the 260 fintech innovators in Saudi Arabia. But today, I'm going to focus on Tamara. Ladies and gentlemen, this is the moment. Today, with immense pride and the full force of global confidence, we announce that Tamara has secured a landmark of around 2.4 billion asset-backed facility. A vote for confidence from world-class institutions, Goldman Sachs, Citi, and Apollo. And to honor this incredible milestone and the impact it has on Saudi Arabia's fintech journey, please join me in inviting the leaders who made this possible to the stage for a memorable photo. Abdelmajid Al-Saykhan, the co-founder and CEO of Tamara. Umar Al-Zaim, the CEO and head of IBKSA from Goldman Sachs. Sarah Tamimi, Citi's Middle East and North Africa head of Equities Platform. Phil Aldis, the partner and co-head of Europe Asset-Backed Finance at Apollo. Let's give them a big round of applause. Alf Mabruk, congratulations. Let's give these leaders and the entire Tamara team a massive round of applause for showing us all what it means to build, to back, and to believe in the extraordinary future of finance. Ladies and gentlemen, as we have witnessed today, Money 2020 Middle East here in Riyadh has begun with a rich agenda, and the executive summit is bringing together very important global leaders. We have heard important keynotes, engaged in thought-provoking discussions, and seen major announcements that are shaping the future of fintech and business. And the journey continues with more conversations, more insights, and more breakthroughs still to come. When markets shake, new opportunities often emerge. This discussion will explore how economies are harnessing financial innovation to unlock growth, to reimagine leading and saving, and expand access to capital, especially in unpredictable times. Our next session, ladies and gentlemen, is a discussion under the theme Instability as a Catalyst, Fintech's Role in a Global Interconnected Economy. Please join me in welcoming our distinguished speakers, the Honorable Caroline D. Pham, Acting Chairman, Commodity Futures Trading Commission from the United States, Ms. Dima Lihya, Secretary General, Digital Cooperation Organization. The Honorable Dr. Doris Nikiruka Uzuka Anit, CFA, Minister of State for Finance at Nigeria. And joining them on stage is Scarlett Sieber, the Chief Strategy and Growth Officer, Money 2020. Let's give them a big round of applause, everyone.
Good afternoon. Okay. Good afternoon, everyone. We are having an incredible session in front of us today. It is an honor to be here at Money 2020 Middle East, in a region that's not just participating in the future of finance, but actively shaping it. Today we have three absolutely extraordinary global leaders whose work spans the full spectrum of what it takes to build a resilient, inclusive, and innovative global financial ecosystem. From this region, the Secretary General of the Digital Cooperation Organization, Dima Ayaha, leading a coalition of nations to unlock the full potential of the digital economy. Welcome, Dima.
Thank you for having us, and might I say, what a great coincidence to have a panel of amazing, powerful women. So thank you.
There we go. And then from the US, which if you can tell from my accent is where I'm from, we have the acting chairman of the US Commodity Future Trading Commission, Caroline Pham, a regulator at the forefront of balancing market integrity with the rapid rise of digital assets. Welcome, Caroline. Absolutely happy to have you here. And then from Africa, Dr. Doris Uzaka Anite, Nigeria's Minister of State for Finance, driving fiscal reform and investment strategies in one of Africa's most dynamic economies. Together, the three of you represent regulation, cross-border digital cooperation, and national economic policy. Three pillars that must align if fintech is to deliver on its promise of a digital future on this global stage today. So let's start with you, Dima. The world is where it is, right? In a more volatile global economy, what would it look like for the Bretton Woods institutions to turn instability into a fast lane for digital resilience?
Well, volatility doesn't have to be breaking economies. It actually can be strengthening it. It can, yes, instability can showcase the cracks, but that can put some pressure on governments to really think differently and in a different mindset. I think that institutions should have three main mandates that they should look at. First is the rails. Financing digital infrastructure is the core. Having a resilient digital facilities that enable digital ID, enable real-time payment, as well as secure payment gateways as well, is essential. When we look at the rules as well, instability can turn into trust. Trust is very important, and that's by creating the right frameworks, the right regulations that in any technologies that we're using, either data, either AI, coming up with new concepts like the data embassies, which can mirror data into trusted countries that already have political stability, and also such kind of models will help in mutual recognition of standards that can turn friction into actually a passport for SMEs. last but not least, which is risks. Coming up with the right frameworks by pricing it, pooling it, and rearranging it. So such kind of mandates, which is the rails and rules and also risks, can really strengthen the instability into digital resilience and also inclusive growth.
I love that concept of, turning instability into trust. Those, at face value, those two seem quite far away, but the idea that, one actually can build on another. Let's stay on volatility for a second. I'm going to go over to you, Dr. Doris. In the face of economic volatility, FX fluctuations, and the rapid growth of digital lenders and the payments platforms, what specific regulatory approaches, such as the regulatory sandboxes or adaptive licensing like we heard this morning from His Excellency the Governor of Sama talking about, what should we be doing, these central banks and the SEC do to adopt a safeguard for financial stability without stifling innovation? It's always that push and pull, and how does that help drive financial inclusion in Nigeria?
Thank you, Scarlett, for the question, and good afternoon, everyone. Usually, I think the traditional mindset for regulators has always been very rigid, very hard. But with fintechs and with technology innovation, you find that we now begin to change and shift the middle ground. So regulators now must begin to become like forward-thinking, become more proactive, more agile, and then adopt a risk-based monitoring tool to manage or to monitor or to regulate the fintech ecosystem. Now, the fintechs are highly innovative. They are very fast, and the regulators are very slow to keep pace with them. And it's going to be very difficult for any regulator to actually keep track or keep pace with a fintech, except they are also innovating at the same pace. Now, one way that the regulators can catch up with these fintechs is creating those regulatory sandboxes. For example, between the central bank and the Ministry of Finance. Now, if you have the Ministry of Finance being represented by the SEC, the Security and Exchange Commission, where you have a macroprudential guideline for those sandboxes, it becomes easy for you to monitor data-driven outputs from these fintechs. And then you're with them, you're monitoring what they're doing, and you're able to develop the right kind of frameworks to support the riskiness, of these fintechs. And this is so important for the regulation, especially when they are high risk or very systemically important innovation like digital lending or payment system solutions that, have very high risk and are systemically important. Those regulations should also be able to stress test, for example. Now, when you're within the sandbox, it's easy for you to also determine the sort of regulations to use. Should I be overly hard on a fintech, for example, or should I be soft? Meaning, if fintechs are grouped and you're able to categorize fintechs, you categorize them based on the activities, the volume of transactions, and then equate them to some you can equate them to maybe the banks, for example. A fintech that is doing high volume transactions can be regulated like a bank, but a startup fintech should not be regulated like a full-grown fintech just because they are in the same industry. So we have to moderate how we regulate them using either the activities they are doing or the type of fintechs that they are doing. And then while within those ecosystems, you also have to ensure that these fintechs are able to provide data protection for the sort of information that they're getting from customers. Because customer data protection is very important. For example, in Nigeria, we moved away from the GDPR to the NDPR, the National Data Protection Regulation, which is now protected by an act. Now, it's also very important that the laws of that country, for example, in Nigeria, we had to upgrade our SEC law to the Investment and Securities Act, which now accommodates more fintech regulation, that accommodates emerging fintech or financial sector access classes like cryptocurrency, digital assets, stable coins, central bank digital currency. So we are able to accommodate them. So as your fintechs are innovating, you are also innovating and improving even the laws that guide those sectors. So in the bottom, I think in a nutshell, the regulators have to innovate as fast as the fintechs do. But where you can't, you then protect them, or you protect within sandboxes that allow you to come up with the right sort of regulation, and then finally have a right communication mechanism where you can actually sit with these fintechs to understand their challenges, understand the sort of risks that they're facing, and they also can anticipate regulatory challenges or regulatory concerns that you have as a regulator, to also be able to moderate or to adapt or adopt their technology to fit your regulatory concerns without stifling the innovation. So the key word there is regulate without stifling innovation, regulate alongside innovation. So you have to also re-innovate yourself to be able to regulate innovation.
Thank you for that. And there was a few key things that really stuck out about that. Part of it was about the mindset shifting mentality, and that it's not a one-size-fits-all. You can't regulate and do it for every fintech. Some might have higher volumes, other ones don't. I know, Caroline, just not today, but in past when I've listened to a lot of the things that you've spoken about, you definitely agree with that overall principle of we need to go quicker with regulation, but doing it safely and security, making sure we protect. Do you want to add anything to that concept?
Sure, of course. I think the themes that we've been talking about today are so important, because what we're really talking about is the fact that we now have a catalyst for change. From the US perspective, we have mature and robust financial market infrastructures, and so the adoption of new digital technology like blockchain, digital assets, and crypto really needs a compelling use case in order to drive that change across our banking and markets systems. But what we are seeing is that the United States, which has long been a leader and an innovator in digital technology, has found ourselves, strangely, in this place where we are playing catch up to the rest of the world because of the lack of regulatory clarity. That's why it's been such an important aspect of this administration to have not only the President's executive order on digital assets, but to oversee significant milestones like the passage of the Genius Act, which will create a federal regulatory framework for stablecoins. And then, of course, the recent issuance of the President's Working Group report on digital asset markets, which is really the White House crypto roadmap. So this is where we understand that key to driving innovation is that you need to have the political stability, the rule of law, and the regulatory clarity. I've been very proud to partner with my counterpart at the SEC, Chairman Paul Atkins, who I've known for 15 years, to issue a joint initiative, the SEC's Project Crypto and the CFTC's Crypto Sprint. This is where we are going to be working hand in hand to finally create that regulatory clarity around market structure that will drive the greater adoption into our financial market infrastructures. You've seen recently that there have been announcements that NASDAQ is looking at tokenizing equities on their exchange. You now have banks having a path for them to do bank-issued stablecoins, and of course for foreign issuers of stablecoins to now onshore in the United States. So key to all of this, I think, is understanding some of the lessons learned from the US perspective of the last time we had transformative market structure, which is, of course, in the aftermath of the global financial crisis. So again, talking about things that are a catalyst for change. So with this, it means that we need to ensure that we are, number one, avoiding regulatory moats, which create barriers to entry for entrepreneurs, startups, and SMEs. And then also, I think importantly, given the impact of the US on the global markets, is making sure that we try to avoid market fragmentation as much as possible. Because of course, the beauty of blockchain technology, digital assets, and crypto is the ability to actually bring together the world bring the world together through lowered costs for cross-border payments and remittances, making markets more efficient to have deeper liquidity. And so avoiding market fragmentation is so important that that's why some of my key initiatives have focused on leveraging the CFTC's existing cross-border frameworks for substitute compliance, mutual recognition, and passporting to make sure that we can now legally onshore much of the digital asset and crypto activity that left the United States to other jurisdictions with more regulatory clarity.
Thank you for that. You know, I think one of the key things that we've heard already a bit just in the first few questions is around the avoidance of fragmentation, and you gave some really great examples there. So Dima, I'm going to go back over to you for a second, because we've talked about fragmentation, we've talked about innovation. Let's use another word around digital transformation. That gets thrown out a lot. There's a lot of consultants who are using that every single day of their life. But what does that actually mean in practice? What does digital transformation actually mean in financial services?
Oh, brilliant. Again, digital transformation is not applications, it's not a buzzword. It's actually how money moves and how trust is built and how risk is managed in a scale and real-time lifeline. I sum it up in terms of digital transformation and banking specifically into three main areas. You know, first is the user experience. We're now in an era where the users are changing. The adaptability and usability of users are changing. So the generations to come are very much open and they have more trust in sharing their data, being online. Their usage of digital is higher. Therefore, it's not even a choice not to go digital. When we look at core operations, which is the core digital solutions, and this is where we see technologies like AI enabling new business models and a new mindset of what does banking really mean. Is banking in the future looking at as banking now? We look at the future as banking being the infrastructure, but the actual activities are lifestyle and work streams where banking is the infrastructure to all of that. Last but not least is the technology layer, like introducing new technologies like AI, blockchain, and IoT. All of that will enable a new wave of how trading money or the usage of money will translate in the future. When we talk about unbanked people, and we look at the population, 1.4 billion people are still not banked. And this is where digital transformation or digital can really enable reaching the 1.4 billion and making sure that they are banked to reduce leakage of economy, leakage of opportunities as well. But I want to go a step backwards as well, since we are talking about digital. And yes, it will enable and it will empower a new era of financing and banking. But then we look at where is digital and the investment in digital? If 2.8 billion people now are still off the grid, they don't even have access to internet. Now that's a big challenge. If we're betting on digital transformation to improve our banking solutions and improbability when it comes to the banking system between countries and cross-border, then we need to bridge that gap. And we need to find new ways of investments, bringing in the private sector as well as governments together to make sure that we have a resilient and reliable digital infrastructure that can make sure that we have a future banking that is reliable and trustworthy.
Yeah, infrastructure is absolutely crucial to moving this forward, and you gave some great stats of what the impact that could have once we start getting some real traction there. I'm going to go back over to you, Dr. Doris. this is really around diversification. So beyond oil, how can policymakers actively leverage fintech as a strategic tool for economic diversification? So what type of policy mechanisms can be used to channel fintech innovation towards strengthening critical non-oil sectors like agriculture, SME, et cetera?
All right, thank you very much. So Nigeria is traditionally dependent on oil, monoproduct economy for its FX reserves. And our agricultural produce export has been growing. I think we did roughly about $5 billion. And that's not even scratching the surface of what we can do with the large size of arable land that we have. So if I go sector by sector, I mean, I can explain all of that. Now, we have a population of almost 250 million. 70% of that population is less than 35. That tells you how much fintech adoption that economy is willing to do. Out of 7, now 8 fintechs on the continent, 6 of them are from Nigeria. They are unicorns. That's also how much innovation that we have in the continent. Yet, when you look at the size of our GDP and what is being reported, it's still more like an iceberg effect, where we're seeing on the surface is much smaller than the informal economy that is actually driving the economy of Nigeria. And that's where the fintechs come in. And so far, they've been disrupting the economy and helping to expand the economic activity in that sector. Now, imagine when we bring fintech innovation into the real economy and begin to catalyze the sort of growth that we need, you'll see that the dependence on oil begins to drop. One of the biggest innovations that we saw quite recently was the agri-tech, where we saw the crowdfunding into the agricultural sector. That led to a massive production of food, massive growth in exports, and a massive pooling of funds to fund agriculture. Until that fintech came in, or those fintechs came in to disrupt agriculture, we didn't know what was possible in the agricultural space. Unfortunately, due to lack of or slowness of the regulation to keep pace with them, a lot of them went bust. But I think there's now a resurgence with the new act that was being introduced to support crowdfunding platforms for agri-tech, for example. Now, when you talk about SME growth, if we have fintechs that are disrupting and providing, for example, open banking APIs, invoicing softwares, and applications that SMEs need, then SMEs can actually then focus on their core businesses and scale faster, and then grow from being nano economic contributors to becoming macro and major economic contributors. So they grow faster. Then we look at property tech. We've seen a lot of some fintechs coming in to disrupt the property market, and that is also increasing the size of housing units that we're seeing, and uptake of those housing units. Then regulatory technology, we don't have a lot of that, but those are sort of technologies that can disrupt. And now insurance technology, InsurTech. We just passed the new Insurance Act that allows democratization of insurance and mandatory insurance for households. So we're expecting a lot of fintechs to come in. Now, the fintechs coming in into the real sector actually allows for inclusive growth, and it allows for reach, like we're talking about now. We're talking about public-private partnerships. We need fintechs. Government can't do it alone, like provision of digital infrastructure backbones. Fintechs can come in here to provide such infrastructure to allow for digital inclusivity, like you were mentioning. A lot of people are still unbanked. A lot of people don't have access to the digital infrastructure like the internet. And when that begins to happen, that's when the real skills and the real economy begins to catalyze. That is what's going to contribute to economic diversification beyond oil. And a lot of people, especially like the Kingdom of Saudi Arabia, where we are, they're actively diversifying away from oil, and their non-oil revenue or non-oil GDP is actually growing by their focus on technology, tourism sector, and all of that. And this is the same thing that we're also doing in Nigeria. The creative sector in Nigeria is huge, and we are looking to fintechs to catalyze the growth of that sector. And there's so much that we can do by moving away from oil and shifting our attention to non-oil. So it's a huge economy, a huge population, huge market, waiting for the market or waiting for fintechs to tap into it. And we are really open to having those sort of partnerships come in. Now, government can support by ensuring that we have tax breaks, we have grants, we have sandboxes, regulatory sandboxes, and open and willingness of the government to support especially priority sector-specific fintechs like agriculture, renewable energy, real estate, infrastructure. So we are actually looking for fintechs to disrupt, more like disrupt the economy and show us what sort of value is being hidden under within the iceberg structure, what sort of value we're hiding in the informal economy that we haven't yet explored. We've seen what the fintechs have done in the Nigerian payment system. They are processing more than 58% of the national payments and also bringing in unbanked into the banking system. And it's a huge opportunity for us to actually expand the economy using the fintechs. So I think it's a huge opportunity for Nigeria to disrupt its economy using fintechs.
That's great, and there's a lot of them who are here today, and we can see about where this goes from here. One of the things that was nice was this consistent theme around inclusive growth, and you started giving a few examples of the public-private collaboration. So Dima, I'll come back over to you then. Caroline, you're next. What would make the digital finance opportunity investable at scale if we do this whole public-private thing from your perspective?
Well, first, I would say providing the right infrastructure in terms of the investment infrastructure. And it's very unique, actually, looking at DCO, the Digital Cooperation Organization, where we're exposed to diverse countries. We represent, as of now, 16 member states, Asia, Europe, Africa, and the Middle East, and also 800 million in population. That by itself is an amazing market for any innovators. As Her Excellency mentioned, 70% under the age of 35. That's a pool of innovators. These are the fintechs of the future. Now, providing the right infrastructure for them, not only in their country, but also looking at where are the other opportunities around them. We truly believe that every country has its competitive advantage. That competitive advantage could be a solution for a challenge in another country. And here is where no one size fits all, and looking at where are, providing the data for the innovators, for them to know exactly what challenge can they solve? Second, where can they expand and they can grow? And third, to provide the right financing and funding that can help them in enhancing and growing. And this is where private-public partnerships are very essential to also be disrupted. The old models will not work right now, and we have to innovate even in the way that we're incorporating the private sector in our development plans and how we are supporting and helping either fintechs or other innovators, either technology innovators and others. So here is where as Her Excellency mentioned, the innovators are not going to wait for us. They're faster, and governments need to catch up. To catch up, they need to work hand in hand and disrupt the way that we are we look at investment models.
Caroline, thank you for that, Dima. Given what Dima and Dr. Doris just talked about, I know you are a big proponent of moving faster. You gave some great examples of the Genius Acts and even cross collaboration with the SEC. What are you most excited about from where we go from here, given some of the sentiment moving towards a collaboration, moving quicker model?
It's a really exciting time. It's a very exciting time for the United States, and it's a very exciting time around the world. What really strikes me about the themes that we've been talking about during our session that goes together with trust is partnerships. And so for me, what's most exciting is the opportunity for greater partnerships and collaboration, not only amongst regulatory authorities. So you may have noticed that the turf war is over between the CFTC and the SEC. We are now best of friends, as we have been for decades. But it's also about partnerships and collaboration where, again, America is open for business. We're back. We want to see others come and invest, hire, and build in the United States. Not only that, but we're excited for the opportunities for US companies to partner with others, to explore and enter new markets, to reach these unbanked populations, to promote greater financial inclusion. And so truly through partnerships, I believe we all can achieve a shared economic prosperity. In the United States, the other reason why partnerships is so important is when you think about the diversity of our banking system. Of course, we have the largest banks in the world, but we also have over 3,000 community banks. And these community banks are very much focused on SMEs. They are the lifeblood in our different communities around the United States. You'll see them sponsoring Little League baseball teams in providing that capital for local businesses, for homeowners. And so how are these community banks going to be able to enter this new digital age where we have these advanced digital technologies that are going to help to make the costs come down and be more accessible and again promote greater financial inclusion. So I do believe that's going to be through partnerships for these smaller financial institutions with not only larger financial institutions but with fintechs. And so the investment opportunities are truly at scale, and that's what's most exciting.
I'm so happy you said that because I have the honor of being able to go all over the world and have conversations like this. And to your point on the community banks, I feel like that's one thing, and their roles with SMEs is often missed. But to Dima's points and to Dr. Doris's points, infrastructure is one of the challenges there because they're usually on very old legacy cores, and so it's quite hard to do some of these things. Very exciting. We have time for one more question, so I'll maybe ask it for the group and think about where we're going to go from here. If we take a step back and think about who we have in the room today and who's going to be watching this later, it is the collective ecosystem of money. What should leaders in this room and their teams really think about prioritizing to unlock fintech's role in a more interconnected, more resilient global economy? Maybe Dima, we'll start with you, and then I'd love it for all three of you to answer if you don't mind.
Okay. Well, what comes to mind is what's important is improbability. And I think that, yes, we do have to work on a national scale and provide the right regulations, policies, as well as infrastructure, but it really needs to be aligned with global governance. And here is where the role of the likes of IMF and World Bank and other international organizations comes in to make sure that there is the improbability that can enable technology and fintechs to cross border very easily and to integrate, and therefore it will accelerate the growth. I would say second is inclusion. In everything that we do, we have to look at inclusion. We can't be scaling while emerging markets and other economies are left behind when it comes to the basic human needs, which is connectivity and internet. So we do have to bridge that gap and innovate in new models of financing to make sure that connectivity, which is as important as water and electricity, is a human right, and we provide the right opportunities to citizens. Last but not least, fintechs and digital financing is a core, especially in countries that are going through transformation and countries that are now going out of either political tensions and reconstructing their systems and solutions. Amazing examples like Estonia, like Rwanda, where they bet on technology in their reconstruction, in reconstructing their countries. And now they have accelerated their growth because of that. Last but not least, which is integrity. And I think that we really do need to embed trust and security in everything that we enable, either if it's from a regulatory perspective or the innovators themselves in creating their fintechs in the future.
Amazing. Caroline, did you want to add to that?
Sure. I think one of the most important things for leaders to think about, and this is particularly for the United States, is that we must have our regulatory policy aligned with our industrial policy. And this has been something that's a hallmark of the administration. It's a whole of government approach, but I think nowhere is that contrast more stark than in our US financial regulators, particularly the CFTC and the SEC, where you've seen truly a complete 180 in the approach to industry and in the approach to innovators. Why is this so important? Because we need the expertise and the experience from the industry, from the actual builders, from the innovators to come and engage with us, policymakers, so we can make sure that the regulatory framework that we're designing and implementing is fit for purpose and is future-proofed. So this is why I've been proud to sponsor the CFTC's Global Markets Advisory Committee, which has been a key channel for industry input, but also the SEC now has launched its crypto task force. So this time we want to say, come and talk to us, and we really mean it.
I love that. Any last words, Dr. Doris?
Yeah, the sort of innovations that we're seeing coming from the younger generation tells a whole lot about what these people want. So for the political class, whether it is the global economy, the multilateral agencies, the development finance institutions, or even local political class, I think it's time for us to understand that we are playing catch-up. And if we take advantage of the sort of innovations that we're seeing here, there's a whole lot that we can do, a lot of mileage that we can leverage to catalyze our economies and, of course, see the sort of inclusive growth that we need for both economic stability and political stability. It can go a whole long way if we give the right sort of support, the right sort of incentives, and the right sort of regulation. Thank you.
Thank you. So we have covered a lot during this time. We began by exploring how global institutions can turn complex environments into resilient agility. We've heard the answer lies in clarity of rules. We talked a lot about that. Avoidance of fragmentation, inclusivity of access, and the courage to invest in the infrastructure of trust. If there's one takeaway, the future of finance will not be built in silos. I think that you all agree with that. Thank you so much. All of you have been brilliant. I appreciate your time. Thank you.
Thank you for this very insightful discussion. Ladies and gentlemen, Money 2020 Middle East is more than a conference. It's a heartbeat of the region's financial innovation. Let me give you just a brief about the stages that we have here. So this is the Executive Summit, where global strategy meets financial leadership. Then we also have the Capital Stage, where investors, startups, and industry leaders come together to explore partnership strategies. We also have the Off-the-Record Stage, which is a private space for senior professionals to tackle challenges like regulatory pressures, global expansions, and also emerging AI solutions. We have the Pulse Stage. There we can find rapid-fire sessions delivering sharp insights on emerging trends, regional market shifts, and digital innovation. The Next Gen Money keynotes and discussions on digital transformations are happening there. And then we have the Bridge panel discussions, presentations that explore how fintech is breaking down barriers and driving sustainability. Ladies and gentlemen, our next session is titled Reimagining Global Energy in a Digital Financial Future. We will explore how energy leaders are leveraging technology, capital markets, and financial innovations to drive sustainable growth, from advancing carbon-neutral strategies to unlocking new investment opportunities. Together, let's welcome to the stage Mr. Ziad Tamara Al-Murshid, the Executive Vice President and Chief Financial Officer of Aramco.
Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, it's my honor to be with you at Money 2020 for the first ever Middle East edition right here in Riyadh. And it is a great pleasure to share the stage this week with so many distinguished leaders. The world of energy has always been at the cutting edge of progress. But now it is moving at speeds none of us has seen before, accelerated by a digital revolution and led by breakthroughs in artificial intelligence. Needless to say, this revolution is disrupting all sectors, and for energy, this disruption is amplified. On one hand, the digital revolution is bringing substantial growth in energy demand. AI and digital centers will be responsible for about 20% of total world electricity demand growth between now and 2030. Demand from data centers and AI in 2024 was around 1,000 terawatt hours, which is about the total electricity demand of Japan today. Demand in 2030 is expected to be over 2,000 terawatt hours, which is about the total power demand of India today. On the other hand, this same revolution that will substantially contribute to the growth in demand is also going to enable the energy sector to avail more energy supply. The sector wasted no time in harnessing digital technology and AI to make operations more efficient, safe, and reliable. And more value is still there for the industry to extract as energy producers embrace change and create the tools and skills necessary for the digital economy. There are many areas and use cases where this value can be generated. In the oil and gas sector, the largest value potential is actually in operations. And within operations, the largest value potential is in the subsurface in the oil and gas reservoirs. Applying AI in this field has the potential to massively increase the capability to find more oil and gas and reduce development costs, and to increase recovery rates so that more of the found oil and gas is produced. This is where the AI revolution is enabling the energy industry to increase supply to help meet the energy demand that the AI revolution itself is increasing substantially. But generating this value is data intensive and requires massive computing power. In the energy industry, especially in oil and gas, this requires massive investments in subsurface data acquisition and supercomputing power. It also requires investments in the oil and gas wells to install technologies that enable the actual optimization. These investments are so large that relatively few industry players can justify making them, mainly players that have sole access to large oil and gas reserves in order to be able to optimize them. Without sole access, optimization of a reservoir is not possible because neighboring producers would be drawing from the same reservoirs at maximum rates, which is why the required massive investments in technology is not justified for any single producer among a group of producers that are accessing the same reservoir. This is why sole operators have higher potential to extract higher value and capture this higher value from applying AI tools to the subsurface. Now, being the sole operator of some of the world's largest reservoirs, Aramco is at the forefront of the new digital revolution. Today, we are positioned to advance the latest technology because we have been capturing the data and building the digital infrastructure required to embrace this revolution. We have more than 90 years of proprietary data from our extensive geological, seismic, and process surveys. And every day we collect information from about 10 billion data points across our facilities, which goes straight to our engineering centers. We operate a diverse set of supercomputers, including the MAM7, which is one of the largest in the region, and a number of NVIDIA superpods, all which help us create, train, and run AI models. We also understand the people and skills required to meet the challenge our artificial intelligence provides. You know, our artificial intelligence is only as good as our human intelligence. We employ hundreds of data scientists and other digital experts. And we, of course, employ engineers, geophysicists, and other technical people as well. These teams have distinct skill sets, and they are working closely together, literally in the same location, to develop the right fit-for-purpose solutions for us, ensuring we maximize the benefits of AI applications. So with big data, digital infrastructure, and talent, AI is taking us into a new world of opportunities in terms of energy production and supply. And they increasingly help us to deliver every bit of energy with the lowest possible cost while continuing to lower emissions. Our AI models are analyzing drilling plans and geological data to recommend the best options for our engineers. Once, this would take weeks or months, but not now. Digital technology is also helping us conduct autonomous drilling operations, reinforcing our ability to continue producing lower-cost barrels and being one of the lowest upstream carbon intensity producers of hydrocarbon products among our peers. It can also help us operate more safely by allowing us to predict the future health of our equipment and minimize failures before they happen, which means it is improving safety and reliability of our operations. Last year, we announced the launch of our own industrial large language model, trained on decades of Aramco data. This is proprietary Aramco data. We believe it will significantly boost our productivity and transform the way we work. These and many other digital use cases contributed to $4 billion in technology realized value we saw as a company in last year in 2024. More than half of this was due to digital and AI solutions. Now, this is for 1 year only, and with the resources we have today. As the timescale for this revolution is measured in nanoseconds, imagine what we will be able to do tomorrow. As a matter of fact, imagine what we will be able to do with the artificial general intelligence models in the near future. Now, of course, getting there speaks to the spirit of this conference. How do we continue to finance this revolution and its coming growth? Money 2020 is a place where finance professionals are considering this global scale challenge and can help enable some solutions. Today, energy, digital technology, and finance are converging in ways that we think will shape the future and the future of the world for generations. Ladies and gentlemen, there's a quote attributed to the great American car maker Henry Ford. It is claimed he once said, "If I had asked people what they wanted, they would have said faster horses." But he did not ask, he innovated. He used technology and took a great leap forward. This is why we are not simply asking our businesses as potential users of AI to generate use cases and submit them to AI specialists. They will certainly keep asking for faster horses. Instead, we are co-locating our AI specialists with our operations teams and our finance teams so that together they come up with solutions. Teams that run businesses know what they need, and AI specialists know what is possible. Together, they can create much more useful tools to take value creation to the next level. To make sure we are fully seizing this transformation opportunity, we must rethink how we operate our businesses, how we design our operating models, how we develop and upskill our talent, and ultimately, how we meet the energy needs of a new digital era, where we must match growing energy demand with sufficient supply. Yes, the pace of challenge is rapid. Yes, it can feel daunting. And yes, those who fail to adapt will be left behind. But the rewards that come with accepting this journey are monumental and enormously exciting. Thank you.
Aramco is indeed at the forefront of the new digital revolution and in innovation. Thank you very much, Mr. Ziad, for being with us today at Money 2020 Middle East and sharing these very important insights. We know that Tamara is one of Saudi Arabia's leading fintech success stories. We're talking about a company that has built its reputation by putting trust at the very center of its growth. In this session, titled The Currency of Trust, Why Finance Runs on More Than Money, we're going to explore how trust became the foundation of Tamara's rise, how it can be a catalyst for business success, and why being trust first positions Saudi Arabia to shape the future of global finance in the digital age. Please join me in welcoming Mr. Abdul Majid Al-Seikhan, the co-founder and the CEO of Tamara.
Assalamu alaikum. Jazakum Allah bil khair. Good afternoon, Money 2020. In September of 2020, 5 years ago today, we launched Tamara. The vision was always clear: to build a company that outlasts ourselves, that touches millions of people. And to do that, the foundation had to be right. So we built it on 3 principles: trust, simplicity, and ubiquity. Today, I only have 20 minutes, so I'm going to focus on the most important one: trust. Imagine a world without trust, where you don't trust anybody around you. Society collapses. It doesn't work. In fact, we take trust unconsciously for granted. But it's hard work. Let me give you a personal story. You see, on June 12th of this year, I became a father for a baby boy. We named him Nahar. And as many of you know, when this thing happened, something switched on. That night, my wife and I had to trust a team of strangers to deliver our baby to the world safely. And then it dawned on me, we have to do that more often than we would like. With his schooling, upbringing, and a lot along the way. In fact, the modern world runs on trust more than ever before in human history. So let me ask you this. How many of you have shopped online last week? Probably many as well who didn't raise their hands. You see, when you buy online, you don't meet the seller. Did you meet the seller? You went browsing, and then you didn't touch the product. You just selected the product. Not a long time ago, the only way to shop was to go to physical stores, to touch the product, to test it, to feel it, and then go to a cashier and give him cash. We did not need a lot of trust in that system. Compare this to shopping online, where 91% of Saudis do shop online. You basically browse again and just shop, and you click buy, and the world synchronizes. Payments, fraud check, delivery, logistics, and a lot more. Think about it. That is trust at work. This is why at Tamara, trust is at the center of everything we do. It is our invisible glue. Tamara today sits at the heart of a massive trust ecosystem. From regulators to investors, merchants, customers, and much more. And to deliver for this ecosystem, we built the company with 3 promises: credible, capable, and connected. So let's go deeper in each one of them. Credibility in fintech is mainly developed in two ways: regulator licensing and investors, and major investors backing. So let me tell you the story with the regulator. As you can see in the graph, Tamara was granted an access to the sandbox environment in 2020. With limited resources and capital, we were able to be trusted, which gave us the means for customers and merchants to have faith in our service. And then in 2023, SAMA granted us the first buy now, pay later permit in Saudi. And then 5 years into the business under SAMA, we were the first fintech company to receive the full consumer finance license. That is, thank you. That is a lot of work. Such a license is not a trophy, believe me. It's a daily call to act with clarity and care. Trust, as you can see, takes time to build. But we are lucky to have a regulator that allowed us to start small and build up with them with time. Investors as well judged us on the same standards, results. In early 2022, Sanabil, one of the leading VCs in the world, led our Series A and invested, which was $100 million at the time. And then, after some time, trusting us more, they co-led our Series C with SMB Capital, and together invested more than $300 million. That's the equity story. But let me tell you a more critical one, the debt story. As many of you know in finance, that people are risk averse. Gaining trust is critical. In 2023, Goldman Sachs, the largest investment bank in the world, extended the first of its kind in the region, a $400 million asset-backed facility. That was huge at the time. And then, as many of you know, today we just announced a $2.4 billion, the largest of its kind in the region. And we welcomed new partners, Citi and Apollo. These are really big names in capital markets, and we're very proud to have them as partners. This is our credibility in full view, a license to operate and funded to scale. But you know, great products don't build great companies. Great people do. So we lead with two: hiring the best and building the best. I personally lead our key hires end to end. I consider myself the chief hiring officer. In fact, every leader in Tamara is expected to go meet and recruit the best. It's part of their job and mandate. Our chief risk officer and our chief technology officer, both of them took me almost 2 years from the first meeting until their first day at Tamara. It takes time to find good talent, and it takes longer to convince them. The fact is, for the most important hires, patience is a strategy. But we don't only hire the best, we build the best. But when it comes to building the best, capability is not assumed, it's developed. That's why we launched our Builders program, a very dear program to my heart. This program is to fast-track ambitious Saudis into real responsibilities, pairing them with mentorship and missions that matter. Last year alone, we received 11.7 thousand applicants who competed to join. Only 30 were accepted. That is less than 0.2% acceptance rate. One example of this program is Hashim, who sits here in the audience. I'll give you a story about Hashim. I met Hashim a year ago in a conference, and he was 18. And I was impressed by his knowledge and deep interest to build things. He read way more books than I was like in my entire life at 18 into how to build a business. That's passion. And I immediately knew he's a builder. And from that moment, we started the recruiting process. Today, Hashim is a product manager at Tamara, leading clear KPIs with real responsibilities. Hashim reminds me that talent is not defined by age. It's defined by ambition and courage to deliver. At Tamara, we chose two things that are radical in finance. Trust first and don't penalize, empathize. Let me tell you about trust first. We give people the benefit of the doubt. When I started Tamara, people doubted that people will pay us back. I absolutely believed people will pay us back. I remember when I was younger and needed credit, it wasn't about my credibility, my values, or my history of paying people back. I went to the banks and I had to prove myself. I needed the right income, the right job, at the right company. If you didn't fit that box, credit stayed closed. It didn't matter how responsible you were. Access went to the people that the system coined trustworthy. That experience stayed with me. A credit shouldn't be that far out of reach. It should rest on one thing: trust first. For 21% of our customers, we're not just another payment method. We are their first experience with responsible credit. Even if they are new to credit or don't have the long history, we build trust with them step by step, giving them increasing increments as our trust grows together. But connecting with customers isn't just about giving them credit. It's more than that. It's how we respond when things go wrong. As you can see, we don't penalize. We empathize. Where others profit from confusion, hidden fees, and penalties, we chose transparency. What you see is what you get. We don't take that trust lightly. We listen. Every non-5-star review is immediately flagged in our channels and discussed openly. Every week, the leadership team, more than 40 people, we sit with our customer care team, with a real agent, listening to real voices and hearing real concerns. In such shadowing sessions, we have open discussions on case-by-case basis. That helps us shape the future of our product roadmap, because it's not just about data for us, it's also about empathy. In 2023, when customers raised concerns about late fees, we didn't just take note, we acted. We made the bold decision to remove them entirely, something that represented at the time more than 20% of our top line. Believe me, that was a very difficult decision. But we believed that taking away that doubt mattered more in the longer term than a short-term win. Because at Tamara, customer care isn't a cost center. It is the heartbeat of our company. It is how we connect, how we learn, and how we build trust that lasts. And trust has paid off. 4 out of 10 people in Saudi and UAE are registered with Tamara today. And more than 90% of our business is generated through existing customers, repeat customers, those who trust us and keep coming back. We have also processed to date more than 50 billion riyal in less than 5 years, powering more than 80,000 merchants. And something I'm very proud of, 30,000 of them are female entrepreneurs. And we've also partnered with global brands like Apple, Amazon, Shein, IKEA, and many other local brands like Jarir and Noon. All of that with less than 1% default rate. Thank you. At the start of this keynote, I asked you to imagine a world without trust. And for the last 5 years, we have been building trust as our most valuable currency. But let me leave you with one last story. Last year, I appeared on Mdefer show. Many of you know Mdefer. It's one of the most well-known shows in Saudi. And he asked me whether would Tamara one day offer home loans. And without hesitation, I said, of course, inshallah. Because our vision was always there. We wanted to grow with our customer, serving all their needs. The next day, at our care center, chaos. People calling, asking for home loans, car loans, all sorts of loans. And one caller's story stood out. And the team took her permission to share it with the entire company. Her name is Maryam. She's a teacher. She said she had never used Tamara herself, which was very interesting. but she loved Tamara. And then she explained why. She saw firsthand the impact of Tamara on her community, especially teachers, how Tamara enabled them to smoothen their expenses for Eid and make their families and kids happy without the debt trap. To her, Tamara wasn't just a fintech company. It was someone who her community trusted, and it delivered for them. Maryam, like many, has bigger needs and bigger dreams and expect more from Tamara. Therefore, as we step into chapter 2 of our journey at Tamara, Maryam's story and millions like hers reminded me of what we're really building. Because at Tamara, we're in the business of helping people own their dreams. Thank you. Shukran.
Building trust is a great trajectory, definitely, to achieve a long-lasting relationship with customers. Thank you very much, Mr. Abdul Majid, for being here and for your very invaluable participation in Money 2020 Middle East. Your Highnesses, Excellencies, ladies and gentlemen, esteemed guests, I, Tagreed Al-Huwaish, have been your MC for the first part of this rich agenda and amazing program. And now I'm going to hand over to MC and host Sasha Qadri, who will take you through the rest of this exciting conference agenda. Thank you very much.
Tagreed, thank you very much. And please can we show our appreciation for what a wonderful job Tagreed has done opening the opening ceremony of Money 2020. Thank you, Tagreed. Assalamu alaikum, hello and welcome. As Tagreed said, I'm Sasha Qadri. I'm delighted to be your MC and have the pleasure of your company here at the Executive Summit stage on this Money 2020 Middle East journey that we're all going to take together. Well, what an opening ceremony we have had. It has really set the bar high for the next 3 days. But I can assure you that you will not be disappointed by what we have coming up. We have a packed agenda of inspiring content. And by that, I mean you'll be hearing from leaders pushing boundaries, innovators challenging the status quo, and visionaries showing us what's next. So let's continue with the program. Next, we have a fireside chat on scaling digital assets, safe, connected, and ready for the real world. It's my great pleasure to welcome to the stage Tom Jacques, Chief Innovation Officer at Swift, and Serena Sebastiani, Senior Director, PwC Middle East, Virtual Assets Consulting Lead, FinTech, Assets and Wealth Management. Please welcome them to the stage.
Hello, assalamu alaikum. Assalamu alaikum, everyone. Thank you for being here this afternoon. It's a very interesting, hopefully, fire chat. A bit unusual because it's very rare to see digital asset as a word, as a concept, linked to Swift. That is a company that we usually imagine as the core of the traditional infrastructure and financial sector infrastructure messaging. So thank you very much to Tom Schultz to be here with us this afternoon. He's the Chief Innovation Officer at Swift. And I hope we'll we'll all understand what SWIFT is doing in this space, and we'll make it a bit interesting for our audience. Tom, there are so many. Obviously, digital interest in digital asset is rising globally. We have more than 130 countries looking at CBDC now. Until 2 years ago, there were 80, 86. You are doing a lot of work on CBDC. We see tokenized assets, so all the big institutions very interested, and jurisdictions that now have actual digital asset regulations. So 60 jurisdictions around the world now have a bespoke regional digital asset regulations, and 35 have adopted their traditional financial sector regulation to digital assets. So becoming really institutional. Space for SWIFT to operate. What are you doing? Can you give us a bit of an overview of the Innovation Lab and what you lead in digital asset terms?
Absolutely, and it's great to be here, and I hope by the end of this session you have a better insight in terms of how we're thinking about digital assets and kind of moving from, kind of our traditional space, which is still very important to the marketplace, but how we're getting ready for the future. And I'm thrilled to be here, and I'm thrilled to meet everybody in this conference and talk about what we're doing, because I think it's a pretty exciting time, and I think the pace at which we're moving right now is really kind of unseen in the past. And so we have this kind of really important balance of kind of embracing the future and figuring out what we can do to help our financial institutions, our banks, what we call the members in our community, and at the same time, move trillions of dollars every day cross-border for our customers and in a very kind of safe and secure way. So even though it might not be well known here, we've been working on digital assets and started with CBDCs for almost 4 years now. And some of that work we've published more broadly in terms of the CBDC reports, in terms of what our intention was. We did some work on tokenized assets, and let me just highlight a couple of points here. It's really anchored on interoperability, the ability to connect networks together. And SWIFT turned 50 years old last year, so that's what we do. We provide interoperability between domestic payment systems, for example, payment rails, other parts of market infrastructure, central banks. That kind of connectivity is what we do. And so the way that we're looking at this is we're not changing what we are or what we do. What we're doing is trying to figure out how do we embrace that and how do we help our community as new forms of value are created. And we are agnostic in terms of the forms of value. It has to be legal tender. It has to be real money. So whether it's a CBDC, a tokenized bank deposit, a stable coin, that's denominated in US dollar or something else, we're customer driven. And we found that the right place to be is interoperability. And we're going to get to this point, but when we talk about scaling digital assets, it's actually the same of what we've been doing up to now in terms of the scale with fiat currencies. You need standards, you need trust, you need governance, you need interoperability, you need legal enforceable rule books that can actually connect countries and payment rails together.
It's estimated that CBDC and stablecoin together currently represent $240 billion of market globally as of now. What is the contribution that SWIFT sees in the very near future to actually achieve larger scale? And what are actual real life implementation, actual use cases that you're implementing right now?
Yeah, it's a good point, because I think the fatigue is set in on kind of experimentation and proof of concepts and trying to learn things. It doesn't mean that we have all the answers, but what we see in the institutional world, and this is certainly in other parts of the world, is they're looking to really kind of scale up what they have. So the numbers might be small now, and the stablecoin numbers are kind of impressive in one way, but they're just a fraction of the overall global finance in the other way. I would broaden that out, because we see financial institutions and banks, for example, in the US, and whether that's in cross-border payments or that's in custodial services or asset managers or tokenized assets. You know, BlackRock has over $12 trillion under management. They now have 25 billion that are available and tokenized, which can be passed around. Right, so it's not. I don't think it's about any particular asset, a stablecoin versus a CBDC. I think they're all coming, and they're all on the way. And I don't think it's going to happen tomorrow, but we need to get ready for it, and we need to anchor it on things that we know how to do. If we want to achieve scale, we have to do it in a pragmatic way, and we're in no way suggesting that there shouldn't be changes to how money moves cross-border. There's lots of innovation in that, but it has to be anchored on regulatory stability. It has to include compliance from day one. It has to be done in a standardized way, so if somebody creates a new digital network, it's not done in isolation. You know, we did a report a few months back with The Economist, and just if you look at fragmentation, where systems don't actually speak to each other, you know, that could impact up to 6% of the global GDP just from the friction and the costs that go along with that. So even though the numbers are small, the ability to scale is there. And if we don't get that right, we have the opportunity to kind of, you know, make the mistakes of the past and have kind of the friction points that we've all worked so hard to get by and to alleviate in the last kind of 5, 10, and 15 years.
I agree with you, right? It's not about being CBDC or tokenized asset or stablecoin. It's about how we move money and how actually money is transformed into a digital asset eventually. So SWIFT is also quite present in the Middle East, obviously, as a global player. And what are you actually doing in this space in the Middle East? And I'm curious to know about something. So Saudi Arabia is working a lot on focusing a lot on innovation, innovation labs, fintech labs, Web3 labs. Are you planning something out of Saudi Arabia to bring some specific use cases in production as part of your innovation
I'll have
lab?
to stop short of making a major announcement today because we're not ready to do that. But what I can tell you is that I have full support from our executive team and our board, because GCC and the activities that are happening here are noticeable, and we want to be part of that. We want to be part of the solution. We want to be the ones that help bring all the things, again, that you've kind of known and trusted SWIFT for, in terms of, you know, compliance, in terms of the ability to scale, in terms of integrated workflow into the back offices, whether it's a central bank or a commercial bank or a fintech. And so we don't have anything specific. I'll tell you what I think is super interesting is with GCC and Saudi Arabia here is one is just the kind of location here in terms of being a gateway to other parts of the world, whether that's to India and to Africa, you know, east and west. I mean, it's literally right in the middle of everything.
And time difference, right?
Time difference.
The US versus Asia and being just
supply chain.
Indeed.
Supply chain, trade finance. You know, we've seen reports before where up to almost 50% of cross-border payments that come across SWIFT, which are large wholesale payments, up to almost 50% of those are driven by trade finance. So we need to be involved in that. We don't have all the answers, but we need to be able to reach out to our institutions, to the people who regulate them, to the central banks to figure out how are we going to take advantage of these new assets and kind of deliver the promise that's kind of been given. And I think the opportunity is here, and I think the time is now.
So it's just to see the catalyst for stable coins and digital money.
Yeah, I mean, I think so. I mean, you feel kind of the energy here. You see the kind of experimentation. You see the progress that's been made. You know, we make the point about, you know, we're agnostic in terms of the type of asset. You know, I look at in the UAE, they've actually deployed all three, right? They have a CBDC, they have tokenized bank deposits, and they have a stable coin. And they've placed those kind of, you know, where it makes most sense and for the sector and for the part of the community where they can get the most benefit. I'm not suggesting that they're the only ones. I'm not suggesting that that's the blueprint for the world, but I think it's a really good indication on how things are going to move forward here, because all those different instruments can be applied in different ways, and they need to be applied in ways that actually solve real problems. You know, nobody's looking to kind of do something with, you know, newer technology that doesn't actually really kind of move the needle in terms of how things are done.
And it's not only CBDC, right? The UAE has been pioneering stablecoins regulation as well. The central bank has issued a payment token regulatory framework to allow one of the first, actually, local currency stable coin, the UAE dirham stable coin. So I think we'll see a lot of that domestically, but also, you know, in trade finance and the examples you were mentioning.
And the other side of that, right? Because if you look at what's happening in the U.S. with the change of the administration, but also with the new legislation, both starting with the stable coins and upcoming with the Crypto Infrastructure Act, which is not very well named. But you look at what's happening there, it's always something happens in one part of the world, and there's kind of a reaction in another place, right? So I would imagine something like dollar stable coins, maybe for remittances here, you know, could be a big deal, right? So it's never about kind of one jurisdiction or one product. It's really like, how do those come together? And I think the other thing that's really interesting to watch at this point is how there's a lot of talk about an individual transaction, a tokenized bond, or a building for a real estate asset, or maybe for infrastructure. But I think where it gets really interesting is when we start to orchestrate those, right? If you had in the trade finance example, if you have an electronic or a tokenized bill of lading, that turns into an invoice that's paid with a tokenized deposit, and then you can incorporate and orchestrate in that the foreign exchange. That takes all kinds of risk out. That takes all kinds of frictions out. That takes all kinds of jumps out. And so I think we're seeing real traction. We're seeing people do really real things with these assets. But what I would say is keep an eye on how these get orchestrated and put together, because not only is it the assets themselves, but it gets powerful when they actually orchestrate together, again, in a trusted and compliant way.
It's about scaling the ecosystem, right, and introducing new cases into production in a wider interoperable ecosystem. We can tokenize all the assets we want, but if we don't have a digital currency to exchange these assets,
and you don't have the trust,
Indeed.
And you don't have the interoperability, you know, and. So that's why we're very optimistic about our point and how we can help.
Agreed. And what would you need in a company like Swift, right? What would you need to actually really support the digital asset to scale up, to enhance your presence, to connect with all other institutions, companies, governments, and really enable and support this interoperability? What would be your ask and expectations? And we have regulators here in the audience today, and this is actually sponsored by our regulators. So what is the ask of a company like Swift?
So breaking into two things, some of which what we need, we already have. So regulatory clarity and this public-private partnerships, they already exist here. That's not true in every part of the world, but in Saudi Arabia and GCC, that exists, and that's a huge hurdle because we have legal clarity, we have regulatory clarity, we know what the asset is and what it's not. That's actually coming to fruition in the US as well. The second thing we really need is we need real use cases to solve, right? We're not running innovation theater. We don't want to just kind of experiment and show technical feasibility of a blockchain. What we need to do is be able to kind of work across our community with banks, with fintechs, with the regulators and say, this is what we intend to do. And when that's done, we can all see the value in that, because that's the only way you're going to get investment in these things.
Would that be a pilot? Would that be a sandbox? But at least something that really enables the community to get together, the ecosystem to get together, and test, actually test real use cases, so that don't stay only on paper, right?
Yeah, and Swift has that convening power. Even up to 4 years ago, we brought together 42 central banks, commercial banks, market infrastructures to look at how CBDCs would operate and look at real use cases. So we want to take advantage of our convening power. And we want to solve real problems, and we want to help find the promise of what we have been hearing for a long time with digital assets.
I think, sometimes we always say that regulation and new regulatory framework should be proactive. In this specific case, in the digital asset world, and how the financial sector is evolving and innovating, I actually think should be more reactive than proactive, right? So reactive to institutions and to actual innovative use cases that come up, observe, and then react with appropriate regulatory frameworks that enable the ecosystem instead of blocking
the
it.
other way around. Yeah, I completely agree.
Yeah, and one for the audience. So let's spice it up a bit with the competition question. What is the other company, other than Swift, obviously, that you would place, the podium of digital asset innovation and really enabling digital asset to scale up in the Middle East and globally?
It's a really good question. I'm not sure anybody's quite there yet. We see good momentum in a lot of different places. I also think there's, we're going to live in a multi-chain, multi-payment rail world forever. And those are going to have to interoperate and work together. So, I think there's some people making really good progress. Some of the big banks, JP Morgan's done some really interesting work. Citibank's done some really interesting work. BNP and SocGen have done really interesting work in that area. But then also the retails, and there's almost an announcement every week on something that's substantial with somebody really stepping into their space. So, there's always going to be more than one way to do things. That's good for the market. We want a big part on the most impactful ones.
Right, thank you. And just last to close, what is the one thing that would you hold the key at Swift, and could you do anything? What is that one thing that you would do tomorrow in digital asset space to enable Swift to scale up and to contribute to the scale up in the Middle East?
So,
one thing.
One thing, I think the one thing that we could do is to figure out how we can step into the whole digital asset space in a meaningful way and move beyond what we've done really well for 50 years and position ourselves for the most important use cases. And again, I think it's going to be about orchestration across multiple assets. That's going to go across multiple jurisdictions. That's going to be in different currencies. And that's going to be a tremendous payback for all the countries and the businesses that are involved in that.
Embedded cross borders.
Indeed.
Indeed. Thank you, Tom.
Thank you so
very
much.
And thank you, everybody. Yes.
Thank you so much, Tom and Serena. So interesting to hear about that traction in digital assets and how to achieve scale. We are going to continue to look into the future of finance now as intelligent automation transforms the industry. Leading institutions must rethink how they manage vast data flows and agile algorithms. Our next session will look at what's powering AI in trading, compliance, and customer experience. Please welcome to the stage Mohammed Ramin, Group Chief Data Officer at Standard Chartered Bank, for his keynote on Inside the AI Supercycle.
Well, thank you for that introduction. Assalamu alaikum, rahmatullahi wa barakatuh, and good afternoon, Riyadh. I want to start with a question. My question is, have you ever heard the phrase, I love you with all my mind? No. No one's heard that phrase. But have you heard the phrase, I love you with all my heart? Hands up. We have, right? Now, before we talk about artificial intelligence, it's important to understand human intelligence. Now, what is human intelligence? Most people think human intelligence comes from the mind. Actually, a lot of it comes from the heart. So at Standard Chartered Bank, we are rewriting the narrative to think about AI as a partner to the human. And it's all about heart intelligence, right? Heart intelligence. So, let's start the conversation today. Now, when we talk about the AI supercycle, I want to start with a question. Life is about what? The journey or the destination? Life is about the journey, but AI gives you the destination. Why? It gives you the answer straight away. You lose that growth. You lose that ability to go through that journey, which is very important. I'll ask another question. How many people have written a book about themselves? Hands up. Nobody. Who's written their own CV? You've all written your CV? Yeah. And what do you know about writing a CV? It's painful. You've got to take a lot of time. You have to check everything, but what happens at the end? You learn and grow. Now, what happens if you use AI to write that CV? You lose that whole growth phase. So think back. It's all about heart intelligence. It's all about going through that journey, not losing that. So, the journey of AI. There's 4 stages of AI. Machine learning, followed by generative AI, agentic AI, which is really the talk of 2025, and physical AI, the next phase, right? Where are we today? As an industry, we're probably between Gen AI and agentic AI. Now, what's that doing? In the past, when we had machine learning, you'd only have a small group of people who could write and develop AI. But now with generative AI and agentic AI, we can all use AI. End users can interact with AI. That's what's changing. So how is this evolving? Let's talk in stages. Stage 1, narrow AI. What is narrow AI? Narrow AI is when AI can perform one task at one time in one domain, right? It's specialized and it's limited. So what do I mean by that? You have ChatGPT or you have a driverless car, right? Autonomous car. ChatGPT cannot drive your car. That driverless car cannot do the role of ChatGPT. Yes? It's either or. Does it require training? Yes, a lot of training. That's narrow AI. It's pretty much how people think about AI today. Stage 2 is what we call artificial general intelligence, or AGI, where AI can multitask. It has human-like intelligence. Think about it, human-like intelligence. You have ChatGPT and driverless car. It can do both. Now, as a human being, let me ask you a question. You can drive a car, yes? You can cook your dinner, yes? You can brush your teeth. You can walk. You can do multi-things. You're multi-domain. When it comes to AGI, AI becomes like that. It can be like a human, right? Does it require training? Not as much anymore. Final phase is where what we call super intelligence, right? Where AI is beyond human capacity. Think about a new iPhone being released every 6 weeks. Mind-blowing, right? Mind-blowing. Why is that mind-blowing? Let me explain. When you get a new iPhone, how long does it take you to understand the features? 5 weeks, 6 weeks? So the human being is catching up and learning about the product. Now imagine there's a new iPhone every 6 weeks. What would you do? The human would not be able to keep up with AI. So this is super intelligence where AI is moving faster than humans can keep up. So let me ask a question. Where do you think we are today? Hands up if you think we're at narrow AI. Hands up? Hands up. Okay. How many of you think we're in the middle? Artificial general intelligence. And how many think we're all the way to super intelligence? Okay. We have a couple. We're probably at the middle. We're close to AGI. Probably another 1 or 2 years away, but we're very close. And this is where we need to think about the impact of AI. AI is the third growth technology of our era. We had PC, mobile, and now AI. AI has the potential to outperform mobile and PC in terms of the growth trajectory impact. So where is AI taking us? Now, I want to explain this in two ways. The first way is by explaining to you how a human learns. When you're very young, you go to school. And what do you learn at school? You learn how to count, you learn how to read, you learn about shapes, triangles, squares, circles. You learn generic subjects. And then when you get older, what happens? You specialize. And then once you specialize in higher education, what happens next? You go into professional training, you get a job. How long do you think that training takes? 20 years, 30 years, 40 years. Now flip to the bottom of AI. Have a look at AI at the bottom. AI does this in a few months. Imagine your education, your learning, some of you are PhDs, some of you are masters, some of you are undergrad, bachelorate degrees, and you have professional training. You take decades, AI takes months. That's the difference, right? So how does AI train? You have something called pre-training, where the model gets trained, whether it's through ChatGPT, Anthropic, whether it's through Gemini, Google. Then after that, after pre-training, you have something called fine-tuning. What is fine-tuning? You fine-tune the model to customize it with your data, right? And then finally, you have prompting. What is prompting? You ask a question. That whole process takes a few months, whereas our education, our learning used to take decades. So if we think about the AI supercycle, this is where it's taking us, taking decades of work and compartmentalizing it into months and potentially weeks. So the industry is moving very fast. But what's going to happen to the way we think about technology? You're all users of AI, yes? You'll use AI. Now, let me ask you a question. One important big change I want you to think about. One big change. How many of you have more than 20 apps on your phone? More than 20 apps? Yeah? You should all put your hand up. You know, I landed in Riyadh yesterday. From yesterday to today, I've downloaded 5 apps, including the event app, right? So we're adding apps all the time. So what's the big change AI is going to make from an end user perspective when it comes to technology? Think about one app as an interface to all your apps. Think about that. So imagine today, if you want to book an Uber, you go into Uber. If you want to transfer money, you go to your bank app. If you want to upload a photo to social media, you log into Instagram, Facebook, whatever you use. You log into different apps. Imagine having one app that interacts with all the apps, right? It's what we call a natural UI. Natural UI. So you log in, you say, please transfer 50 Riyal to my mother. Please upload my photo on Instagram, and please book me an Uber to the airport in one app through a natural UI. This is how quickly the industry is moving, okay? Now, we have a few more topics to discuss. So the next one is, what skills do we need when it comes to this space? Skill number 1 is what we call prompting. How many of you are familiar with the word prompting? Most of us, right? So what is prompt? Prompt is when you ask the question in a specific way. When I met with my friend, who's the CEO of a company, he asked ChatGPT this question: how do I write a business strategy? Do you think that's good enough? No. What should he ask? He should provide context. I run a pharmaceutical firm. My pharmaceutical company is based in Riyadh. The demographic that I support is this population, under 18s. This is a type of drug. Please write me a strategy, right? You have to be very specific. So one of the future skills will be prompting. The other one is individual accountability. You are accountable, not the machine. Here is another example from my friend who works in an insurance company. And he wrote an email summarized by Microsoft Copilot. And it was written like this: money laundering is not important to me. Imagine writing that. Money laundering is not important to me. Makes you laugh, doesn't it? But here's the thing. Money laundering was important to him, but the email was summarized by Copilot. You can't blame Copilot. You can't blame ChatGPT. You are accountable, right? Now, the next one. From human in the loop to human in command. Everyone in the industry talks about this concept of human in the loop. Have you heard of human in the loop? Hands up. Hands up. Human in the loop, right? What does human in the loop mean? Human in the loop means AI is in charge, you are in the loop. Correct? That's the indication. However, we're changing the narrative to human in command, right? So even when it comes to prompting, we're renaming some of these from prompting to commanding, right? It's important because it's important to understand that you are in charge of AI, right? It's a good partner, but you're in charge. So you're not prompting, you're commanding. It's human in command. It's really important. I'll give you another example. How many of you have been to a wedding or received a wedding invite? And on the wedding invite, it says, select a +1. Yeah? Select a +1. Now imagine you selected your friend, but your friend that you invited to that wedding embarrassed you. Why? Because they were a bit rowdy, they weren't well behaved, they ate all the food. How would you feel? You'd feel embarrassed. AI is the same. AI is your +1 that you're taking not to a wedding, everywhere you go. So if AI does something and you use that to make a decision and you're not happy with it, you're the one that's embarrassed. But if AI does something and it's amazing and you present it, then you should be the one feeling proud. So AI is your +1 that you take to not to a wedding, but everywhere you go. That sits in your pocket. Now, the next skill is the most important one that I want to talk to you about. Human super intelligence. What is this? Do you remember I spoke earlier about ASI, artificial superintelligence, where AI can be multi-domain. Multi-domain. We now need to live in a world where humans can operate in a multi-domain. I spoke to my friend, who's a language translator. Now, that's a job, you can imagine, won't last very long, right? Because of AI. And I said to him, you don't need to worry, because what you need to focus on is learning many skills. Not being a master of one, not being a jack of all trades, but you need to start being a master of 3, 4, 5 topics. If humans want to evolve and humans want to interact with AI, we need to be able to become masters in more than one subject. And now with AI we can, because we can learn faster, right? You can learn a PhD a lot faster than you could. You can do your undergrad a lot faster than you could. You can do your research a lot faster. So we're now entering an age of human superintelligence. Think about it. Because if we've got artificial superintelligence, then human superintelligence is definitely what we need. The final skill, vibe coding. Hands up. Anyone know vibe coding? Vibe coding? Yep. You practice it? It's good, right? Again, a bit like AI, software engineering, coding, was limited to a few people who could code, programmers, developers. With vibe coding, you have an AI-assisted tool that helps you code. You can build your own app. You can build your own website, right? So one skill that I'm teaching people in universities to pick up as a future skill, not for 5 years from now, from 1 year from now, 6 months from now, and for all of us, vibe coding. Think about it, right? If you can learn how to code, not directly, but interact with the code and get the output you want, that's a very powerful skill. So these are the skills we will need when it comes to the AI supercycle. So what are the risks of AI? I want to talk about one, which has been the common one all day. You see 7 here. But I want to talk about data as a risk. Okay? So I'm going to come back to the previous slide, and we're going to talk about data as a risk. Hands up who remembers COVID 2020. Hands up. We all lived through it. Now, one of the biggest learning lessons was about the quality and representativeness of data. So there was a company in the US that came out with a solution called Doctor Ask Me Anywhere, online doctor. So you go in, you ask the doctor, you type in your symptoms. I have a headache, I have a cough, and it will tell you you have a cold. US based. It was so successful in the US, AI based, they rolled it out to Africa. Then what happened? When they rolled it out to Africa, similar symptoms, the African population answered in the same way. I have a headache, I have a cough. The AI said you have a cold. But guess what? They didn't have a cold. They had tuberculosis. Now what's the moral of the story? Same symptoms. But the data was not representative of the African population. Think about it. They have different genes, they have different environment, right? Was the data wrong? The data was not wrong, it was correct. So it wasn't data quality. The data was not representative of the African population. The algorithm could not support that. So data is one of the biggest things we need to get right. Now, one more point when it comes to data and getting data quality right. So the final point is, if you think about growing AI, scaling AI, if we don't understand our data, if we don't know what data we're using, if we don't know what that data is being used for, then how can we explain what the outcome is? You just can't, right? You cannot explain it. And this comes to 2 different industries: banking, financial, and medical. So from a financial perspective, if I take a data point called gender, can I put gender in my algorithm for recruitment? No. Why? Because it will bias against males and females. So from a banking perspective, you remove gender from your algorithm, so it doesn't bias against male or female. But now let's take a medical example. In the medical profession, do I need gender? I definitely need gender. Why? Because male and female genders are different, and you can recognize different patterns. So the important lesson is that it's all about context when it comes to data, representativeness. Depending on the industry you're in, financial, medical, you can use certain types of data. One will create unjust bias in banking, one will create the right bias in medical so that you can detect the right patterns. So those are the risks. I'm going to end my talk in the same way I started. As the growth of AI emerges upon us, the biggest skill we're going to have to learn is that skill of human superintelligence and being multi-skilled in multiple domains. Thank you very much for your time.
Thank you so much for that, Mohammed. I think it was so entertaining. I love the audience engagement. And I think you really captured actually the importance of the human element in our whole AI journey and how essential it is. So we're going to move to our next session now. As many of you know, there's been a huge digital transformation in the banking sector in the Kingdom in recent years. And at the same time, there's been an opening up of the fintech ecosystem and a 20-fold surge in fintech startups in the Kingdom since 2018. This morning, actually, we heard how there were 82 fintech companies at the end of 2022 and 281 today. These transformative changes have made the incumbents take a good look at how they're going to continue to compete, whether that's by building partnership models or jointly building ecosystems. Without a doubt, there is plenty of movement to come in the sector, and that's going to form the topic of conversation for our next fireside chat on the future of banking in Saudi Arabia. For that, please welcome Mohammed Abdulaziz Al Fray, the acting CEO of STC Bank, and Dr. Lida Gliptis, seasoned fintech advisor and author of Beyond Resilience and Bankers Like Us. Please welcome them to the stage.
Thank you so much for being with us today. For those of you who've been at this stage earlier today, you're probably working out that I've had the chance to have the best conversations. And this has been one that I've been looking forward to the most. Thank you for being with us. And if I may, I'll go straight into my first question. STC Bank has had phenomenal growth since it's hit our radars. It's been a fantastic journey, really transforming the industry. Please tell us about what you've done, how you're doing it, and how you're setting the bar for digital banking in the Kingdom.
For sure. I'm really glad to be on the stage today in such a great event with such a great audience. And when you start talking about STC Bank, then the excitement is going to start. And I believe myself and my team in the bank, they came to the bank for the excitement. And with the remarkable journey we had so far, with the huge transition from the success story being made during STC Bay era, moving to the largest digital bank in the country, in the region, is really full of excitement. And that transition was not easy. You need to change a business model, operating model, culture, mindset, type of people, IT landscape, the business architecture itself, and how to end up by the most advanced customer experience that could make our bank attractive for the Saudi market. So the effort to move to the current stage of STC Bank was really holistic. And we have seen a lot of challenges since we are talking about a very unique proposition. I think within the region, there is no such an experience where a digital wallet converted to be a digital bank. And we believe we are honored, happy as a team to be part of this experience. And we have seen how did we move ahead with the major transitions into our processes, into our back office operation, with the level of automation, with the fulfillment of the banking guidelines, in order to reach to a stage where when we're able to launch the bank officially in February 2025. And since then, the excitement was really doubled. We have seen that the North Star for the bank start to be apparent. And when I look at the North Star, I'm not looking at it only from a profitability point of view, but I'm looking at it from the added value from a digital banking to the Saudi market. And the added value is driven by exceptional customer experience, personalized offering, tailored product and services for our niche segments, because at the end, the competition happening in the Saudi market need to drive the show in a way that we can offer our services in a totally different way than what conventional banks are doing today. So to be honest, we have seen the transition. We feel it, and our customer also, they feel it. We believe day by day, STC Bank start to prove its position within the Saudi market. The value recognition and the value proposition from our side is catching up day by day, and we believe we are on the right track to prove that digital banking as a new experience within the Saudi market is something started and gonna fly, and we are gonna open the chapter for new players within the Saudi market to be engaged into a new offering for digital banking.
What you're describing is inspiring, but if I were sitting in a traditional bank, I would find it a little terrifying. You are definitely changing the landscape. Do you feel that your success and this journey is putting pressure on the traditional banks? How are you approaching this differentiation in what is a fairly competitive ecosystem?
Look, I really respect and really appreciate the advanced capability that was built in Saudi banking, even with conventional bank. We have seen Saudi Arabia is really moving ahead as one of the most advanced country in the world when it comes to how conventional bank converting their product offering, converting their channels to be as advanced as digital banks when it comes to the comparison with how is the experience globally. For us as a digital bank, we know that we should find our own path to compete with the conventional bank. And I believe the major difference between us and the conventional bank, we are digital native from day zero, which means we are not in a bank who's running with an old legacy processes and complementing that by a good digital channels. So I think the majority of the conventional bank, they are looking at the digital from channels perspective and from journeys perspective. For us, we are looking as our bank as a platform, relying on customer experience, hyper-personalized journeys that will fit for every customer segment. So we are not a bank who's running with legacy. We are a bank running with the most advanced IT setup. It's a microservices setup, API native setup, meant to be for a digital banking more than a legacy, and all the processes is really enhanced to cater for a digital offering. And from my point of view, also, we are coming to the market to tackle untapped segments where conventional bank might not be convinced to serve such segments. And a few examples is SMEs and a certain segment within the SMEs, personal banking in youth and certain blue collars where also other banks, they are not serving them, going to the high segment and ultra high net worth with a much more competitive offering, reflecting that the new ultra high net worth in the market will not be the old, let's say, segment which used to go to a branch or to rely on a relationship management kind of, let's say, offering. We are coming to hijack and to really disrupt that kind of service offering to prove ultra high net worth in STC Bank and digital bank will be served in a completely different way that would reflect the meaning of a digital bank. So we are penetrating the untapped segment. We're trying to find our own path for success where we can show to the market how digital bank is a completely different value proposition to the market than conventional banks.
And show them you have, and you've just highlighted the breadth of products and offering and services. Yeah. And chances are, in our audience today, there's a lot of people who can only dream of growth and scale like that. But with scale comes operational challenges, and I would love to hear how you operationalize this journey.
Okay, I think look, going to the scale part of the story, and looking at how we are going to penetrate the untapped segments, okay, that means we need to have a transition in our mindset in the way we look at these segments' needs. We need to change our operating model and to offer a better business model that will cater for these segments. One of the examples is the most seamless and intuitive way of doing customer onboarding. Today in STC Bank, we are talking about tens of thousands of people coming to the bank in every day with exceptional offering, where we can show to the market that our ability for customer acquisition is completely different what other banks are doing. So customer onboarding is one of the main pillars. We can make our experience with many untapped segments is really exceptional. When it comes to the product offering, we are talking about a very tailored product offering meant to be for every single segment. We don't have the concept of one size fits all. We are deeping dive with a data-driven offering where we are capitalizing on the rich data available today in STC Bank, inherited from STC Bay, to make sure that when we go to the customer and penetrate the market to acquire the customer, we don't go with a very generic offering. It's a tailored offering that's meant to be for that specific customer, where the data gonna be the main player and the game changer for us to show our value to the market. We are injecting, for the first time maybe, some of the AI use cases that never been penetrated before in the Saudi market, and our customer will start to taste a different story when it comes to the product offering. So when we are aiming to achieve something from certain customer segments, we are achieving that with a very tailored and a focus and a precise product offering than something generic meant to be for all.
Absolutely fascinating. And sadly, I only have time for one last question. But I want to pick up on something you mentioned when we were preparing for this session, that you said our story is part of a bigger story. And we're seeing an incredible journey of transformation as part of Vision 2030 here in the Kingdom. And there is energy and a feeling that the moment is now and the place is here. And I'd love to hear your views of how you have partnered with Sama on this journey and how your story fits in with the Kingdom's story.
Look, talking about Sama, no matter what we will say, I think it is very minimal compared to the value they are adding to the show. Not only for our bank, for the whole banking ecosystem. We have seen Sama playing a role beyond being a regulator. Sama, for honest, they were partnering with us. They were sharing the responsibility. They have the same intention for our bank to really succeed and to be a shiny, let's say, bank within the Saudi market. So the journey with Sama was really amazing. It was even more strategic than what we even thought, I would say, during, or starting from the inception of STC Bank. We have seen Sama complementing our maturity gaps. We have seen Sama offering a very sophisticated framework covering cybersecurity, business continuity, counter fraud, and IT. And to be honest, without such contribution from Sama, the level of maturity from the bank side wouldn't be the situation that we are talking about today. One more aspect, we are talking about scale, we are talking about growth. Believe me, our bank was not able to reach today 5.5 million customers without the base of control, the base of governance, and the ability to scale with the full support from Sama from a maturity perspective. At the end, we cannot go to that scale while we are not equipped enough for all controls, governance, risk, cybersecurity capabilities that will allow us to succeed into our journey and to reach to our North Star while we are really covered well from all the aspects that Sama currently supporting us with. Today, as I mentioned, maybe I would say in the first question, I'll conclude my let's say, I would say conversation with a national agenda. Myself as a CEO and the whole team in STC Bank and our board of directors, our shareholders, believe me, we have a national agenda in STC Bank. We are not here to make a profitability only. We are not here to make our bank successful. We are here to shape the future of digital bank within Saudi Arabia. I'll be glad and happy if I'll see 10 digital banks in the country. We are going to partner with SAMA, partner with all government agencies, partner with the ecosystem in general to make sure we are drawing the future of digital bank in the country. And as management in STC Bank, we are proud and honored to play that role within the country. And inshallah, we will meet again and again. We have seen plenty of digital bank competing in a very fair way within the Saudi market.
What a fantastic message to leave the session with. I wish to see more and more competition, more and more innovation and creativity. If they can match your incredible growth, then that's something to behold, and I know I will be one to be watching closely. Before I let you go, do you have any advice for people in the audience? You're part of one of the biggest success stories in the kingdom. Any advice to leave our audience with?
I think, look, Saudi Arabia, from financial sector point of view, is one of, I would say, the best, let's say, market ever in the globe. I believe the market can accommodate tons of fintechs, tons of banks. Our market has the depth, and if any of the audience was with us early today, when His Excellency, the Minister of Finance, and His Excellency, the Governor of SAMA, they were talking about the depth of the Saudi market and how the transition happened for fintech, for example, from a less than 100 fintech in 2022 with 4 or 5 times the number in 2025. My advice is, I think the Saudi market is really promising. It's going to attract, I would say, all generation within the country, all international investors to come and to prove their use cases. And I think we have a great enabler as a regulator, SAMA. We have a great market, has all the means of success. It's a matter how people are going to build their use case in a solid way, how we will build the right business model, and how we will operate in a great way within the Saudi market.
And on that message, thank you so much for your time. Please put your hands together for this amazing intervention.
Thank you. Thank you.
Thank you for being with us.
Thank you. Thank you.
Appreciate this. For those of you who thought we've had enough of her, I've got some bad news. I'm sticking around for another session, and we will have a little chat while we get some more furniture.
We will.
On stage.
Thank you very much for that fascinating session, Lida and Mohammed. Lida, let me ask you, are you surprised in yourself by the pace of the change that you're seeing in the fintech sector here in the kingdom?
I absolutely am, and I have a good friend in country who might be in the audience, I can't see, who always catches me out on my own surprise, because every time we say there's a lot of change coming, and year on year, we surprise ourselves. The energy is fantastic, and it's great to see.
It really is. Now, let's move on to your next session. This next session is called Regulating Risk, Enabling Innovation. It's a tricky balance to get between risk and innovation. What are you looking to find out in this discussion?
It's a great transition, and I've got an amazing lineup of experts coming up. It is exactly that balance for those of our audience who were with us when we spoke to the governor and deputy governor of SAMA this morning. Balance was the watchword of everything they talked about. Balance between innovation, growth, responsibility, protection, education, and access. It's a balancing act, and we have a group of experts from all over the world joining us who will talk about that opportunity-based assessment of risk, risk-based assessment of innovation, and how regulators really can and do shape the direction that the economies they oversee take.
Absolutely. It's so critical. Lida, thank you. Can I invite you to take a seat, please? And let me introduce the rest of the speakers for this next session. Joining us are Edward Muller, former Executive Director of the Financial Market Authority and the former Federal Minister of the Finance of Austria. His Excellency, Mr. Su Sochie, Delegate of the Royal Government of Cambodia, Director of General Securities and the Exchange Regulator of Cambodia. We also have joining us Paul Kairouz, the Chief FinTech Officer at the Central Bank of the UAE, and Faisal Al-Shamari, the Executive Director of Tech Strategy Insurance Authority. Please welcome them all to the stage.
Great to see you all again. Thank you for being here with us. I have a bit of a challenge on my hands because I have about 10 pages of questions for you all and only half an hour on the clock. So I'm going to start really quickly. As you heard already, our topic is around regulating risk while enabling innovation. And I want to start with you, if I may, Mr. Su. It's the first time you're here with us. How are you approaching this journey in Cambodia? Is there a playbook? How do you use technology to supervise your market?
Okay, thank you very much for inviting me. I would like to thank the organizer that allowed me to be here with you all, and especially in this wonderful country of Saudi Arabia. To start with, I just want to say something about Cambodia. It's a small country in ASEAN. We are at the small market, we could say. But despite being relatively young, we have also made a remarkable progress in establishing our market to be a resilient, diversified, inclusive, and sustainable and digital empowered. So, to start with the journey of digital area, I could start to say something that we have some kind of policy of government, such like Cambodian Digital Economy and Society Policy Framework 2021-2035. We have also Cambodian FinTech Technology Development Policy 2023-2028. And based on this kind of national policy, as ERC, our regulator of capital market, we adopt the guideline on FinTech regulatory sandbox in the security sector. So regarding the playbook, as you mentioned, we have the set of strategy, the guideline, and also action that SERC has enacted to guide our journey to digital adoption. So we recently just adopted what we call the Security Master Plan 2025-2035, and three main areas that we have adopted in this master plan. First, we talk about the risk-based supervision, and this will align, what we have done so far, step by step, to move forward for regarding the risk as supervision. And we also target to adopt what we call the RenTech and SupTech. Based on right now, we start our journey in terms of sandbox, and based the experience from sandbox, we will, looking forward to how we could, have the regulatory for the fintech in Cambodia. And last but not least, in our master plan, we also embrace what we call the fintech solution in terms of product, in terms of solution. So we are in the process to adopt, some legal and regulatory development related to the fintech, such like the digital asset regulation, tokenization. That is all things that we need to, start in Cambodia. But currently, regulator need also to think about the modernization of digital system inside the, regulators. And SEC just adopt some, what we call the number of digital platform, such like the online licensing application platform. We have the market trading platform. We have the idea, investor ID online. So all of this, just, what we call the digital journey of Cambodia just started.
Quite a rich master plan,
yes,
and one that I want to pick on a couple of things you said to bring the rest of our panel in. You talked about risk-based supervision, and I'll come to Faisal if I may. I know that risk-aware innovation frameworks are a topic close to your heart. What can you tell us about that?
Well, thank you for having me, Dr. Lida, and everyone else. I'm really pleased to join this panelist. Honestly, I would like to use your previous session, testimony of Mr. Mohammed Al-Frey, when he mentioned that how SAMA and the regulator was actually keen behind their innovation and their launch into the ecosystem. Today's regulators' actually agenda is actually to enable rather than supervise and policing the innovations. If we look at the risk and innovation are the two sides of the same coin. However, innovation today is actually one of the initiatives of most of the regulators' agenda. Regulators themselves innovate. It's not only the private sector firms that do innovations. We saw the blockchain use in reinsurance. We saw lots of sandboxing and digital licensing are actually happening on the ecosystem to actually enable and make sure the ecosystem in general flourish when it comes to digitization and future growth.
I want to stay with something you said and turn to you, Paul. We're hearing that regulators are changing, but we're also seeing proof that regulators are changing. How are central banks changing with constantly shifting tech pressures, with constantly shifting expectations and market conditions?
Thank you, Lida. I completely agree with what Faisal just said. If you see historically, central banks, they were the safeguards, or their main mission was to safeguard monetary policy, financial stability, supervise banks. But you look now at some of the central banks, what they're doing, they're the enablers. If you look at it, give you an example, you look at Central Bank of UAE, we are enabling the new digital economy, and so many other regulators like SAMA and other central banks all over the world. So there's a complete shift in the role and mandate of central banks and financial service regulators. You will see now regulators focusing now on how do they enable economies, how do they help with the building the infrastructure, the financial market infrastructure, whether this is by building the instant payment platforms, card domestic schemes, central bank digital currencies, and regulations and frameworks around all the emerging technologies like stable coins and digital assets. So there's a big shift in the role of regulators, and of course with this comes lots of responsibility.
And I want to stay with that topic as I come to you, Edward. Last but not least, I would love for you to give us the European perspective of all of the aspects we talked about, that changing nature of regulatory postures, that changing set of pressures, but also that tension between risk and opportunity in financial innovation.
Thank you very much for having me here. That's very
Sorry,
good.
we're having a little bit of a Can you try it again?
Can I try again?
Yes.
Yeah, it works.
Perfect. Thank you.
So I wanted to ask it back because what are the risks we are talking about? I think that's the first question that needs to be answered, because we know risks that we know. We know risks that we don't know, but we even don't know risks that we don't know.
Very
so
true.
I think that's the challenge, and I think that's a little bit philosophy behind the European approach. So firstly, we know stability risks. We have that high developing, very high speed in innovation in digital finance. But as soon as we know the interlinkages, as soon as we know dependencies between digital finance and traditional finance sector, I think we are able now, in the meantime, to address the risks. And very similar, it's with operational risks, like cyber attacks. Of course, we don't know the specific case, but we have, for example, DORA, so we are aware that we need to prepare our digital resilience. But what we really do not know, I think that is currently the sector of artificial intelligence on the one hand and decentralized finance on the other hand. And I think the reason why we don't know what we don't know is it's, again, high speed, developing, it's highly complex, it's disruptive, and we don't have that holistic view on that. And I think that's also one of the challenges we have to face. And maybe before I come to the opportunities, to point out the European approach. And I think the European approach is in line with these types of risk, because let's take, for example, MiCA. Yeah? MiCA is the first harmonized rule book with a licensing, with a passporting system across European Union, and it brings on all kinds of digital assets, it brings clarity and investor protection. And we can see it also in DORA, because that's preparing for operational resilience, as the act is called. So it's recognizing that financial stability is not stability as we know it from the past, also from the last financial crisis. That's digital resilience. Financial stability is, in the meantime, and we have some cases, you all remember them, United States, is digital resilience. And also in the same line is the Artificial Intelligence Act, because it's you can say, or one can say it's an attempt, but it is an act to set ethical boundaries for high-risk artificial intelligence tools. And I think, and then I will move to the opportunities, we can also see it in the sandbox regimes, because that's a possibility for both sides, for fintechs or startups, as well as for supervisors and regulators to learn, to adapt, and to be in close contact and bring step-by-step clarity and, of course, a holistic view on that. So I think that's a little bit European approach. It's a precautionary approach. It's the attempt to bring, of course, consumer protection, stability, and especially transparency.
There is a richness to the challenges you described and a tapestry of pressures, the opportunities and the risks being pressures in equal measure. And Faisal, I'll come to you if I may. Is there an opportunity for regulators to collaborate and have an open dialogue about how they lean into these challenges? I know we heard from Edward there's a slightly more European flavor to some approaches. We heard from Mr. Su that being a smaller country in some cases gives you certain options. What is the scope for collaboration?
It's actually cross-sector collaboration comes together where they build processes and flows for those innovators to make sure they move from one environment to the other without actually sacrificing any regulations. Look, historically, always innovation comes, then regulations try to catch up, except in finance, where we see that heads to heads comes together. And regulations there, again, historically for a reason. It's just actually to safeguard the beneficiaries and the consumers and protect everyone's in the ecosystem. Also the innovators themselves. You know, sometimes I got calls from innovators asking us actually to strengthen one of the articles we have in our regulations. So today, innovators themselves would love to see a sustainable and stable environment for them to actually flourish and grow. And it's all about scalability again. So you got Insurance Authority where I work and working with Sama closely on some of the fintech, insurtech, overlapping kind of solutions. And we see through their sandbox, our sandbox, and our joint committees sometimes look after those innovative companies and try to bring them up to speed, to life, to launch as soon as possible with the actually safeguards in hand. Most of the regulator organizations today in Saudi have what we call innovation labs, where they actually host those innovators as early on as pre-seed sometimes stages, where they actually teach them, train them, and get them as, you know, it's like you see your child growing up. You don't want to let them go unless you make sure that they can face life alone. But again, they are not facing it alone. We stay with them until we make sure they are actually a success story to the whole nation, not just to themselves.
That's a powerful message, and I want to stay with something you said, because we are indeed in one of those unusual segments of the economy where innovation and the energy often comes from the regulator rather than the other way around. And I have a couple of questions on that, but I'll come to you first, Paul. As a regulator, your decisions can mold the economy you supervise. That's a huge responsibility to carry. How does one face into that?
Absolutely, Lida. I think there's so much weight to any decision that any regulator take. And I'll give you two quick examples. When we issued the first stablecoin regulation, we weren't just writing the rules. We weren't just putting the standards around how you issue a stablecoin and the reserves and consumer protection. What we were in fact doing is that we were pushing the digital economy. We were internationalizing the dirham beyond the borders. So there is so much weight and so much impact when you see a central bank trying to internationalize a dirham and open new markets outside its territories. And with this comes lots of weight, lots of responsibilities, but also lots of opportunities. And one of the objectives, for example, from this stablecoin regulation is to create new opportunities, create new use cases for people outside the UAE who may really need access to an alternative currency, for example, the dirham. Another example, our work in open finance. We took open banking to the next level, right? And then we thought about some very interesting use cases for the UAE economy, but more importantly, we've tied up with the UK, Hong Kong, Brazil, India, to create global API, or what we call now a network for the networks. So this is big because now the impact is not only on the economy, this is now having an impact on the global economy. And that's why there's so much weight with any decision that any central bank can take, especially today in this in the world of disruptive technologies, and especially in the 2025 when you see a new world order and also lots of collaboration amongst regulators from all over the world.
The watchword of the day seems to be dialogue. Cross segments, cross industries, cross countries. Mr. Su, I don't want to put you on the spot, but as you go on this journey, is there a jurisdiction or a model, if you don't want to name names, that is an inspiration to how you're approaching your work?
Well, country inspiration, I see that it's a much more regional inspiration. Cambodia is one of the ASEAN countries we inspire each other in ASEAN. And Cambodia is also the active member of what we call the ASEAN Capital Market Forum that we meet together, we explore and we inspire each other. But if you ask me more specifically which country in ASEAN that we inspire more, I think that I will talk about the Singapore, why not? Because it fintech, regulatory sandbox, robust digital asset framework, or proactive approach in terms of RegTech, SupTech. So all of this that inspire in terms of how we could organize in our market. So yes, I would say that not very specific in terms of country, but regional inspiration is much for Cambodia.
Well, there's always a model. I live for the day someone will say that my native Greece is their digital inspiration, but that moment hasn't come yet. But I want to stay with that theme of inspiration because as Faisal said, regulators are themselves often innovators. But the reality is, for those of us sitting on the banking side, we often wait for the green light. Sometimes you try to lean in, sometimes you try to sit back. Edward, I'll come to you with a question of timing. When should a regulator lean in as a new conversation emerges, and when should financial services players jump in? Because as you say, the European framework tends to be, we will wait for the regulation to be complete, the ink dry, and as a friend told me recently, we will make sure we go third. Not first, not second, but third. But obviously the pace we're talking about here doesn't really allow for that anymore.
Thank you for that question, because timing is indeed one of the hardest aspects of regulation and supervision in innovation. And as you pointed out in your introduction, when you talked about the challenge of balance, so from my point of view, this challenge of balance is not only a question of over-regulation or under-regulation, it's especially in innovation the question of the best timing. And so maybe that's a little bit a personal view. I know it's differently seen across Europe, even if we have a single market, but I will refer later on to sandboxes. From my perspective, regulators should not wait until a technology is fully mature and systemic before leaning in. Because if you wait too long, you are always ruling the past. Of course, it's easier to step in, make an on-site visit and say, okay, you did it wrong. Yeah? But maybe already something happened but shouldn't have happened. So I think regulators, supervisors need to intervene early, maybe not too early with heavy-handled rules, because then you have the risk of killing useful ideas before they get developed. So I think you have to engage early, balanced, and of course proportionately, because it depends, is there a systemic risk, yes or no? And I think this is the reason why a lot of jurisdictions around the globe, and This is not harmonized in Europe, I have to point out, but we have it in Austria. Use the tool of regulatory sandboxes. We also have advanced ruling and other tools, but I think it was also pointed out by you, the regulatory sandbox is, I think, the best tool to develop in a common way forward innovation. So that means supervisors have the possibility to step in. They have the possibility to learn, because usually, technologies, they are developed in the industrial sector, not by regulators. So regulators can learn from industry, and in that kind of, it's a kind of cooperation and support. New ideas, new products, new services can be developed. It can be developed under a safe environment, and if they work well, at the end of the day, I always say then is regulation is then part of the product or part of the service. And I think that's a really added value, especially of the European microsystem. That then regulation, it's the sign, you get proved, get approved, and you have a trustworthy service or a product.
I like that, and I want to stay with that, the set of choices that a regulator gets to make. For my last couple of questions, I want to look at those choices from the point of view of the regulated entity, and with not very much time, I have a couple of questions I'll throw at you, and Paul, I will come to you with my first one. Many of our audience are representing companies that are on a growth journey, and they are shopping for new jurisdictions, and for all the reasons we've been discussing today, obviously this region is very, very attractive, but there's always a lot of options on the table. How do you recommend decision makers inside a regulated entity or a technology provider in a regulated environment think about the various jurisdictions that they might be stepping into? How should they be approaching that regulatory posture and regulatory regime context?
That's a great question, Lida. I think for any startup, any fintech in today's world that is navigating this space, they have to look first at certainty. They want certainty, right? They want to invest in a country where there are clear regulations, clear frameworks. You look at Saudi Arabia; they were pioneers in digital payment framework. You look at United Arab Emirates. You look at Singapore. They were also pioneers in looking at digital payments and crypto assets regulations. So giving certainty to the market is extremely important, because fintechs want to comply with the regulation, but they want to know what these regulations are, right? So what we've seen in some countries, uncertainty can put a big cost on such fintechs. Number two is adaptability. I think one of the mistakes that we've seen fintechs and startups in general do is that they think regulations will be there forever. Well, regulations will change, right? Regulations are there for a reason. They will change. Capital requirements may go down. Capital requirements may go up. Some more prudential requirements may be introduced. More conduct requirements may be introduced. So fintechs in general and startups, I should say also in general, they should be very adaptable. They need to understand that these regulations, they will evolve. But as long as they have certainty around clear framework, clear business models, right? The treatment of these different business models, I think this should be a good indication for them on where to invest and where to start. And I agree with what you mentioned, Lida, that this region, you could see the buzz in this region, right? In the GCC and the Middle East, there's so much innovation coming up. Instead of getting models from outside the region and copycats, we're seeing people in this region now innovating, which is amazing. And I think this is the next wave. The next wave of innovation is going to come from this region.
Fantastic. And I have a little bit of a curveball question that I'll come to you with, Faisal, as we wrap this. As I'm listening to you, you all four of you paint a very rich tapestry of balancing acts and decisions that need to be made and options and timing and a whole host of actors. We talked about the regulatory perspective, but it emerges that one of the most fascinating and possibly hardest jobs for the next 10 years will be that of the chief risk officer, both inside a bank and inside the fintechs that are starting on their journey. Faisal, what advice would you have for the companies that are here today looking to start their journey in the kingdom? And what advice would you have for their chief risk officer?
Okay. Well, actually, Saudi Arabia today, we live in abundance of opportunities and support from all over the VCs, the regulatory bodies, and the whole ecosystem is actually moving towards that kind of economy, which actually give an opportunity for those innovators to come and flourish in Saudi Arabia. And you know, we see AI is going to shape our future today, and I'll bring that conversation, but who's shaping AI itself? And we see this talented group of innovators and regulators comes together in this ecosystem and trying to answer one of the challenging questions of today and the future, which is how does technology actually contribute to our way of life and our quality of life going forward, and the financial stability of the individuals and families within the country. Again, innovation through experimentation, through trial and error, learn as you go, reshape, and those actually the principles we see happening and unfolding in Saudi Arabia today.
I will conclude with you, Mr. Su. What are your parting words and advice for our audience and participants at this event?
For me, I think that we acknowledge the utilize of technology actually in the market, but there are also the risks that come with the technology. So for me, I think that especially to the chief risk officer, they need to think about a three main area. First is why not fostering a culture of risk awareness, talk about the risk with the audience, with the participant, with everyone. Leverage technology to enhance risk management framework. That's very important. As mentioned, AI, monitoring, use the technology to monitor the risk. That is very important. And last but not least, I think that we need to continue the development and engagement in terms of regulatory development to monitoring the risk. That from my point of view. Thank you very much.
That is absolutely fascinating. And it seems that although we have not been coordinating between sessions, the theme of balance, of engaging talents towards a responsible and prudent set of growth, and that amazing energy for innovation is very much there. I cannot thank the four of you enough. I could have stayed here talking to you for hours, but I believe the next panel is already lining up. Please put your hands together for my incredible panel.
Thank you.
Thank you.
Thank you.
Leader, thank you so much. I'm sure we will be seeing more of you on stage. Thank you to you and your panelists. And Leader talked about balance, and we will also be talking about that in our next session. But before we get to that, let me just remind you about some of the other stages that we have here at Money 2020 Middle East. Obviously, we are delighted to have your company here at the Executive Summit stage, but we also have the Capital stage, where you can hear from investors, startups and industry leaders. We have the off-the-record stage, where you can hear it's a private space for senior professionals to tackle challenges. We have the Pulse stage, which has rapid-fire sessions, the Next Gen Money stage, which has keynotes and discussions on digital transformation, and the Bridge, which has panel discussions and presentations exploring how fintech is breaking down barriers. So please do check the agenda for all the sessions taking place on our other stages. But now it's my pleasure to welcome to the stage for a discussion entitled Banking on Impact, Lei Ming Chen, the Chief Sustainability Officer and SVP at Ant International and Ant Group, and Sitoyo Lopokoit, the CEO of M-Pesa Africa. So please make some noise.
Thank you very
Hello, welcome. Welcome to you both. What a treat to have 20 minutes to talk to both of you. For members of our audience who may not be aware of exactly what your companies do, maybe a quick couple of sentences. Sitoyo.
Hi, everybody. My name is Sitoyo. I'm the CEO for M-Pesa Africa. So M-Pesa is a financial services company based in Africa. We operate in 8 countries. We have 85 million customers and 5 million businesses that run on our ecosystem. So we're a digital ecosystem that empowers the economies in which we operate.
Thank you. Lei Ming.
Well, Ant International is a global fintech company serving over 1.7 billion consumers on the one hand, and over 100 million SMEs, merchants globally doing business across the world.
Excellent. Thank you both for that. Well, I would say that for the both of you, your common thread is that mission to facilitate inclusive growth in the digital economy. Could I ask you to just give us your top 3 core ingredients for success? I know it's quite a broad question, but are there any main factors that come to mind? Lei Ming, you're nodding away. You kick it off.
Sure. As I mentioned, at Ant International, we serve a large number of consumers, 1.7 billion globally, and 100 million consumers. With that scale, it comes responsibility as well. And I think as a technology company, we constantly think about how we deliver impact through business practices and social value as well. Now, one of the things we've been looking at very clearly and deeply every year is from a corporate governance level. The board and senior management look at sustainability as a driver to really deliver business results. So that has really generated very, very good results in terms of business value. And I think we have this dual value strategy proposition. Essentially, business strategy is very much part of sustainability strategy and vice versa. And constantly think about it, from financial inclusion perspective, knowledge innovation perspective, what we can bring to the table to serve the community in which we operate. So that is very much the foundational thinking we have. If we don't deliver impactful social value proposition, our business can simply not be able to run in a way that is sustainable either.
But can you give us an example? So you say you embed sustainability in your principles. Just to make it more tangible, give us an example of that.
No, I think that's where we started as a payment company, and digital payment is very much financial inclusion oriented, and it really enabled us to start our business with serving unbanked and underbanked population of the community, and through sort of digital payment, then we also drive sort of a democratization of participation in the green areas of low carbon footprint and the lifestyle, etc. To really using technology to build credit scoring for SMEs, for them to get better access to green finance opportunities and better terms. So I think in a way, we think the area in which we operate is not only just the financial inclusion, but also digital inclusion as well as sustainability inclusion.
Okay, thank you. Sitoyo, financial inclusion is at the core of what you do at M-Pesa. What do you think has allowed you to be particularly successful?
First, I think we're a purpose-led organization. So purpose, people, and we always say profit is a byproduct. So we've really focused on what is our purpose, and our purpose is to transform lives, and then people. So we are very keen to ensure that what we do impacts the society in which we operate. And because of that, we've focused on solving problems within the continent. We've focused on unlocking the opportunities in the continent. And just to give you an example, a lot of people ask us, why are we in agriculture? So we've leveraged our platform in Kenya, for example, to help the subsidies program by the government. So the way we've set up M-Pesa, we're a two-sided ecosystem. So we do products and services for customers, and we do products and services for businesses. And in this instance, we work with government
to ensure that the entire subsidy program, the fertilizer subsidy program, runs on M-Pesa. And today it has 6.5 million farmers. Over $288 million has been paid through our platform. But what it has done is the importation of food into Kenya has dropped by about 30 to 40%. It has helped the stabilization of the currency. Today, the inflation in Kenya is below 4% because food is one of the biggest impactors. So what we do is to ensure that, because of our purpose, that the outcomes are what determine how we invest into it, just as an example of how we bring together the purpose as well as the outcomes related to that. With regard to financial inclusion, so M-Pesa is 18 years old. When we started, financial inclusion in most of our markets was about 23, 24%. This has gone up to 85% across our market. And what we've done is now move from financial inclusion to financial health, bringing products and services such as wealth management, insurance, savings that help cushion customers whenever they have shocks. So there's a deep passion in terms of driving towards that, and not just for the consumers, but more importantly also for the SMEs and the micro SMEs.
Wow, that's fascinating. Are there any learnings? We're sitting here in the Kingdom at Money 2020 Middle East. We're hearing how the sector, the fintech sector, is on this cusp of transformative change. Are there any learnings that either of you can share for people in the audiences, for businesses in the audience, from your experiences so far, where things have gone well and where things have not gone so well that would be helpful?
Me? Okay.
Go for it.
Yeah, no, I think, we look at our markets really in a way, what an under-penetrated market, what is underserved market. And each market we go in, we look at the technology, how we can deliver that to meet the market demand, whether that's from a financial inclusion perspective or even talent nurturing perspective. So, banking on impact is a very big topic, but I think at the same time we dissect in a way that it can be very specific, right? You say, underserved community, how we can sort of facilitate SMEs to do global trade in a way that is historically can only be done by big corporations. Now, technology plays a huge role, and how we work with partners in the ecosystem, because serving SMEs and serving underserved communities, really the key is how we can deliver the type of service in a cost-effective way, so that they can really enjoy the type of financial service that ordinary people, the big corporations and people in a higher sort of a tier of the community enjoy very regularly. So I think, as a technology company, with the pace of innovation, and we look at the ecosystem, we say, okay, so if we can work with the banks to help them to reduce that cost of serving those people, then everybody will gain. So I think we truly believe that open eco platform, technological innovation really can drive the impact that we think we can bring to underserved community and in the markets that are still developing.
Vittorio?
No, first, there's no monopoly with regard to knowledge and innovation. We started working with Ant 7 years ago, and I was lucky enough to go to Hangzhou in China. So we go every year to different markets to learn, to see what's happening. We've leveraged on their technology in our own ecosystem, and just like here in Money 2020, there's a lot of young innovation and tech entrepreneurs in this conference, and we are here to learn also. We are here to see what they're capable of doing, but also is to encourage them to bring their products and services to our platforms. So there's more innovation outside M-Pesa than there is in M-Pesa. There's more innovation outside Africa than there is in Africa. So we've put our platforms open. We have open API platforms that are enabling third parties to build products and services into our ecosystem. So for example, if I want a wealth management system, I would not go and build a wealth management system. Today, even in this facility, we have wealth management companies that have got good tech and great tech that is available. So we want to partner across the globe. And I think this partnership is what makes this industry of ours very, very exciting on what's happening.
Yeah, absolutely. Now, let me ask you both something. I mean, I think digital literacy is I don't think it's low in the kingdom, but I mean, certainly, Satoyo, in Africa, digital literacy is quite low. How do you get the balance right between making responsible lending when that's the case?
No, I think we started with lending in 2012, and it was difficult. The tech wasn't there. We were using Excel spreadsheets initially to do our algorithms for credit scoring. Fast track to today, we issue about $60 million of lending every single day with NPLs below 3%. Now, the issue of responsible lending is a big part. But as we've opened up our ecosystem and opened up our APIs, means they're digital lenders. If I give you an example, just in East Africa, there are over 200 digital lenders. Now, that means there'll be predatory lending. Yeah? That means there are some players who will win and some players who will lose. But as an infrastructure player, we are educating our customers on that. We are also working with the regulators. And the previous session was talking about something close to this with regard to responsible lending. And we are seeing regulators introducing policies that govern responsible lending. But we are very particular about how much lending we can do. But what we have also in our portfolio is actually a savings-led credit proposition. So we do have a savings product. We just don't do a lending product. So the more you save, the more you'll get in terms of your lending. So it's a combination of that. But of course, we have to make sure we don't leave anyone behind. So there are issues around smartphone penetration. There are issues around coverage that need to be there. There are issues around visually impaired people that don't have access to financial services. So there's still a lot that needs to be done with regards to access to credit and ensuring that it is done in a responsible manner.
Yeah, and I mean, to add to that list, what about awareness of cyber attacks and, cyber crime? How do you deal with that in developing countries where digital awareness is first of all low, and then certainly they may not have had the chance to know about phishing attacks or various other cyber crimes? How do you deal with that, Liming?
Yeah, no, I think, again, technology, right? I think when you have technology advancement, it's great, people can benefit, but the problem is that it's open to bad actors as well.
Yeah.
So with Ant International, we have dedicated cybersecurity team that leverage the newest technology like AI to really detect deep fake type of crime activities. And I think you mentioned a point about digital literacy as well. In that context, I think again, technology can help to upgrade general people's sort of knowledge. With AI, a lot of things can be done very, very understandably transparent and accessible for people who may not necessarily comprehend in the age just yesterday. Yeah. So I think in our context, I think one of the things we also look at is really through AI, we upgrade the fintech education, right, or health of financial services, and make sure that the people will be able to the products designed for people are suitable for them. Yep. Right. So that is something that we constantly focus on, and working with the partners. And we just had a really good conversation this morning about from a few years ago we started cooperation to now technological involvement has been so productive, and we'll continue to sort of share. So I think sharing, making sure that different groups of consumers really brought into this new arena in the technology advancement, not left behind.
You mentioned technology to combat deep fakes. How effective is that? I'm intrigued by that.
Well, that is, I mean, I hope I brought my deep fake technician, technology people. They can talk nonstop. I think at the end of the day, really, I mean, I think bad actors come up with something. You have to be quickly address that, crime sort of activities with that technology. So I think whether it's a voice or image, especially image, right? Yeah. Now, like with cybercrime and fake documentation, they can generate one finger away, and how to detect that's true or not, right? So your technology will constantly evolve. Need to sort of counter that.
Yeah. So Toyo, tell us about how you deal with, educating people in developing countries about the risks, the cyber risks.
I think that's one of the biggest challenges we face with regard to customer education. So we do use a lot is using radio and SMS, just given the reach that they do have. But to what Chenna said, I think for us is partnerships. So we don't claim to be the best in terms of cybersecurity technologies. We invest in that, but we work with partners. So we work with partners such as Ant. We work with Microsoft. We work with Visa to come and look at our systems and see where they can support us with regards to in regard to cybersecurity. So we are particularly keen on this. And as an industry, we do work with the banks. We do have sessions with them. And the reason is we have to protect the entire industry. It is just not protecting one sector, because the cyber risks start in one area but are systemic to the entire ecosystem. Yeah. So we need to protect the entire ecosystem. So that collaboration of working together is absolutely key. Collaboration of working together with regards to educating customers, and more important also working with the central banks. They do see risks through their central bank networks on what's happening globally, and by engaging with the regulators, then you're able to also see risks that we have blind spots on, but they're able to see given their role as regulators. So it's a collaborative effort with regard to cybersecurity, and especially now with the advancement of AI.
Yeah, and I mean, we've been hearing a lot about that so far today, collaboration, partnerships. It's really the future for everyone, really. It's a win-win, isn't it?
Yeah.
So Toyo and Lei Ming, thank you very much for your time today. Appreciate you taking the time to speak to us. Please join me in thanking my guests.
Thank you.
Thank you very much.
Thank you so much. Thank you. We are now going to take a long, hard look at infrastructure, the backbone of all finance of the future, and indeed the backbone of all tech. So please welcome back someone I think you're very familiar with, Dr. Lida Gliptis, seasoned fintech advisor and author of Beyond Resilience and Bankers Like Us. Also joining her are Mark Lenhard, the Group CEO of ZEPS, Mohammed Hassoub, Acting CEO of Ejada, and Majed Al-Otaibi, the Chief Government Products Officer at Elm. Please welcome them to the stage.
For those of you who've been here all day, I am back. You'll be relieved to hear it is the last time today, but it is possibly my favorite topic. We have had some amazing conversations today, some amazing interventions, some incredible stories, and the watchword of everyone's story today was investment in infrastructure. Nothing would be possible if we didn't come together to build capabilities around talent, technology, regulation, governance. So today, as the last session that I'm having with you today, we're going to unpack what that means. And Mohammed, I'm going to start with you. For those in the audience who may not know, what actually do we mean about infrastructure in the context of Vision 2030?
So, can you hear me? Testing, testing.
We're having a little microphone mishap for Mark. Can everyone else speak to see if anyone's working?
Hello?
Test.
No, all of my microphones are not working.
Hello, guys, can you hear me?
Can we have some help?
Hello?
Test.
Yeah, I think your mic is working.
My mic is
yes, your mic is working. So why don't we start with you? I'm pinging the question to you. Let's talk about what infrastructure means in the context of Vision 2030. For anyone in the room who doesn't actually know what kind of investment is being placed.
I think. Hello, am I audible? Yeah, now it's good.
Yes.
Maybe I just want to hold it for a while. So I think overall what we've seen from a Vision 2030 and infrastructure point of view, there is a complete shift that we see in the market to be dependent on the infrastructure capability. In fact, I remember we've seen one of the studies that basically 70% of the digital transformation usually collapse because of the lack of a proper and rigid infrastructure. And based on that, what we have noticed that there is a big investment into the resiliency, the cybersecurity, and the readiness of infrastructures, given that the customer expectation, and rightfully so, it's quite high. A fintech without a good backbone in place wouldn't basically be good from a customer experience point of view, and the first touch is quite important. So investing in the infrastructure, whether it's on-prem or even cloud, which I'm sure we're going to cover later on through the discussion, it's quite important that we basically give the infrastructure the utmost attention, given that it's basically the key success factor for any fintech moving forward.
I mean, it's easy to have ambitious goals, but as you say, if you don't invest, it is hard to translate them into anything more specific. So let's bring it to life. Mark, since you now have your mic, I'll come to you next. Bring it to life for us. What is the significance of high volumes, low cost, secure transactions, and how does infrastructure play into this?
So the infrastructure component of any fintech is absolutely critical, as many of you know. And if done well, you never hear about it. It just works. But I can tell you from someone that runs a company called Zeps, who sends billions, tens of billions of dollars around the world to some of the hardest to serve countries in the global south, it can be really, really difficult. It can be difficult both in the context of today's environment, but even more importantly, as new technologies come out, how do you adopt those and do that in a way that ultimately not only improves efficiency and makes incremental improvements, but also fundamentally changes the game? Because there's always new technologies out there, but it's important, particularly in fintech, because change does take a little longer. Not only the technology change, but the regulatory, the security, the infrastructure takes longer, because if you screw it up, the implications are really, really bad. And so being able to do that means the bar, it just can't be incremental benefits, it's got to be massive, massive improvements.
I want to stay with these themes because I like the idea that if done well, you don't notice it. If not, it's obviously a very jarring experience and one with serious ramifications. To get it right, it's a combination of balancing acts. And Majid, I want to come to you with this question of balance. We've talked about it again and again today. From the point of view of infrastructure investment, how do we balance innovation and risk management?
First of all, thank you so much. Can you hear me?
I think we can. Yeah, excellent. Collaboration at work. Thank you so much.
So thank you so much, Lida, for the session. Good afternoon. Happy to be here. So whenever we talked about innovation and risk, there will be the assumption that whenever innovation increases or whenever there's a value to be introduced, a higher risk will be introduced as well, which is the right thing. The part is that once you have risk management and risk systems that will assure that whatever innovation aspect you're developing won't affect the real exercise, then you're doing the right thing. And I guess there would be much of an introduction for AI in that aspect. As in our company, we've developed many services. Actually, we're piloting a couple of those services with a couple of banks where we would detect fraud pattern in advance. We call it dhaki. It translates in Arabic, or in English as smart. So it is more of an application that it will have a predictive risk scoring for whatever individual or whatever transaction that is happening there. So I guess AI would have a huge impact in whatever risk assessment to be introduced, as well as it will flourish whatever innovation we will have there.
I think as our time together goes, we will actually touch on a lot of, I don't want to say the hype themes, but I will say the hype themes, the themes that are top of mind for everyone. And when we're talking about infrastructure, we're actually going to be touching on every single one of them. You mentioned AI. We will talk about cloud, because the whole point about infrastructure, it's all of it. So Mohammed, I'll come to you. When I started my career, and this is how I show the world how old I am, cloud wasn't a thing, and then for a while, all our chief technology officers were like, it's okay, the regulator will never permit it. Fast forward to where we are today, that's really not the story anymore. What's the picture of cloud adoption in the kingdom right now?
I think so far what we have seen in the market, there is a big shift in adopting the cloud. And you know, technology is only late when it basically works, like basically the mic that we're having today. But what we've seen is a big shift in investment into basically using hybrid clouds, especially from the banking sector and the finance sector. I think people realize that the investment in the traditional on-prem kind of capability is no longer the future, and to basically scale up their capabilities and infrastructure massively, given the demands that we see today in the market, it makes an absolute sense that basically people adopt the cloud. And what we have even seen in Ijada, for example, that almost 2 years ago, we had zero footprint on the cloud business, being a system integrator and an engineering company that focused on the cloud capability. In 2 years' time, now it's basically $150 million. And even last year, we've been recognized by Google as the KSA Partner of the Year. What I basically want to say, back to the point of Vision 2030, because maybe I haven't covered that properly, we've seen a lot of support is being given to the hyperscaler, to basically giving them the licenses, the infrastructure. And as a result, today we have 2 hyperscalers that are up and running. Basically, we're talking about Oracle and GCP, but we're expecting even Azure and also Amazon AWS will be in operation soon, potentially next year. And that will open a lot of varieties to the market to further advance the services provided and reduce the cost associated.
I mean, those numbers are telling, right? They show both the incline of the hockey stick and the pace of acceleration. As we look at all every hype cycle, every idea that comes to the table, it starts on an innovation experiment. And Mark, I will come to you. How do you keep moving your teams and organizations away from that experimentation to actually bringing innovation to life, bringing it into your toolbox and your markets?
It's a great question, and particularly in payments, being able to do that in a way that is safe and secure and doesn't impact the end user society can be pretty challenging. I think the thing to keep in mind most of the time, all the time, is even in situations where you're talking about back-end infrastructure or things that your customer may not, hopefully, don't get to see and don't feel the pain of, for sure. You've always got to keep in mind and keep the team focused on the customer. So in our case, it's the migrants, the 300+ million migrants around the world who are moving $1 trillion+ dollars. We keep them focused on them. How do we make their lives better? How do we improve what they're doing on a day-to-day basis and have a meaningful impact? If what we're ultimately doing and changing on back-end infrastructure isn't going to lead to that within a fairly short period of time, then there's no reason to do it. I love the cloud example because maybe AI and stablecoin are hot right now. We need to see a path where those things are actually going to have meaningful differences, because I can tell you in the interim times, it's really hard to run a business by injecting that experimentation, but those new technologies in, because ultimately, In payments, it's a network. You add a new piece of technology, you can't get rid of the old, right? You've got to somehow incorporate that in and leverage that, just like hybrid clouds did. And so, you know, a lot of the folks that are running hybrid clouds now will probably tell you they're more complicated than running just an on-prem system, but they've got to run both. And so it's important, ultimately, that you're not just saving a few pennies or making incremental improvements, that you're actually fundamentally will change your business. Maybe not right away, but within a short period of time, so that your customers will actually ultimately feel the impact.
And I want to stay with that idea of customer impact and unpack it a little bit, because it's very easy to lose sight of the end customer when we're talking about infrastructure. So, Majid, I will come to you. How does identity as a concept come into this? Because, of course, how we manage identity will definitely affect the end user experience, but it has so much complexity. How are you thinking about it?
So whenever we talk about digital identity, actually it is more of the cornerstone for financial infrastructure. Digital identity is more of a gateway that will assure that whatever innovative solutions we're developing, whatever seamless experience clients would have, and it would lower down the number of procedures or processes to be there. If I were to mention one of the champion products that is powered by the Kingdom is Nafad. It is more of a digital verification product that would assure that your identity is verified, and now it is popularly used by most of government, corporate establishments to use. As well as when it comes to the fact that digital identity is more of a figure that is being overused most of the time, so that you would cut the number of usages. We in Elm have one of the flagship products called Yaqeen. It is a data population application where it would link financial institutions with corporates, and it would transfer whatever data that are required to assure that whatever process that is being carried is being identified from a perspective.
I want to stay with this notion of the customer, and Mark, I'll come to you. We talk about trust in our industry a lot, and we often throw it around in a very abstract way. We all know it's a good thing, but actually the steps you take to build it, particularly in a tech business, particularly in the business of infrastructure, is not something we talk about in specific terms very often. So I'm going to put you on the spot. How do you use tech to build client trust?
Trust is super, super important in any business where you're obviously moving money, in many businesses, but particularly in financial services. And ultimately, trust is earned over time. It's not necessarily awarded on day one. And there's a lot of things to it. I think the most important thing is, as a business and an organization, you're always focused on the customer and the end user, and you always value their needs first and foremost. May not always make the most sense for business in the short term, but in the long term, it's the right thing for the business and certainly right thing for the consumers. I think identity is a classic example there. And how do you protect people's accounts? The most important thing over time is not one particular identity method, but to have the backbone and the infrastructure in place so that you can keep up with it. I don't know if all of you remember, but there used to be this thing called the password, and you typed it into an app, and voila, that's how you got into the app. I hope most of you are not just operating on passwords these days. There used to be the selfie and the document and many other things. But the world is rapidly, rapidly changing. And many new things will form. All of that is some form of identity. I don't know what the next 10 things are going to look like, but I can promise you it's going to evolve. But it's really, really important as a business and as a company to stay at the forefront of that, because ultimately that's a key piece of building trust with users and customers. Many, many more things involved there. Ultimately, when things do go wrong, which they will, they happen in all businesses, but you do right by the customer. And you see out there the ones with the best reputations and the ones that the customers love. They have a backbone, if you will, which may not be technology, but it's cultural. and it ensures that they're always doing right by the customer. Even when the customer makes a mistake, which can be really frustrating, but ultimately it's our job to make sure that their money is safe.
Underpinning everything we talked about, and we talked about trust, we talked about identity, we talked about that ability to bring that vision of growth and prosperity to life. Every single piece of innovation, creativity, or service we talked about has a data component. And I'm going to come to you with a question on that, Mohammed. Can you talk to us about how this shared infrastructure thinks about security, reliability, but also data sovereignty in a connected world?
I think that's a very important piece for the fintechs to consider. And I think what we've seen is an evolution in the market where a lot of fintech themselves, they're basically being specialized, whether it's direct tech, which is a sideline for the fintech themselves. And we see a lot of new ideas coming into reality where a lot of entrants are basically thinking outside the box and trying to bring new ideas in place. Technically, data from a fintech point of view, giving the more or less the regulation that we have today, which is rightfully so, that needs to protect the end user, the client. Nobody's going to feel comfortable if your data is exposed. The beauty of the whole exercise is what we've seen, at least in the kingdom here, that we've seen sandboxing happening at the regulator side. And that has been a very powerful method where all of these companies has been nurtured to basically strict and adhere to the regulations from day one. So technically, all of the noble ideas that we've seen, if it's not basically aligned, they can still continue, but the only way to penetrate the market and get into a play is to basically ensure that you are more or less compliant with the standards that we follow.
So you mentioned standards and compliance, you mentioned principles and rules, and you mentioned handovers and handoffs between various stages of the process. And I guess when we're talking about infrastructure, connectivity is a given. We didn't even touch on it, but we can't not touch on it because it doesn't happen naturally. And Majid, I will come to you with my next question. We need interoperability, and we need to standardize that interoperability because there will be new players, new capabilities, new rules. Is there an ideal model for standardizing interoperability?
I guess the golden phrase to be used is open banking. This is more of a movement towards APIs and APIs application to be used by others. A report from McKinsey labeled that for those governments that are pushing for open banking, they've witnessed a 50% increase in innovative solutions that they have when it comes to financial solutions. Also, they've witnessed an increase or a range of 40 to 60% of financial adoption and inclusion. So this is more of an open banking aspect. When it comes to United Kingdom, it is one of the well-known countries that regulators did push financial institutions to adopt open banking and to expose APIs to be used by entrepreneurs or whatever businesses and develop add-ons and services on top of it. We've went through this engagement into one of our products, which we call Rapid. It is more of an API gateway that we've exposed all our application into APIs. Also, we're fetching whatever APIs that businesses are having, reposted to them again, as well as whatever APIs that government entities are utilizing. So such a movement or such a practice will assure that we're having the baseline for whatever innovative products that businesses and entrepreneurs can develop on top of it.
If I take a step back from what I'm hearing, we essentially have a world of predictability, standardization, and access for players, old and new, existing, domestic, and international. And Mohammed, I'm going to pick on a phrase you said earlier. The hyperscalers are coming. Some of them are already here. Some are definitely eyeing this market up as a fantastic accelerant opportunity. What does that mean for the fintech ecosystem in this country? What does it mean for the players who are already here, such as yourselves, Mohammed, and for those yet to come?
So I think when the hyperscaler will basically open, a lot of varieties will be given, where technically rather than having few options at hand, you're going to have all the options at hand. That will not only give the access to the hyperscaler themselves, but also all of the capabilities behind them, of which a lot of them, they have a stack of activities and services that can basically take some of that elements off the shoulder for the fintechs, which will equal at the end a manifestation to accelerate more and more in fintechs to get into play. And honestly speaking, that's what we've witnessed. I mean, the fact that we still have around 2 hyperscalers operating in the market, with another 2 coming into play. With the 2 that we have at hand, we've seen a handful of fintechs, and I think when you go through the exhibition today, at least you see some of those fintechs have graduated and became actually large companies. So what I expect next year, that if we're going to have Money 2020 with the hyperscaler, I don't think even the size is going to fit us all to have all of these kind of exhibitors, but I think that will basically, it will double and triple with time.
That's an incredible prediction. We'll hold you to it as we come back here year after year. As we're coming to the end of our session, I want to go back to that connection between infrastructure and consumers, not an obvious one. And Mark, I want to come to you, because as we were preparing for this session, you said infrastructure should serve customers, not the other way around. Can you bring that to life for us?
Yeah, absolutely. I said a little bit earlier, but I think the most important thing, and it's why, in many ways, we have lots of different infrastructure when it comes to payments and fintech around the world, and there isn't one unified one, partly because of just regional differences, but also ultimately over time, I think it's really important that we just don't adopt technology for technology's sake, that it has to have a really meaningful impact, ultimately not just on consumers, but on businesses, on end users and customers. Because without that, we're changing out technology for technology's sake, and there's lots of things we need to improve on, whether it's identity, whether it's data, and a whole host of other things. But what's important is we're doing that with ultimately, not that is super important, and we got to get that right, because ultimately we are data companies, right? At the end of the day, particularly if we're just moving digital money, right? Not even hard currency anymore. And so it's really, really important to get that right and do it, but do it in a way that ultimately can have an impact on our customers' lives, because there's so many things we can do, but ultimately our customers are looking for new things. They're looking for ways you can improve their lives each and every day, and it's important to stay on top of that, because even hyperscale companies can come in, which they largely will dominate, I think generally are dominating globally. But as they do that, it's important for all of us that are scaling up really rapidly, but also keep our eyes on consumers, because there's many ways to localize products and services well beyond just the movement of money cross-border, and even domestically, right? There are a lot of different ways. I remember in the U.S. at one point there were 15 or 20,000 banks just serving the U.S. There's a few less now, but nonetheless, there's not a one winner takes all, and they largely win because they're focused on the end user, and they're adopting the infrastructure that makes the most sense for them and their users.
You make a compelling case, and it is a sign of a good conversation when you come up with questions on stage that you didn't think about when you were preparing. So, Mohammed, as I'm reflecting, listening to you guys, not every jurisdiction, not every country has an infrastructure mindset, but the ones that do are thriving. The more I listen to you, the more it feels to me that it is, if not inevitable, then advisable. What are the learnings that you have seen that any other government entity that would like to encourage a similar public service infrastructure should think about? Putting you on the spot there, sorry.
Well, I think what we have seen is lead by example. So what we have seen is, from the government perspective, the government itself is actually adopting cloud. The government itself is adopting agile way of doing things. The government itself is adopting also the AI capabilities, and also investment into what we have seen as an AI sovereign center, be it the Humane, which was recently introduced. We've also seen a mega deal with NVIDIA, almost 16 or 18,000 GPUs. So what we've seen from the government is not just giving all the tools to the market to basically build and enjoy these kind of capabilities. But the government is also leading by example by adopting these tools kind of internally, which will make even the life much easier for the fintechs tomorrow, because technically they all will be on the same kind of ecosystem.
You paint a picture that is familiar to those living and working in this region, but as we've said again and again today, we have an incredible mix of folks at this event. Some are here because they live and work here, some are here because they already have business interests here, and some are here because they are planning their growth journeys, and they're really looking at this region going, this looks like the right place and the right moment. So as a last question, Majid, I will come to you. Particularly for those of our colleagues in the audience in the sessions this week who are looking to step into this region, to bring their businesses into this region, and may not have worked in a context where a vision drives public infrastructure. Do you have any advice? How should they go about understanding how it's different and what opportunities it presents?
Thank you for this question, Lida. Actually, when it comes to the access of information and data, the government has published many programs that has all the specs and the targets to be achieved. So it could be used as a gateway for whomever is planning to enter the kingdom and have a learning and pace on where to go or where to focus at, especially when it comes to infrastructure level. As well as I would spare a thank to Ministry of Investment, as they have their own specialized office, and they have all tools that would be open for whomever coming abroad or whomever is an investor and is keen to invest in financial infrastructure or financial services.
It feels like we have gone full circle with the conversations we've had today, because we started talking about the dialogue between the various parts of the ecosystem, the way we balance capability, talent, customer need, and stability. And we have gone full circle to talking about the component parts that make that come to life. And consumers may never actually care or know what goes under that seamless, fully protected experience, but that is as it should be. And there's a lot of hard work going on. I, for one, am excited to see what comes next, but for now, a huge thank you to my last panel of the day for me, and thank you all for being with us. Please put your hands together for my fantastic panel. Thank you all.
Thank you very much, Lida, for all your excellent moderation today, and thank you to all of the speakers on that last panel. Now, we are going to move to a slightly different topic. We are going to talk about VC. The fintech sector secured the largest volume of Saudi Arabia's venture capital funding during the first half of this year, with numbers and deal flow up more than 100% on last year, possibly 150% up, depending on what stats you look at. So we're going to find out more about what's driving this with our next two speakers for our session entitled The Role of Venture Capital in Shaping the Fintech Sector in Saudi Arabia. Please welcome His Excellency Dr. Nabil Koshak, CEO and board member at SVC, and Mukund Patnagar, partner and global lead financial institutions at Carney. Please welcome them to the stage.
Good afternoon, everyone. I hope you can hear me well. I realize that there was some confusion with the audio in the last round, but it seems to be working well.
Sure.
So let me welcome you all to this fireside chat with His Excellency Dr. Nabil Koshak. He's the CEO and board member for SVC, but he's had a tremendous career in academia, in entrepreneurship, and VC and angel investing. And for many of us, he is considered to be the godfather of the VC ecosystem in Saudi Arabia. So it's a pleasure to have you here.
Thank you.
We need to, we'll start the conversation. Let me take you and get your bird's eye view, Your Excellency, on how you see the VC ecosystem evolve in Saudi Arabia under Vision 2030.
Sure. First of all, thank you for that introduction. I believe that you are exaggerating a bit on my role in the ecosystem, but I think there are many pillars actually, part of the ecosystem building have evolved in Saudi Arabia. I would say with the government, how the fast pace of, I would say, debugging and updating the regulations when it comes to policies and policies and regulations to make sure it's friendly for two, I would say, key players who have a skin in the game in the ecosystem, which is the founders and the funders. And the more the ecosystem is friendly for both, the ecosystem is evolve and thrive. And then definitely one of the main pillars is the availability of risk capital, getting into this asset class. Everybody that was investing in the public market in Saudi Arabia and real estate. So moving into getting into venture investment and startups and angel investing wasn't easy, but I think there are many programs and activities that had unlocked that potential for the ecosystem to evolve. Another key pillar of the ecosystem, which is the core of the ecosystem, the transformation about how the founders from day one, they're building these companies with a high growth potential to go regionally and globally. And that's also a mindset among the entrepreneurs, which is actually where we are tapping into, are relying on the efforts of the entrepreneurs to launch and scale and grow these companies. But there are, I think, also some of the great investors that have evolved, getting into this asset class, starting with angel investors, early stage investors, as well as growth and later stage investors. So I think that's the movement of the ecosystem, the evolvement actually covers multiple pillars to make sure that we are having an ever thriving and growing ecosystem.
Oh, that's fantastic. And I think it's evident to us when we see how many fintechs that have come up and have become successful. I'll press a little bit on this topic about risk capital availability. And
sure.
You're here and you're having several meetings. What's the mood from both the domestic investors and the international investors? I believe there is a lot of enthusiasm and interest.
100%. But definitely, I think there are multiple programs that helps to unlock this risk capital. One of the key programs, I have to brag about SVC, which is our program, where we started actually by backing angel investors. So we started with the angel co-investment program to make sure that really we're backing startups when it comes to the pre-seed and seed stage. But then we moved into backing emerging VCs that are backing companies at Series C, sorry, the seed stage and also Series A. And then we moved into backing fund managers that are doing growth and later stage. And we continue to observe the ecosystem. The fund size was $750 million when we started. Now it becomes $3 billion. We almost committed $1.5 billion across all different strategies and stages and sectors to make sure that we are filling the gap when it comes to the availability of risk capital for entrepreneurs to find backers and investors to help them through the journey from the pre-seed stage all the way to pre-IPO. And we continue actually observing the ecosystem and make sure where we can go and add value to the ecosystem and make sure that we're filling the gap different stages. So when we started with the early stage and pre-seed, we moved into the growth. Lately, we invested like in pre-IPO funds to make sure that we'll pick these companies also to be listed in the public market. But then we actually found out that we need to enhance the pipeline and the funnel. So we need to also to do like accelerator VC funds and venture builder funds to make sure that it keeps the generation of quality investable deals. So VCs and angel investors would always find these deals that they can invest into. Definitely, there are other programs that also help in this ecosystem evolvement. I want to mention Jeddah Fund of Funds, part of the PIF. Sanabil, also a key player, part of the government program. But we created an army of GPs and fund managers
that are backing these companies. So since inception, we have backed 63 funds that are covering different stages. They invested now in more than 1,200 companies. And that's almost 2,000 plus participation in different rounds, because the same fund can go backing the same companies multiple times. And we're proud with many stories about how many of the startups you see now in the ecosystem, we either have been backing them as an angel co-investor. I can say Manafi' was part of our angel co-investment program. But now, then at different stages, multiple VCs that we backed, they were part of the investment rounds to help them to grow and scale the companies. Another interesting observation about the evolvement of the venture capital ecosystem in Saudi Arabia, where lately, especially the last 2 years, we saw Sequoia, General Catalyst, General Atlantic, TPG, Wellington, top-tier global investors investing in homegrown companies in Saudi Arabia. And that's actually transformational. I thought that maturity level will happen 2030. Luckily, we achieved that at an earlier stage. And that's helping these companies to think globally, to help them to grow and scale beyond a specific geography or sectors.
Right. No, that's phenomenal, right? I think this is an exciting time for all of us here. I want to, there is lots of good news, a lot of energy, enthusiasm in the ecosystem, but we're still maturing. We're still pushing hard to compete with the big boys in the VC ecosystem globally. What are the big challenges you see that are still there that need to be tackled at this point in time?
Because we are very close to the fund managers and the GPs, and also we listen also to entrepreneurs. And I always tell even some of the stakeholders and I would say the local authorities, champions, to make sure when you listen to founders and funders because they have a skin in the game.
Right.
And to make sure what these challenges are being addressed. As we are witnessing a fast pace and when it comes to regulations, definitely you will have challenges because the implementation of untested updates and regulations always challenging for entrepreneurs and some of the companies. But that I would say the nature of the natural progression of the ecosystem, that we were criticized years back that you are not fast enough when you are updating your policies to make it friendly for investors and entrepreneurs. And when we moved faster, they were criticized that this is too fast, where the founders and the investors can adopt, capture, and test, and make sure that this is a thriving and scaling environment for them. But I think this is a key challenge that I always hear from the entrepreneurs. Did we fix all the challenges? Of course, no. We're always keeping. One of my I'm also part of the advisory board of the Capital Market Authority. So we have really interesting discussions on how to really voice out the problems that are facing entrepreneurs as well facing investors to make sure that we can update the regulatory environment to make sure it's more appealing and friendly for entrepreneurs when they build their companies. But that applies also with the central bank, the sandbox, also the insurance authority. So I think the more I would say, listen to entrepreneurs as well as to the investors in getting into this asset class, the more actually we are helping the ecosystem to thrive and grow and scale.
No, thank you for that. SVC under your leadership has really been, in many ways, the catalyst for all of these developments. There are two areas that we hear a lot where there are some challenges that people face. I'll pick two. One is really about, from a founder perspective, their ability to scale and to scale rapidly.
Yes.
And the second one is possibly from a funder or investor point of view, the exit options and opportunities.
100%.
How is SVC tackling these two to really make the market much stronger as we go along?
As we just actually discussed that this, there is, I would say, a natural organic journey of this ecosystem has to happen. If we talk about the exits 5 years ago, nobody would care because you don't have a critical mass of companies reach a later stage and they want to exit. But as the ecosystem evolves, we need to be sure that we address the challenges facing companies now to be listed in the public market as one path for them to exit. And by the way, if you compare like the US, 80% of the companies, their exit is through M&A activities.
That's true.
So the mergers and acquisitions more than actually being listed in the public market. And the more we understand what are the challenges and showstoppers for these companies to make sure, and we negotiate with the government entities and regulators to make sure that we debug these challenges, the more we can see more exits. So that's actually keeps recycling the capital to be injected again and again in the ecosystem, so you have a thriving ecosystem. And luckily, actually, the last 3 years, we witnessed the first 3 venture-backed companies to be listed in the public market in Saudi Arabia for the first time. And then also, when it comes to the fintech sector specifically, 25% of our portfolio indirectly through the 63 funds, and as well as the direct investments program that we have, it reached now represents 25% of that portfolio. If you compare also the total deployed capital investing in fintech startups in Saudi Arabia represents 30%. So this is showing how the fintech actually sector is evolving and thriving among other sectors because for many reasons, but one of them is the regulators was fast enough to debug the ecosystem to help these companies to be built and scaling and growing. Another important thing is actually the growth of the total capital deployed. We moved from $60 million 2018 into 1.3 billion, and then last year was always a correction year. Then as we are speaking today, we reached a $1.3 billion of total deployed capital when it comes to tech startups in Saudi Arabia.
I think that deserves a clap.
Yeah. Thank you. Yeah, over the I would say the window of the first 5 years when the venture investment movement happened, it was a 21x multiplier when it comes to compare the total deployed capital invested in startups in Saudi Arabia. The importance about growth is not to think locally, but to think globally.
Yeah.
And that's very crucial. I like that this is when I talk to entrepreneurs on a daily basis, we have a discussion about their growth potential. I think now they're from day one, they want to build these companies that are not only potentially scaling locally, but also regionally and maybe globally. And that's very crucial because you need to have addressable market size to make sure that these companies can grow and scale. The other observation is actually regarding the scaling and growth of these companies is to find adequate growth-focused fund managers that they know how to crack these companies when they move from the early stage, seed and Series A, and they go into the growth. And this is where the last 2 years we invested in 17 growth stage focused funds, locally, regionally, and internationally, to make sure there is enough liquidity that is tapping into these companies that has a growth potential. So again, through the journey of funding for entrepreneurs from pre-seed to pre-IPO, to allow them to grow, you need to have, I would say, sophisticated, experienced fund manager, as well as local emerging fund managers to fulfill the gaps when it comes to funding across different stages and different sectors. And that's another important observation, part of the ecosystem evolvement.
Thank you for that. Shifting gears a little bit, there are many founders and potential founders in the audience today and in this event. You've seen firsthand, but also through your different board positions, your role as an investor, many, many startups. What advice will you give to the founders of today? How should they look at their businesses and plan their next 2 to 3 years ahead?
I think this is the toughest question, and I hate this question, by the way, just to be frank, because this question means that entrepreneurs, I think I learn from entrepreneurs more than entrepreneurs learn from investors because their hands actually engaged and involved in these companies, building these companies. Although definitely, I think coachability is one of the key criteria that will advise not only the founders, but the investors, sorry, not only the investors, but also the founders. Because if they are coachable and listen to the market, to customers, to investors, to stakeholders, all of the key participants in building a company from day one, that's very crucial, important thing that they have to always adopt to make sure that they're building it. Because through this journey, it's not an easy journey, it's a tough journey, and they have to be coachable in that term. Another thing, when it comes to funding specific, I won't say advice, but I would say maybe something that I witnessed. Many entrepreneurs would focus on building the company and not forget focusing about the funding needs that they have. So they work on the technology development. I always advise some of the entrepreneurs I meet, when you fundraise for a round, think about the future round. Because whatever you do for a funding round, the design, the economics, the valuation, everything related to the round, definitely it will affect your future rounds. Even the type of investors, local, international, sophisticated, experienced, because that's going to help you to continue funding your company, to help these companies to grow and scale. But these are not advices. These are observations that I saw in the ecosystem that I can share some insights.
No, I think the wise ones in the group would take that seriously, be coachable, and look ahead, especially on the funding round.
Exactly.
Dr. Nabil, if you look ahead, if we were sitting together again in 2030 and we were to look back, to today, in your view, what are the key trends or waves in the fintech and VC ecosystem we'll see from now till 2030, which will catapult Saudi Arabia into the future?
Sure. Maybe many things definitely would change, but maybe I will highlight on three things. One is definitely we will witness more, I would say, sector-focused funds, because still with everything that's happening in Saudi Arabia, we're still, when it comes to venture capital, we're scratching the surface. There's a lot that can be done when it comes to private capital getting into multiple sectors across stages and different stages. So I think there are a lot of untapped sectors with this economic, I would say, power of Saudi Arabia and the social growth and all the things happening. I think there are many untapped sectors that where I think I would see it happening already starting, but it's going to be more and more to see more sectorial-focused funds, so they can add value to the entrepreneurs when it comes to specific sectors. Another observation is the level of sophistication among investors. We're seeing it. It's a journey, part of the natural growth of the ecosystem to see more, I would say, sophisticated and disciplined investors. Focused and really helping and backing these companies to grow and scale. I think the third thing we would see, definitely we will see tremendous growth when it comes to the total capital being deployed in terms of startups. But maybe I think we will see growth in different stages and different sectors. I think the start was fintech to grow and thrive, but I think still other sectors that are untapped to evolve and thrive. And that's another thing that I think we would witness, that the increase of the total private capital. So we'll see more asset manager, more funds, more investments happening over the coming few years.
And more founders in fintech.
100%.
Last question. If you were to be a betting man, which area of the fintech world do you see the next unicorn coming in Saudi Arabia?
Oh, that's a tough question.
That's the last question, but And this is not a stock picking advice. This is an opinion.
I would say infrastructure and data related.
Amazing.
Yeah, infrastructure and data related is something that has still a great potential to build around that area and growth. I'm not gonna talk about these. I would say trendy wordings. But anything related to data and infrastructure, I think there is a huge room to build high growth companies in the coming future when it comes to fintech specifically.
Now, with that, thank you very much, Dr. Nabil.
Thank you.
Thank you for your contribution to the ecosystem, but also you leading SVC and taking Saudi to the future.
Thank you.
Thank you very much.
Thank you.
Thank you so much, Your Excellency and Mukund, for having that fascinating conversation. So you heard it here first. The prediction is the next unicorn in fintech will be in data and infrastructure here in the kingdom. And I think one statistic bears repeating, actually, from that last session. In terms of total deployed capital in tech startups in Saudi Arabia, the figure has gone from $60 million in 2018 to $1.3 billion today. Frankly, that's quite staggering. But we're going to stay with this theme. We're going to discuss what top fintech investors are looking for when they're assessing deals. To what extent does the decision come down to scalability, innovation, regulatory compliance, or strong financial fundamentals? And how do you recognize the hype versus the next real deal? Our next panel discussion on the new investment thesis for fintech in a risk-off world will feature Charles Henry Monchot, Chief Investment Officer and member of the Executive Committee at CIS Group, Mohammed Al-Mesheka, founder and general partner at Outliers VC, Walid Al-Bala, managing partner at Sukna Ventures, Mohammed Amin Mehra, managing partner and CEO, BIM Ventures, Adel Al-Atik, chief executive officer at Awaid Capital, and Margaret O'Connor, chairperson at Launch Africa Ventures. Let's make them all very welcome.
And thank you for staying with us. We'll start with a very short introduction. So my name is Margaret O'Connor. In addition to chairing the largest early-stage institutional seed VC in Africa, I serve on the board of a UK-listed investment trust that helps private companies go public. Klarna was our latest asset to do that. Charles?
Yeah, so my name is Charles Monchot. I'm a Chief Investment Officer at Bank Seas, which is a Swiss private bank boutique headquartered in Geneva. We run 25 billion in assets, mainly providing traditional wealth management services, but also we are one of the very first Swiss private bank to offer digital assets custody and trading solutions to our clients. And obviously, we are facing many challenges and opportunities, and this is why we partner from time to time with fintech.
Thank you.
Assalamu alaikum khair jami'an. Mohammed Mshagah. I'm the general partner at Outliers. We're an operator-led firm that focuses on being the first institutional capital in companies in the region. Pleasure to be here, and it's amazing to see companies that were ideas in 2019 and 2020, and now they're the largest booths here, and pleasure partying with all of them and seeing you guys all here.
Assalamu alaikum. Hello, everyone. My name is Walid Al-Bala. I'm the managing partner for Sukna Ventures. It's an early-stage VC based in Riyadh. We invest in early-stage companies across MENA. We're also part of Sukna Capital, which is an asset manager that specializes in investing in technology throughout its life cycle, whether it's equity or debt.
Assalamu alaikum jami'an. Akhukum Muhammad Amin Marah. I'm the managing partner and CEO of BIM Ventures. We are a venture studio based in Riyadh, building and investing in tech companies from very early stages, mainly focused on fintech and prop tech sectors, but we've grown into building and investing in different sectors. And today I'm also the vice chairman of BIM Capital that's completing the cycle of growth after early stage companies.
Assalamu alaikum, مساكم الله بالخير جميعا. My name is Adil Atiq. I'm the co-founder and CEO of Awad. Simply the answer to the last session question, what's the next Saudi fintech unicorn? That is Awad. Awad is operating in as a wealth tech, focusing on retail investors, basically offering a full-fledged solution to retail investors. Thank you.
Adele, so you were saying about backing the next unicorn. I'm curious for all the panelists, to what extent do you also look for camels or gazelles, so not just unicorns, if whoever wants to grab that one?
I mean,
go for it.
At BIM Ventures, we've been building for camels from day one. We look at companies that de-risk, that are built around compliance and built around profitability and sound business fundamentals and profitability fundamentals from the beginning to reach those KPIs within 2 to 3 years. So we've always been looking at that. If we hit a unicorn on the way, we don't mind, but especially when you work in very risky and very regulated sectors, you need to keep that in mind.
And if we could spend another moment on the regulatory environment here in the kingdom, to what extent do you feel like the rules are clear for your current portfolio, and to what extent do you feel like there's room for regulatory engagement to influence the playing field for future technologies?
Well, for us, I think when you talk about innovation, the relationship between policies, regulation, and innovation is always not clear-cut. Innovation tends to be a step or two ahead of the regulator. And in the last few years, we've seen a big shift in terms of the mindset of the regulator in terms of how they want to allow innovation to proceed without waiting for permission. And we started out in, for example, in the fintech area with the sandbox concept, and that allowed a lot of new startups to reach the market before the regulation was clear. And now the discussion is what goes beyond the sandbox. How can we allow more flexibility in terms of innovating in the fintech area and creating companies that can not just serve the local market but also go global?
Yep.
Maybe, Margaret, to just comment in your two questions. The first one, I think this weird obsession about the word unicorn is so funny. Before 2014, the word unicorn did not exist. It was anchored by a single VC in the US, and it was like a nice research. But if you look at it, fundamentally what you're looking for here is economic value creation. If a company generates $100 million in revenue, that's a unicorn or not, I don't care, right? Like, the point is it really pushing the boundary of what people want and creating so much advantage? And in regulation, I think it's also very interesting. I talked to a lot of friends from the US, and they were like, oh my God, like the US market now is highly regulated. And I'm like, guys, regulation can be one of your most competitive advantage. When you build an ecosystem that is not the Wild West, and there's clear ways to create value, not you can build for like 5 years and they get slapped in the face and a company get killed. The thing about regulation in Saudi and in the region is it can be one of your strongest modes of building a business. And someone who's been an ex-regulator and now kind of like on the investment side, it's always interesting in how you think about it. And the example that I use is you can complain as much as you want about Apple iOS, but it created multi-billion-dollar businesses, and it is the regulator of that business. It's the operating system. So if you want to work with the operating system, understand what they want, understand their APIs, and build something so much valuable that you can create significantly better systems in the future.
Yep. And Charles, would you reflect when you were speaking earlier that you've been in the region for about 10 years now? Would you maybe comment about how you see the regulatory maturity progressing over this time and your hopes for the near future?
Well, first, maybe one comment related to the, let's say, the title of the panel, because we were supposed to talk about investing in a risk-off context, and we start with talking about finding the new unicorn, which I think, tells a lot, because at the end, everyone thinks, the world is complicated, we are risk-off. Actually, we can see that there is still ample liquidity, ample capital to be invested, and in the same time, and here I'm not just talking as an investor, I'm also talking as someone working in the traditional banks looking for solutions. We live with the digital obsession. We need to be very good in technology. And many traditional banks, they are not equipped to do so. And this is how we need to partner with fintech. I think that has been the key words of today's panel discussions. Traditional banks, incumbents, they need to find the right partner to equip themselves with the right value proposal for clients, also to gain in terms of efficiency. So obviously regulation is maybe complicated, the big picture, but it also enables for those who are able to have the right, let's say, product and services in place with the right, let's say, compliance to build their economic moat. So we can see that all of these, let's say, different pieces of the puzzle are getting together. So you need a strong client value proposal. You need to work with, let's say, newcomers, and all of this in a regulated way. And if you're able to assemble everything, then you really, create this competitive edge compared to competitors.
And Mohammed from BIM, we were talking earlier about how do you help early stage startups partner effectively with bigger organizations. Could you share some of your insights about how you facilitate that?
Sure. So the venture builder model is built to de-risk at its core. As a venture studio, we have an accumulated number of startups, so you accumulate a lot of experiences. You know how to deal with the regulator you've worked with, especially if you're working in fintech, so you work with the Capital Market Authority, with the central bank, if you're insurtech, with the insurance authority. So you start knowing the insides and outsides of what to do and what not to do. There's a trust that's being built. And then any new idea that you validate and then you start building, you build keeping regulation in mind so that you don't fall into the mistakes that first-time founders would get into if they weren't working with a venture studio. And this is in addition to the synergies with the rest of the portfolio, with the ecosystem of shared services, with the access to the network of investors, and many of the those other advantages. So instead of having a co-founder as an individual or a few co-founders, you will have a whole institution of builders, funders, financiers, being part of that, and it helps a lot in de-risking any new ventures that we go into.
And staying with the partner with bigger established institutions, wondering if any of the panelists can talk about their experience ensuring that those partners don't get in bed with the startup for the sake of shutting down that business, eradicating competition. Can any of you share your stories about that?
Sure. It really depends on the type of partners, or sorry, the type of founders that you're talking about. And I think what Mohammed was talking about is actually changing the way founders work and bringing their own founders and who actually are experienced at building businesses, experienced at their sectors. They have the expertise as the sector. I think the intervention of partner happens when the partners do not trust the founders. It's all about trust. If you invest with a founder that you trust, that they have the experience in the business, I think partners will not be as much as involved in the business. And to be honest with you, partner involvement is something that we hear every VC brag about or market themselves as helping entrepreneurs. It's yet to be proven, at least in Saudi, that the partners actually helps founders across different investment stages. So we've seen some help on taking pre-seed to seed. We've seen help some scale up, but we haven't seen a lot of really good scale up stories that VC have had a high share or high impact in. Does that mean we won't see? I think we will see a lot of that. But I think it's the whole the industry is still nascent. Even not only the founders that they're probably this is their first company that they started with. Most of the VC this is their first fund or the second fund.
Right.
So it's just normal. I think it will come with time and efforts and success and failure stories that will happen anyway.
And Mohammed, could you add to that? I'm particularly thinking about the exit that Outliers had in terms of a successful acquisition, maybe talking about the trust networks and the role of the board in helping the startup scale up and become ripe for acquisition or an IPO.
No, 100%. And just in comments that Adil mentioned on helping. So it's so funny when you read throughout history and you look at Sequoia on their like fund 2 or 3, and Don Valentine talking about how he helped the founder of Atari. And like the way that he helped the founder of Atari is like, let me dress you in a nice suit, put a tie, walk with you in the meeting, make it happen. And then you start to see that success. We're in a market that is so different than Silicon Valley, and it's a very positive thing.
Sure.
The support that you need sometimes is just being in the meeting. It's just having this conversation. It's actually just asking the right question. Because if you're building for the first time, there are just so many unknown unknowns. And if you have the right thinking partner and the thought partner in asking those questions, sometimes it goes such a long way in saving you like wasting $3 million of like an experiment that doesn't make sense. And it's so funny, like, you know, some of the companies here that have like very large booths, you go back to 2020, what was top of mind is like, can we get this commercial partner? And now, like some of those commercial partners said yes, some said no, and those companies became so good that those partners now are chasing them and calling and saying, please, can you tell them that they work with us? So we're really driving that frontier of the ecosystem. We're so early, as Adil said, like we've only, like so many funds are like in fund 2, fund 3, but be so good that they can't ignore you and create so much value that they either work with you or you end up like being on the same footing with them in the public market, and that's what we're seeing companies going. And that will incentivize more of this virtuous cycle of more companies are being so good, pushing the boundary, and then everyone is like, they cannot ignore them. They have to work with them. And you see that in like 7 decades of venture capital in the US, those companies are driving the public market. The Max 7s are all venture backed. And that's kind of like where everyone is excited about the future of what's happening in the region.
And are there some rules of the road for first-time founders about how to ensure that they do the right thing with a mature partner?
Look, I don't think there's a definition of what the right thing is. It's the right thing at the right time with the right people.
With the right people.
It's all about what are the right questions. How do you ask the right question and help kind of like decompose those very complex problems, right? Like, it is not a science of building a company. Like, you can't take a playbook and say, that's how you build a company, right? It's like, what are the different questions that you would ask? The more smart questions and minds around the table asking the right question, the better the quality of the decision, the better the outcome. And it's not about like, let me give you the playbook that you can basically run with it.
And Walid, what are some of the investment opportunities that you're most excited about looking 2 to 3 years out?
Well, we're very bullish in terms of what's happening here in terms of the infrastructure that is being built for the digital economy. The regulatory mindset that would allow that as well. You probably heard about, for example, the Global Data Hub or Global AI Hub regulation that allows data sovereignty for companies outside of Saudi to utilize the cloud infrastructure here without jeopardizing their data confidentiality and sovereignty. So Saudi Arabia is thinking today is global. It's not just about the local market. How can we integrate with the rest of the world economy, especially with everything happening, around us and the deglobalization that is happening? Saudi sees an opportunity to be a neutral place for builders who want to come in. And that brings its own challenges because each ecosystem needs to go through the learning curve. So mistakes will happen. They will take place. How do we deal with those mistakes? Bubbles will happen. That's the nature of new technology. Anything that is disruptive will naturally, be a place where lots of speculation happen. So how do you deal with that? And this is a challenge for regulators more than it is for us. We seek risk. Regulators seek removing risk as much as possible. So there's this delicate balance between the two. And for this reason, for example, we as VCs, we created an association called the VCP Association, where we created this platform where we can engage with different stakeholders, including the stakeholders, the regulators and the policy decision makers, in terms of bringing those points of view more aligned to each other, and thinking about how do we bring in things like deep tech, for example. Deep tech has potentially a seismic impact, but also a high failure rate. How do we deal with that? How do we integrate the outcome from startups with what the government is working in terms of the mega visions that they have, even though knowing that it also comes with its own set of risk as well? How do we allow startups that are building in Saudi Arabia? For example, we're investors in a company called Classera. It's an edtech company, but they're also probably one of the biggest fintech companies in our portfolio, because one of the services they render to schools is a payment gateway, a wallet, buy now, pay later, and things like that that integrate with these systems, existing platforms, and allow the schools to become more independent in terms of the value proposition they want to give their own students and the parents. And now today they operate across 40 countries around the world. Just a few months ago they got into Thailand, for example. So what kind of responsibilities does the government have in terms when they help Classera enter a new market? What kind of engagement model there needs to be? And these are the discussions we want to see happening more and more to allow Saudi Arabia to become a hub, not just for Saudi founders, but any high-quality builders who want to make Saudi a home for them, to build something that can go global.
Thank you. If we could segue into wealth tech and wealth management. So Adel, can you maybe talk about the balance between profitability and growth in that segment?
Sure. I think we're in Saudi Arabia, we're very blessed. Normally you would actually trade off between growth and profitability. I think in Saudi it's a bit different. We're given the demographics that we live in, given the transformation and the vision that we live in Saudi. I think it's I can tell you from my personal experience, we're growing double digits monthly, and we're almost at profitability within a very short period of time. So I don't think we've traded off profitability for growth or vice versa. I think Saudi is at least the younger generation are underserved. If you take the combination of a younger society with a highly educated and high income, you would, these are recipes for a high banking or high investing universe. It actually wasn't. So the space is, at least the retail segment is very hungry. So you can actually achieve growth and profitability because those retail clients had never had a chance to invest, had never had a chance to be just like the wealthy investor and the institutional clients that most of the incumbent players were focusing on. Retail segments were not focused on for a long period of time, which have accumulated an unbanked gap of high number of younger segments with a great income to invest in. So at least in our world, profitability is achieved while growth is there.
And Charles, with Geneva as your primary home now and Switzerland being the home of wealth management, if you can maybe compare and contrast how you see technology being used in wealth management in Switzerland versus the GCC.
No, first an observation is that, and you can see it here in this place, is that while Saudi opportunity is absolutely tremendous, because Saudi is at crossroads between the East and the West, because Saudi is at crossroad between tradition and the future, so you can see that there is just a massive opportunity. Now, when it comes to investing from a global perspective, I still believe that the main opportunities currently are with pick and shovels infrastructure. We can also see this in the public market, and we saw what happened to Oracle last week. It's really about first building infrastructure instead of looking at fancy consumer applications. I still believe, and to relate to the title of the discussion, risk-off, that there is a very specific attention given to sustainable profitability, to valuations. Is not growth at all price. You know, investors want to see some, let's say, sustainable revenues, recurring profit coming. But you know, generally speaking, the set of opportunities is massive, including in this region.
And at Outliers, are you seeing a significant shift in valuations in the current rounds that are coming through?
Yeah, no, like I think I just want to touch on wealth first and then go here. So like in wealth tech, I think what have happened is an explosion. When there's an explosion of you know, opportunity and kind of like people are overly cashed, there's an explosion of products. And then what happens, investment products.
Yeah.
And then what happens is you end up in this universe of like product overload. So like every investment looks and makes sense. And I think a big gap, and you know, where we're very kind of like lucky to partner with a company in our portfolio is to really look at like not every, again, just like there's not right or wrong, there's no right or wrong investment, like in terms of return, because history is not the predictor of the future. You don't know if they're going to continue to do well. You don't even know what's your plan. Why am I investing? Do I want to grow? To what wealth? And some of those questions are still unanswered for a lot of people. And you started to see companies that are now tackling problems like that. And that's kind of like really, really exciting to what we're seeing. But also like going back to the whole investment, the world have, you know, high interest rates definitely changed how people look at things. But I think amazing companies will continue to be amazing companies. And there are companies that we work with that people are saying, like, you know, name your price, we just want to buy. And there are companies that are like trying to figure it out. So obsession around pricing is changing, and there are like external inputs that feed into it. But the most amazing founders are always saying, like, I'm going to build now to what makes sense. I'm going to optimize to how I think about the capitalization of my company, and I will take all variables into account, and I'm kind of like, you know, think about what's the right pricing. And it's, you know, what you would give a price to Charles is probably different than what I would give to Elite, because I'm expecting different values and different things from them. So really it's changing, but I think fundamentally the conversations that were driving those best decisions.
Yep. What you could achieve in liquidity. 100%. So I just wanted to finish the panel with a question about looking to the future, right? If we're thinking about 2035 and something that we might regret not having spoken out about today, about leaning into risk or opportunity that is not yet front of mind in the Saudi ecosystem. Mohammed, you want to try that?
Of course. So my prediction is that the line between fintech companies and tech companies is completely going to blur out, or almost completely going to be blurred out. Embedded finance has to become part of any tech ecosystem, and that's where the opportunity lies. I mean, in the past years, we were excited about BNPLs and wallets being integrated in non-financial platforms. But now the phase 2 is about more than that. Whether you talk about SME financing or consumer financing or fintech products that serve both those types of customers, embedded finance has to be part of it. I'll give you an illustrative example. I think we ran out of time, but imagine in PropTech a real estate listing platform, where not only are you getting mortgage rates and mortgage offers, but you're also getting a bridge financing to sell your old house while you're buying the new house, and then a wealth manager or wealth management platform like Awad telling you where to invest the proceeds of those investments, and then getting your house and your furniture insured all in one place rather than one-off products. So you're going to the customer at the point of need rather than waiting for them to find you at every different stage.
Stay tuned. Thank you for your time. Look forward to engaging with the audience going forward.
Thank you.
Thank you.
Oh, can I gently guide you off the stage? Thank you so much to all of the panelists and for the moderation. We are on to our final session of the day. Thank you for keeping us company. And it's not a session to be mixed. It is on the next generation of consumer finance. What will truly differentiate the next wave of digital banks? And we will be hearing from Hossam Arab, the co-founder and CEO of Tabi, Dr. Saeeda Jafar, Senior Vice President and Group Country Manager, GCC at Visa, and Arjun Veer Singh, Partner and Global Head of FinTech at Arthur D. Little. So let's make some noise for our final panel of the day.
Saeeda, you get the middle chair, Saeeda.
Saeeda.
You know, doctors always get the attention, right? So, should I say good evening to everybody, and thank you for staying back. I guess we stand between, plus I guess you guys and an evening ahead of you. My name is Arjun Veer Singh. I work for a consulting firm called Arthur D. Little. And I try and run fintech for them. Don't do a great job with it, but I'm on stage quite often, and thanks for Money 2020 to have me here. But more importantly, can I ask the two guests to introduce themselves? Dr. Saeeda.
My name is Dr. Saeeda Jafar, and I am, as was said, the Senior Vice President for GCC with Visa.
And I'm Hossam Arab. I'm the co-founder and CEO of Tabi.
Okay, so you know, it's not a coincidence, but we have the world's largest fintech by valuation. That's Visa. We have the region's largest fintech by valuation, which is Tabi. I've had a close enough relationship with Visa. I'm not old enough with Tabi. I'm not old enough to have had a long-term relationship with Visa. But Hossam, let me start with you first, right? And we've had this conversation a few times. BNPL started, Affirm, Klarna, you know, some of the early Afterpay, some of the Zip, and so on and so forth. But you guys were at the vanguard of starting BNPL in the region, right? In simple terms, how is BNPL evolving? Is it 2.0? Is it 17.0? Right, wherever we are in the journey, what has fundamentally moved in terms of BNPL? How is it being received by the customers? How are the merchants seeing it differently?
Yeah, so I think at the core of it, BNPL remains a simple checkout option for consumers on merchant websites, right? That's what it was and is at the core. However, what many companies, including ourselves, have done is evolved as businesses and as consumer offerings beyond just being a simple checkout option. And so what that looks like for us is really moving from a single one-off transaction for a consumer, right, that I do on my discretionary spend whenever the choice is available, to trying to embed ourselves into the customer's everyday journey and being part of their money journey. And so for us today, that has moved from being really a single transaction at checkout, to being embedded in their everyday lives. And one of the ways that we've done that in another market, in the UAE, for example, is we have a card that is available for consumers across all their spend, not just for their discretionary spend at the point of checkout. And so what becomes quite important for us, and one of the things that we track quite closely, is, you know, a nice vanity metric in the past was GMV, right? We look at GMV, and yes, GMV imputes size. Today, what we're much more interested in tracking is just the consumer's share of wallet. And the larger that is, the more that implies that we've really been able to embed ourselves in the everyday lives of the customer.
No, and can I stay with you? Because there was a very interesting report you guys published, right? Which in a way blew my mind, because I think what the numbers shed is that rather than people using BNPL, or specifically Tabby in this case, for discretionary spend, they were actually using it for their day-to-day spend, right? And what was the reason? What was the behaviors behind it? Was it a particular segment?
Yeah, so I think part of it is our offering, but part of it is just the consumer mindset has changed from, I need this product in order to make a relatively large transaction one time, to the point where it is today, where this is just a very convenient way of making a purchase. And therefore, I'm going to use it for everything that I spend my money on. And that is a journey that, you know, obviously we've helped the customer transition towards, but as well the customers themselves, I think due to habit and behavior, have shifted accordingly as well.
Okay. Saida, if I may call you that, right? You guys have been around longer than most, I guess, fintechs. I guess the word fintech wasn't even invented when you guys started off, right? It's a very interesting convergence that we are seeing over the last sort of 5 to 7 years, right? We started seeing initially the convergence between payments or different types of payments. Then, you know, lending became a part of it, whether it was liquidity or funding related. We're now starting to see greater embedding of lifestyle, right? Whether it's loyalty solutions or even customer journeys, right? So from your perspective, right, as a global network, how do you sort of stay ahead of the game? How do you continue to sort of differentiate yourself and not just become, if I may say, providers of pipes, although that's a very key part in the whole activity?
That's a very good question. Let me maybe ask a question before I answer the question.
Sure.
How many people in this room today, right now, have Visa with you?
Every Tabby employee, by the way, as well.
Right there is your answer. How is it that Visa is able to do what we do? Visa, at its core, absolutely is a technology company with data. We are, as you rightly said, the world's first fintech, the world's original fintech. And what we are providing is we are working with our partners, issuers, BNPL players, you name it. We work with our partners to make sure we help create and continue the ecosystem so that cardholders like yourself always have the ability to make the transaction. And at the same time, merchants, on the other hand, always have the ability to accept that transaction. We continue day in and day out. Now, we understand that the infrastructure is one part of it. You have to build more services on top of it. When I think of Visa, I think of security. I would imagine you do too, because you trust your Visa credential. I think of innovation, because with some of our most innovative partners, we are able to provide the most innovative solutions. I think of experiences, such as benefits. There's so many things. And every single day we wake up, we use that data and we try to create a better product, a newer product, such that it serves our cardholders, our partners, and our merchants, all in one.
Fair enough. I buy that. Let me take a retailer's perspective. I cut my teeth on fintech from a retailer's perspective. That young gentleman there knows we spend many hours discussing customer journeys. So, you know, when we as retailers, talking to either payment players, you know, we had a very successful co-brand, or at least my previous employees had a very successful co-brand with you, a good relationship with Tabby. We would typically sort of look at world from 3 unit economics, right? I always looked at net new customers, average transaction flow, yes, repeat customer, but actually cost to sale, right? As we go forward, and Hussam, I'll start with you. Are the retailers looking at consumer finance at the point of sale any differently? Are there other metrics which have now come up the pecking order, which are now driving your strategy to look at differently, or is it still the same?
I think it largely depends on the maturity of the retailer. I mean, for many retailers, buy now, pay later is just table stakes. I need to have it because my customers expect it. However, the more mature retailers, the retailers that have worked with buy now, pay later for a longer period of time, now start to look at things with a bit more detail, right? With a lot more analysis involved. And so they need to ensure that at the core it is profitable, net profitable for them, right? And what they will look at there is a very simple A/B test of, I have a set of customers that see buy now, pay later, another set of customers that don't. How do the unit economics look like for both? And for many of the retailers that we work with, that's exactly the type of work that we do together, right? We need to ensure that at the end of the day, this is a net accretive transaction for them, or net accretive product for them, from a unit economic standpoint. They'll look at net new customers, but they'll compare that to other ways in which they can acquire net new customers, right? But at the end of the day, it is really the lifetime value of this customer needs to be bigger with buy now, pay later than it is without, because we are more expensive. Naturally, we're going to be more expensive than any typical credit card, than the debit cards, and so for these merchants, it is becoming much more important that this is an accretive transaction in the long term.
Say that your views on that.
Look, I think that makes a lot of sense, right? And I think there are, if I just piggyback on that, there is an element of value. And there are many different ways in which value can be created. There's one element around getting the customer, completing the transaction. There's a second element around keeping that customer coming back. And there's a third element around reducing the leakage, reducing the fraud, making sure the transactions are safe and secure. And I think the world that we live in, you have to hit all three. Yes, we continue to look at the growth, we continue to look at new customers, but we also continue to look at how do we make things more secure. We were just talking about this outside. There is a lot of fraud in a lot of different places. All the good stuff that we talk about when it comes to AI and Gen AI, the bad actors have that too. You know, there's a common statistic that I'm sure many of you know. If fraud was a nation, any idea where it would be in the global order? Third.
Yeah, it's $1 trillion recognized number.
Yes.
The real number could be nearly twice as much.
Exactly,
Yeah.
exactly. So for us, it's about hitting all those cylinders. And one example of where we're going very, very deep is, for example, in tokenization. That's an area, our part of the world is global. Global high, global first in terms of tokenization. The GCC is at 74% tokenization, higher than any other region in the world. Yet, we continue to push. We piloted in Qatar, we actually showcased for the first time globally our solution which combines facial recognition with passkeys and click to pay on your phone, which basically means on your phone, you upload the card using facial recognition, you use it. Sounds very similar to other forms of tokenization we're used to. The advantage is the banks, the issuers, the partners own that, as opposed to anybody else owning it. So there are a lot of different things that are happening, and I think we will, again, continue to bring new innovative solutions that are, I'll use your word, accretive.
Okay, so I'm gonna labor on this a little bit. We don't talk enough about fraud. We don't talk about all of that. I think we should, as leaders, as commentators, as people, because I think we get taken away with all the hurrah moments, but fraud is a whole issue. Here's a point of view. Please disagree, right? There is this obsessiveness with frictionless, right? We want to make everything frictionless, right? Shouldn't it more be about less friction? Because let's be honest, a little bit of friction is actually not that unhealthy, right? If we get to the level of frictionless that we obsess ourselves with in a world where deep fakes, identity thefts, the ability for these scamsters to move at light years, because at the end of the day, they're focused at a very, very little limited space and they excel on that. What's your view on this? Are retailers actually understanding and appreciating that there is a lot of financial risk that the likes of Visa and Tabby are carrying, right, to provide the retailers the less friction experience because most of the liability is not yet shifting towards them, right? Where do you think we sit in terms of that striking that balance as a region?
So I think the retailers are aware that as a credit business, this is do or die, right? You cannot remove friction completely from the equation because we've seen it time and time again, especially in a credit business. If you are completely frictionless, you actually lose your pants, right? You can easily wipe out an entire business through fraud, and we've seen this in other markets. We've seen attempted frauds. The fraudsters are this is their livelihood, right? They spend all day long looking for these loopholes, and it's down to us to try to identify them and close them, and that will come at the cost of friction. So no, it's absolutely essential. I think it's an easier sell for a credit business to go back to a retailer and say, listen, the cost of doing business with someone like us that is providing credit to your consumers is going to have to be at the behest of slightly more friction. Now, it is a balancing act that we need to maintain. At the same time, we're also looking very closely at affordability. We want to make sure that the borrowers are not going beyond their means, because yes, in the short term that looks great because we're showing healthier growth, but at some point it catches up with us before, right after it catches up with the customer. So it is a balancing act, balancing fraud on one end, balancing affordability on the other, and all of these bring additional friction to the checkout journey.
Yeah, I would add to that. I would say it's not about eliminating friction, it's about optimizing friction. And data is our friend when it comes to that. And it helps that we look at 350 billion transactions a year. Because if you use that data, and if you take the strength of compute that exists today, you can actually create some pretty impressive models that can help you optimize that friction to say, all right, this looks reasonable, this looks like something that can go through. Again, if I go back to what we talked about with click-to-pay using biometrics, what that has done is a game changer. Because traditional fraud models are probabilistic. That is deterministic. It's not the likelihood of whether this is urgent or not. No, this is or is not. It's a very big change. So I think the technology will advance, data and the use of data will advance, the tools that we use will grow, but this will continue to be a problem. It's not something that's going to be gone, and we will continue to have to be vigilant about how we optimize fraud.
Yeah, no, I do. I personally think, one of the trends which we should all accept is that we're living through scamdemic, right? It might not live in this part of the world at that level of scale, but, we are deep in there. The more numbers I read, it scares the living daylights. Let's switch gears for a little bit. Let's talk a little about localization, right? In my experience, this was quite hilarious, is when the BNPL explosion was happening or the payments explosion was happening, there was a lot of sort of, pick an idea, just drop into the local market and it should work like magic, and voila, it did not, right? So here's a simple question, right? How have you localized Tabby? Obviously, Tabby was born here, so it had the pedigree of localization. I think it was a bigger challenge for Visa for potentially to localize. But I'll pose the question one go. So how have you sort of stayed true to the whole local or locale sort of in your mindset? And then if there's one thing you guys believe that you guys did, obviously in your short history and your very long history, right, which you believe landed up paying dividends far greater than ever imagined on the localization angle. Sida, why don't you go first this time around?
Sure. So in terms of localization, that's absolutely top of mind for us. And in fact, we announced today that we have localized our payment gateway for Saudi.
All right.
And it's the first one outside of the UK that's done. So yes, it's fantastic. It took a long time to get there, but it's done. And we are so incredibly proud for getting it live in the kingdom on way. So that's the one example we've done. I would say the one thing, a decision that has had a very long-lasting impact is a while ago, many, many years ago, well before my time, I think Visa made the decision to work very closely with Sama when Mada was being launched.
Yep.
And we looked at Mada as something that was critical infrastructure in the kingdom, as something that we could partner on, and as something where we could truly help drive the digital payments revolution. And I think that one decision to look at it as a partnership and as something that is going to be accretive to both of us has been the defining cornerstone of our relationship with the kingdom. It has been incredible, and it has paved a way for years and years of incredible partnership where we are able to consistently bring in innovation into the kingdom, and we're able to really do things and take them to the next level.
Hussam, can I be a little unfair? I'm going to just give a bit of a twist to the same question for you. Let's talk localization between Saudi and UAE, and how are the nuances playing out?
So maybe just on your prior question, one of the things, obviously, we saw buy now, pay later do varyingly well in some markets versus others, right? In some markets it's done decently well, in others less so. But I don't think we've seen a market globally where buy now, pay later has seen as much growth and success as we have in Saudi and the UAE, right? And I think, when we initially were thinking about the relevance of this solution to this market, it was largely driven by the peculiarities of this region. Two things. One being cash penetration being at one of the highest levels globally, right? I'm a retailer myself. In a past life, 70% of our business was cash on delivery. The second piece was credit card penetration. Credit penetration in this market is also surprisingly low, right? We look at sub 20% credit card penetration in Saudi, sub 40% in the UAE. And so there was this latent demand that was unmet by the banks, and the banks were happy doing what they were doing and left a large portion of the population just underserved because they could serve others a lot more profitably. And so understanding these two nuances allowed for us to scale buy now, pay later in a way that many of our peers globally did not see, right? It is a highly relevant product for a market like ours. Now, differences between Saudi and the UAE, I would say honestly very little, right? Slightly different numbers as I mentioned earlier, but at the whole, we still see a vastly underserved credit market in this part of the world, and that's the opportunity that we want to go after, right? We were very religious around ensuring access to credit to a set of customers that just simply don't have access otherwise, and that's the role that we want to play in the markets that we operate in.
That's fascinating, right? Because people from outside, we look at UAE, a heavily carded market, a very high credit card penetration. You look at Saudi, yes, there's tremendous electronic payment adoption, debit cards, other forms of payments were low on the credit card, but it's interesting to see you're actually seeing that. I'm out of time. Last question, both of you. A couple of years from now, how do you see consumer finance finding itself more embedded in commerce?
So I would love to see this as completely in sync with Vision 2030. I'd love to see this as digital, innovative, inclusive, as well as secure.
Yeah, going back to the initial point is just really around us being everywhere that the customer is spending their money. Initially it was online, then it went offline, and then it became just a part of their everyday spend, and that's where we'd like to see it going.
All right. Thank you both. Ladies and gentlemen, a hand for Dr. Saeeda Jaffer and Hussam Arab. Hussam has made me into a unicorn founder, and I don't know what to say about Hussam. We perfectly got ourselves wrong on where we should have sat. That's all right. In any case, thank you, everybody.
Thank you.
Thank you very much to our final speakers of the day. And that concludes day one of Money 2020 Middle East. Thanks to you all for being here with us today. Tomorrow we have a full day of more enlightening sessions. We'll be discussing agentic AI, digital identity, and scaling global payments, and much, much more. We will see you tomorrow. Have a great evening. Thank you.